Ladies and gentlemen, please silence all mobile devices. The program is about to begin. Ladies and gentlemen, please take your seats. The program is about to begin.
TechCrunch Disrupt.
Ladies and gentlemen, please welcome TechCrunch Editor-in-Chief Matthew Panzarino.
Good morning. I'm not sure if this mic is on, but I'm going to talk loud enough anyway. There we are. Okay, so today we've got a great show for you. Yesterday was amazing. Thank you all for showing up yesterday and being such a great audience for our host of speakers here and on the Extra Crunch stage. Both stages were packed, which is always gratifying to see. We put a lot of hard work into programming these shows, and it's really, really great when you show up and participate, do Q&A on our Q&A stages, talk and listen on the Extra Crunch stage, so it's fantastic. Thank you. Today we've got a wonderful show ahead of us. Sam Altman and Greg Brockman from OpenAI will be here to talk. Jeanette Malmfra, the Assistant Director of Cybersecurity for DHS, will be here to talk. Every single startup in this universe should be thinking about cybersecurity, and she's going to help us to think about that a little bit better. Shanlin Ma, the CEO of Zola, will be here, which is going to be a fantastic discussion. Aisha Evans, the CEO of Zook, and Jennifer Granholm, the former governor of Michigan. We're going to talk about autonomous driving for us and the future of that. And then later on, I'll be chatting with Mark Benioff, the CEO of Salesforce, which is always good. Mark is always a great conversationalist, so it should be fun. Thank you very much. We'll get right into the show. Have a good one.
Ladies and gentlemen, please welcome TechCrunch Managing Editor and Disrupt MC, Jordan Crook.
What's up, wildlings? How we doing? Wildlings from Game of Thrones. You guys seen Game of Thrones? I can't get you excited with Game of Thrones. Yeah, it's because of the finale. We're going to talk about that later. We have an amazing day, as Panzer said, so lots and lots to soak up today. As per usual, a couple housekeeping notes. We're using the hashtag TCDisrupt. Nothing changed from yesterday, so you can rely on that. We will also have Otter.ai as our transcription partner, so if you want to check out transcripts from anything that happens on the main stage, check that out. Should be pretty simple to navigate to. And with that, I think we should just get started. Our next guest sold his company for $3 billion. Who wants to sell a company for $3 billion? Yeah, me too. Let me know if you guys have any good ideas. We could partner. Okay, please welcome to the stage the Chief Development Officer of Digital Surgery Group at Johnson & Johnson, Fred Moll, and the founding founder and managing general partner at Mithril Capital Management, Ajay Gopal-Royan, and your moderator, John Schieber.
Lively than that, y'all, right? We're talking about billion-dollar exits here. Let's give these gentlemen a round of applause. That's a nice hefty sum. Yeah. Well, it's good stuff, and I really am excited to talk both about the exit and, Fred, about your new role at Mithril, or what you're going to be doing with the firm. But there was some breaking news that happened last night that we reported at TechCrunch around some allegations involving Mithril and a former employee, and I think we need to address these because they get into, I think, some fairly significant issues around capital management, how much faith you can have in employees, how you need to vet things appropriately, and some of the significant allegations around Mithril itself. So last month, Recode reported that the FBI was actually investigating Mithril. And today we reported that you, Ajay, filed an injunction against a former employee. What's going on over there?
Well, it's as much of a surprise to us as anybody else. We were blindsided by everything that's been happening over the last 6 months, and I wouldn't wish the experience upon anyone, frankly. So the short version is that there have been a series of falsehoods, both reported about us and conveyed about us in a set of anonymous communications that was sent to various people who are business partners and others in our community. And at some point, this had to stop. And we took the time to gather the facts. The short of it is we have stated all of the facts that we have gathered in the suit that was filed yesterday, which is really a complaint to make public what we've learned and to stand by those facts. And we hope that this will help protect our community, which at the end of the day, that filing is the work of 6 months, 7 months of people in our community who are founders, who are our LPs, meaning our investors, the people who've placed their trust in us, our employees who have, and former employees who have stepped up and helped us understand what was happening. And so that is what we have collected and conveyed, and we hope that it will help shed light on the situation and bring a resolution to the situation.
And the allegations are themselves kind of thorny, and I think one of the issues is that there are significant issues that these things can raise, even if they're not applicable to y'all. So just the few things that people seem to be taking issue with, if anyone is actually taking issue with them, are the fact that the firm raised $740 million for its recent fund, as a San Francisco-based entity, and then relocated to Austin. That you've only deployed 90 million of that capital by February, that was the report, since 2017 when the fund closed, and then that you have a family member who's serving as your chief financial officer. And those things seem to be what most of the reporting has stuck on, along with, weirdly, this allegation that you spend too much money on books, which just sounds a little silly. But isn't it true, like, once the LPs invest in you, once you get that money from them, you are the general manager of that fund. You're supposed to be able to deploy it however you want.
Well, there's several things that I could say about this. The first thing I have to say is there have been absolutely no allegations from anyone that we know of that have been conveyed to us. So that's the first thing I want to say. The second thing I want to say is this is a business of trust, and it's a long-term business. So when you start a fund, it is no different than doing a startup. You have to have a founder mindset. It's not some kind of thing where, okay, there's going to be 25 different ideas I can just back and see what happens. You have to have a super strong umwelt, like a worldview, that guides what you're doing, and it has to be deterministic. It can't be the sum of probabilistic outcomes. It's like, that doesn't work as an idea for me. So you have to have a strong worldview. And Mithril was started with a super strong worldview, which is, and frankly, my business partners articulated this better than I have, which is a company is successful to the extent that it's different in valuable ways from every other company in the world. And in the same way, a fund, an investment fund, is successful to the extent it is different from every other fund in the world in unique and important ways. And so you have to have that strong worldview. And that's what, in the same way that when we invested in Oris, we were not investing in Oris to second guess Fred. And we knew that, and we knew that we had to be partners for the long run with Fred. And Fred would make a lot of choices along the way, some we liked, some we didn't like, and that's fine. And we had the kind of relationship where we could have that conversation. And it's exactly the same thing when it comes to funds and their LPs. There are mechanisms by which those conversations can be had. They're outlined in the governing documents of our investment in Fred, in the investment of our LPs in our fund, and every other fund in Silicon Valley, and that's the way it should be. And but at the end of the day, what people are saying is, let's underwrite right up front how you think about things and how, what guides, what values and worldview guide the choices that you will make, and then leave those specific choices in the hands of the founder in the same way they do with our portfolio companies. And Fred, you can talk to that if you like as well. I mean,
Well, I think what's so
seeing
interesting
the other side
about this debate is, in my mind, it's hard to understand the story that you're reporting on, other than Jay is being criticized for being smart and careful, which is an interesting allegation. But I do think that, in my mind, I've worked a lot of venture capitalists, and there's a couple of different ways to approach investment in healthcare, medical devices, or outside. In tech itself. One is to invest in 10 things and hope one works out. The other one is to be careful, look for disruptive technologies that truly can create markets that are exciting, extraordinary, and fast growing. And I wasn't with the J very long until we went to the first, I was invited to the first limited partners meeting, and what I saw was the best small but most impressive portfolio of investments I'd ever seen with any venture capitalist, and I've been around a while. And so I think that is the story, that these are smart, they're careful, they take time, and they have the opportunity to be very big stories.
Well, Fred, now that you're working with a J, aren't you kind of paid to say that? No, I'm kidding. I'm kidding. But I think the decision with Oris and the decision to sell to J&J rather than take that company public speaks to, I think, the ways in which y'all are making those kinds of calculations on what's best for Oris as a company and what's best for you as an investor. I mean, Oris is by any measure a success. You're going to make, what, $740 million with earnouts on that? Or the first fund will do that?
it's going to do well.
There was a number, but I don't remember it right now. I think Connie reported it today. But why did you make the decision to sell to J&J when you could have actually conceivably gone public? You took Intuitive, you were with Intuitive, which is the most successful sort of medical device company of all time. I think it trades 8,000% from its initial public offering price a long time ago, but it's a wildly successful company, the Apple of medtech. So why not try and make lightning strike twice with Oris?
Yeah. So it's a great question, and a very legitimate one, and one that I think all of us, management and the board, struggle with mightily in the time period where we made that decision. But one of the things I've learned in my career that is such a dominant factor in whether you obtain moderate success or great success is, quite frankly, timing. And the timing of Intuitive was fantastic in that when I started Intuitive, everybody thought it was the craziest thing they'd ever heard of. A robot operating on humans, why would you ever do that? Which gave us an enormous amount of time to understand how to do it and how to gain acceptance for it. And it was painful because everybody, enormous amount of criticism that then turns into what I call begrudging acceptance, that turns into I have a slide that describes it as ringing endorsement, with lots of people saying, well, it was obvious 10 years ago that this was the way that surgery should develop. And so the key learning there was we had time to figure it out. I created a behemoth in the surgical robotics business, a monopolist that has enormous advantage from the standpoint of presence in the market, with regard to market share, development of the technology, development of the intellectual property. They are positioned to make it very difficult to have anyone enter the space and not struggle. And you know, there's one thing to build something, there's another thing to sell something and make a profit. And in the medical device business, it's usually the latter that's pretty hard. Harder than you can usually, if you get the smart enough guys and enough of them in a room, you can figure out what you want to build. To create a business has a lot to do with market forces and timing. And although we were and continue to be enormously excited about the future, the next step in robotics and healthcare, at the end of the day, we decided J&J is the perfect partner to really leapfrog what's being done today and usher in a whole new era of where robotics is used in healthcare. And I don't mean just surgery. I mean throughout the medical specialties, in diagnosis and therapy.
And how does what you're doing with J&J at Auris inform the work that you'll be doing with Jay at Mithril?
Well, I think they're quite separate. But one of the things that J&J does give me the ability to do is look across healthcare. J&J is a big company; they can't do everything. But they're interested in everything. And in a role of Chief Development Officer, I have the luxury of seeing and understanding parts of healthcare and technology in healthcare that is next generation stuff, some of which might fit J&J, a lot of which is going to need entrepreneurial capability to get it from an idea to something that is really useful clinically.
And Jay, what is Fred's actual role at Mithril?
No, we've been partners for almost, more than 5 years, almost 6 years at this point. And we started having conversations about the fact that there are these times late at night when you start thinking about crazy ideas and there's a few people that you call to say, hey, what do you think of this? And those are the best conversations. And you usually have those calls with your co-founders. If you're a startup founder, you have it with intellectual muses and peers and friends. And in my investing career, Fred has become one of those people. And so we end up having those conversations. And they're never, when we were invested in Auris, some of those conversations, maybe 20, 30%, were directly relevant to Auris, and they were important, time-sensitive conversations. But a lot of those were serendipitous conversations. And that's when you realize that there are people that you want to spend more time with and work with whose judgment you enormously respect. And obviously, Fred's got a very important day job. So the question we had was, do we want to set up something that looks like a venture partner type role? And we never have done that. We don't do that. And the reason we haven't done that is we hate this idea of free optionality or low-cost optionality. When you have a low-cost option with a high payoff, by definition, that's a lottery ticket. And you should not be in the business of buying lottery tickets. So the discussion that we ended up having was, what are the things around which we can develop super high conviction? We see a lot, and Fred sees a lot. And the question we have is, what's the one thing that we would both be super excited to work on together and concentrate both time and money into together as investors? And that's the role, and we're calling it a growth partner. So he's obviously not a full-time member of the team. That's not the intent. It's to have a partner that can work with us on specific things that we have super high conviction around. So it's the opposite, the idea of conviction, concentration, and compounding over time expressed in a formal way that we can work together.
And Fred, you're making seed investments still as well, right? You've done a few deals.
I've been doing that for years, yeah.
Right, and you two are investors in a company together, right?
Yes.
A robotic dentist company out of Miami?
It's a company called Neosys. And actually, I'm proud to say that Fred was an investor before I was. So maybe you can talk a little bit about why you found them, and I can talk about why I invested.
Yeah, no, I mean, it gets to where is robotics today, and where should it go? And I've had some very different early experiences. Two different robotics company. One that we talked about, Intuitive. The other one was Mako Surgical, and Mako Surgical probably less well known, but it's really the first robot that entered orthopedics in a successful way, and a very different kind of robot. It's essentially a smart drill. It knows where it is in 3D space, it knows where the anatomy is, and it can drill more precisely than an orthopedic surgeon can by holding a handheld tool and drilling out a part of the bone. So so that has been very successful. It's sold to Stryker, and they are selling lots and lots of robots to do a better job of drilling bone. Where else might that be useful? And the whole idea of dentistry and dental implants has not been a particularly successful business in this country relative to Europe. They do a lot more dental implants than the U.S. And the question is why? And one of the answers is that you kind of have to be an oral surgeon. You have to be willing to take the time to train to understand how to drill a hole in the bone in order to put in a prosthesis. And went, where have I seen this movie before? Right. Yeah, right. And so it's the same thing. You get, you drill at the wrong angle. You drill too deeply. You get a bad result, and it can lead to lots of bad things down the road. And so whether it's taking out a prostate, drilling a hole in a bone, or doing something else with a robot, there are places where the robot is just going to do a better job than a human. Right. And that's a great place to dig in with robotic technology.
This goes to the core of a lot of our interest in robotics. We have maybe, I think at this point, 3 robotics companies in the portfolio, or one has exited. So we had Auris, we have Neosys, and we have a company called Gray Orange that originated in India that's now headquartered in Atlanta. And so the thesis behind a lot of those investments has to do with human-machine symbiosis to get more efficiencies and more uniformity in outcomes. So if you have these normal distributions of outcomes, how do you shift it as far as possible to the right is kind of an interesting question. And the markets in which you can do that tend to be remarkably, like strikingly varied. It's you can positioning an implant for the knee to doing lung surgery to positioning an implant in the oral cavity, which is Neosys, or having a liquid kind of robotic marketplace as for warehouse robotics and logistics, which is what Gray Orange does, built in an agent-based system. And so this type of thing, it's when people think about robots, they think of Megatron, and they think of the Transformers, and they think of Iron Man suits and things, and that's super cool and fun, but they show up in all of these, obscure places that are everyday. Right. And that makes for really big addressable markets, but that are sufficiently narrow in terms of the parameters by which you can address them that it's doable for a startup if they put their mind to it, and if they're comfortable with an additional layer of technical complexity. And you tend to find the people who get obsessed with these ideas not always here in Silicon Valley. Maybe half are here in Silicon Valley, if you just look at our deal flow, and the other half are literally everywhere else. Right. And that's what's interesting. And even if they're here, they're on the wrong side of 101. Right. So, yeah.
Would you say that the Neosys deal is sort of indicative of the ways that you will work with Mithril going forward? Sort of, you see these deals and you'll be able to bring them to the firm, and are you going to be looking at robotics broadly or specifically in the healthcare space?
Well, I think I've done a lot of investing in things that have nothing to do with robotics, and so this is my objective would be to look much more broadly in healthcare.
But healthcare is the mandate.
But healthcare is the mandate.
Yeah.
Correct.
Yeah.
But parenthetically, let me be clear. Every robotics founder I've ever talked to, doesn't matter what they're working on, they want to talk to Fred.
When you were first having these discussions about joining the firm, were you at all concerned about the allegations that were starting to arise? I mean, y'all have been having these conversations for a while.
No, I've spent 5 years working very closely with Ajay and his team, And I must tell you, the reason why, one of the reasons why we were so successful was that Jay was perceptive enough to look at the company and say, why is it that this company isn't being flooded by venture capital? And we were, I was always pretty good about raising money, but have, lived through the ebbs and flows of venture capital and their belief about what's hot and what's not. And healthcare goes in and out of favor in a pretty cyclical and predictable fashion. Jay was smart enough to understand where we were at the point in time where lots of investors were fleeing healthcare and certainly medical devices. They were looking at Snapchat and saying, I can put less money and make multiples of the return I could possibly make in a medical device investment. Why would I do that? And quite honestly, if you look in the last 20 years, I don't know this for a fact, but I suspect there are significantly less venture firms that are of any significance that will state that medtech was a significant focus of theirs. In other words, a lot of these venture firms that thought they were good at medical devices have not done well enough to survive, and a lot of them are gone. Yeah.
Jay, when you invest, the recent investments that you've made have been in Singapore, in Miami, in New Hampshire, in Bengaluru. Typically, VCs have a much more focused approach to geographically to where they invest. Is the future a more distributed sort of model, or is that a peculiarity of your firm?
It absolutely is a distributed model. I'll say that categorically. I think there's a lot of magic to what Silicon Valley is and why it's been successful. There's a critical mass of talent here. It is, caricatured as Hollywood for smart people. And it kind of is. Most caricatures are rooted in some truth. The technologies of scale, the technologies of starting, successful startups or that support successful startups have, in a way, come out of Silicon Valley and democratized startup formation. So I would say that Silicon Valley is a state of mind. And if Silicon Valley is a state of mind and a culture and a way of thinking about the future, why does it have to be married to a physical reality of being 100 miles from where we are right now, which is the traditional way to think about this? And that was the same back in Boston, Venture 1.0, when Route 128 was supposed to be the place where things happen. In both instances, we could acknowledge the value of clusters, but we should also acknowledge the value of network topologies. So if you think about how networks work, the underlying thesis behind the 100-mile rule is that networks are spatially driven. And if you now think about networks, the topology of networks is decoupled from spatial realities. So, I'll just make something up. People who are obsessed with robotic insects, maybe they're nanobots, and you're probably more likely to find the smartest people working on that on a subreddit where there's people from Bratislava collaborating with people from Brisbane. And some of those people are probably here in Brisbane, California, and some are in Brisbane, Australia. And that's fine. And you don't know which one of those folks is going to have the game-changing idea. And so my view is you have to keep an open mind. Why, there's ways in which you have to explain to investors what you do. And one of the handicaps in my industry, which is venture, is trying to explain in a circumscribed fashion your view of something for which there's no model, which is the next most interesting company in the world. And you're like, okay, I have to explain to all these people what the future looks like without sounding like some crazy Nostradamus person, right? Because you can't raise a Nostradamus.
Or sounding like some crazy Nostradamus person, right?
But if you do, you have to be like rationally crazy. Like, here, let me explain why I believe these things, right? Because otherwise what happens is you have this barbell effect of this indeterminate optimism and extreme cynicism, because that's when you have this, the valley of despair when the indeterminate optimism blows up on you. And you're like, okay, I hate the world, everybody hates me, nothing works, technology die. And then you just step back and say, okay, calm down, like stop tweeting, let's just figure this out. And so
Stop
you
tweeting is sort of a universal
Yes.
piece of advice that everyone should take, yeah?
But that's the difference between thematic investing and almost anti-thematic first principles investing. First principles investing, you kind of have to just say, whatever comes at you, you just take as de facto potentially valid, and then you validate it, right? And if you can't validate it, you don't do it, but then that's what you're looking for. So,
Fred, if you put on your Nostradamus hat
Yeah.
and talked as a crazy investor
Yeah.
person, which you sort of are now,
Yeah.
what are the most interesting next companies that are going to be built in medicine?
Well, that's a great question, but let me stick to what I know because I don't know a lot of the.
You would be the first VC to do that. But
Yeah.
Sure, go ahead.
But if you just look, I mean, robotics is, if you take it, to the extreme, it's a very big category. It depends on what you define as a robot. But what's interesting to me, and Jay alluded to it, everybody focuses on the mechatronics or the electromechanical part of robotics. But what's going to change the world, obviously, is the software that drives an electromechanical device. And so you just, sometimes when I talk about robotics, I use the analogy and how robotics, certainly in healthcare, are kind of, from the standpoint of where we are today, they're really dumb. They don't, the Da Vinci surgical system, which everybody thinks is so sophisticated, is really a dumb machine. You move and it mimics your movement. That's really all you get.
Yeah.
And so the intelligence of robotics, is going to be obviously what changes the world. And sometimes I talk about it and I ask people to think about Da Vinci, the surgical robot, as a first generation sort of Model T. Mm-hmm. So if you think about that,
Right.
where are we going?
Right.
And what's a good model for where we could go? And I use the car industry because, the autonomous vehicles are sensor-driven robots. That's
Right.
what they are, right? They're pretty smart.
Right.
And they can, see in different ways than we do. They can make decisions differently. And that's where, and so that's a great example of a robot that's now has hundreds of millions of lines of code.
Yes.
And that's where robotics and healthcare is going, and that's really exciting.
That's amazing. We only have like a couple of minutes left, like a minute left, so I just want to put a final pin in this discussion around the firm stuff. Did Mithril do anything illegal?
no.
Was it a mistake to deploy? Is it wrong to deploy capital at a slower pace, reaping, getting millions of dollars in management fees without actually deploying capital, which is essentially your job?
Absolutely not. The short answer is it takes years and years to figure out what you should do, and it takes years of figuring out what you should not do. And our LPs are backing us to do both of those things. That's what the team and the fees, all of this is about. When you build a firm, you're building a firm to make good choices over a long period of time. Every investment that we've made in the last year, for example, the new ones were years of work. I mean, the most recent investment, Glance, that's a relationship that started 5 years ago in 2014. So where do you attribute that? Is that a Fund 1 relationship? Is that a Fund 2 relationship? God knows. Bottom line, it's a 5-year journey of yeses and nos and thinking and talking and figuring out to do something. If you're playing the long game, you have to focus on the core of the mission, the values that drive the mission, and the discipline underlying your mission. Everything else is noise. Just do that, it'll go well. And that applies to founders of startups and venture capital funds.
And with that, sir, I think we're out of time. Thank you so much for
you.
listening, and thank you both
Thank
for
you.
appearing
Thank
on
you.
the panel. Thank you.
Thank you.
Thank you.
Thank you. Congratulations on all of you for making it through security. I hear it's a little bit of a gauntlet out there, so we still got people trickling in, but good for you guys, you're here. On the Extra Crunch stage, just coming up right now, we have How to Raise My First Dollars with Russ Hedleston, who's the co-founder and CEO of DocSend, Charles Hudson, who's the founder and managing partner at Precursor, and Annie Kadavi, who is the managing director at Redpoint Ventures. I can't imagine that there are any founders who don't want to know about how to raise your first dollars unless you're already did that. So definitely check that out. In the meantime, we have GV's managing partner and CEO, David Crane, joining us on stage. Please welcome him and your moderator, Connie Loizos.
This all the way around?
So, David, I have been wanting to interview you for 3 years since you became the CEO of GV. So thank you very much for doing this today. I have to say, though, so David spent, you've been at Google for 20-some years.
20.
20 years, okay. You worked for a large chunk of that time as the global head of PR. You know every reporter in Silicon Valley. So why did it take you so long to come out of hiding?
Well, I haven't been in hiding, I'll tell you that. We've been really busy. When you have a second act at Google, which is remarkably different from your first act, you actually kind of have to stay focused on that. So we've been busy building an extremely large-scaled venture fund, which this year is celebrating our 10th birthday, and I've been doing that for 10 years.
That's incredible. It goes fast. Well, so there's a lot to talk about, but I thought what I'd love to sort of dive into really quickly is one of your highest profile deals, which was investing in Uber. So I've long heard that you were the one who was sort of agitating to lead this $250 million Series C round, which at the time was a very big deal. So I want to know, frankly, in hindsight, that was a brilliant investment. Do you think that investment makes sense now for public shareholders? Do you
For
think
public
Uber?
shareholders, okay. No, so this is a special company. This company has an unmistakable brand. It operates in hundreds of cities around the world. It has scale. It has a moat around it that's touched by almost no one in the category. So honestly, we're long-term. We're bullish on the business, and I think it is an interesting investment opportunity. And it happens to be on sale today.
I guess I'm just wondering, do you think this company can become profitable in sort of a reasonable time horizon? And
There's
if so,
always
how?
this tension of, do you invest in the business, do you build the moat deeper, or do you focus on those business fundamentals? And we all know, super attractive business in many cities, offset by humongous investments in building more security, more independence, more of a moat into the future. So long view, I think it's quite attractive.
And it's obviously getting into new business lines, which is interesting. But you'd also told me that GV had sold part of its stake to SoftBank last year when the conglomerate came in and wanted to buy up a substantial percentage of the company. Can you say how much of your stake you sold?
Probably best not to, but I'd say it was a great transaction. Working with SoftBank was quite pleasant. And I think there were a number of shareholders that did quite well.
And now Uber's lockup period is coming up quickly. Will you sell the rest of your stake, do you imagine?
I think it's not clear yet, to be honest with you. We're paying attention to the market. Things are a little bit unstable, to say the least. But yeah, in about a month from now, we're going to have a big decision to make.
So when you invested in Uber in 2013, you were investing in a different founder, Travis Kalanick, who obviously was sort of pressured to resign in 2017. This is a little bit reminiscent of what happened with Adam Neumann of WeWork last week. He'd grown the company over the last 9 years, pressured to resign. I'm just sort of wondering, are we in agreement that maybe the investors could have done something sooner? I mean, these are two founders whose sort of management styles and the way they operated their companies were very well known. It wasn't a surprise. So I'm just wondering, like, why suddenly was it problematic, and why didn't somebody do something sooner?
Well, probably the best advice that I could offer there is it would have been prudent to curb some of Adam's creativity a little bit sooner. Feature is definitely a focus, and in that business, I don't think they were as disciplined about that. But I will say there's very little similarity, in fact, between Travis and Adam. Travis is a founder that, in his peak at Uber, was incredibly enviable, and someone that we chased very aggressively to try and be involved with.
Okay, so let's talk about GV. I think we all kind of want to know a little bit more about GV under David Crane. So one thing that I noticed was in the firm's early days, it would sort of talk about its discrete pools of capital. 1 year it'd be we've raised $300 million, another year it'd say we've been allocated $500 million. Is that still the case that you're getting these yearly allocations? And if so, what are you investing right now?
Yeah, so when we started GV, we had the opportunity to look at, candidly, several decades of venture capital experience and pick some of the greatest attributes and do our best to steer away from some things that weren't optimized. So one of the things that we set up structurally was that, yes, each year we would engage with our LP, our single LP, Alphabet, and figure out what's in a reasonable pool of capital that our team could deploy each year. So when we started 10 years ago, we started with literally a $50 million fund. And now, 10 years later, we're investing many hundreds of millions per year.
And so how much have you how much have you been allocated altogether to this point?
Total, we're looking after nearly $5 billion.
$5 billion. Wow, that's astonishing. Okay, so it's not like Alphabet needs the money, but you did invest in Uber. Good for you. You invested in Nest Labs, which Google bought for $3.2 billion several years ago. Can you talk about your returns? I mean, have you returned, like what percentage of that money has come back to Google?
Well, so this is a business that's often measured in decades. We're 10 years old this year, and I'll tell you, kind of directionally, we're incredibly happy with the financial performance of the fund. I will say we're backed by an investor that has a lot of bravery, that puts its shoulder into risk, and often tells us, do something more complex, do something more crazy next time. I mean, it wouldn't be unimaginable that Sergey would walk in and say, why don't you do the space elevator next time? So sometimes those sorts of businesses may take a lot longer to return. But all in all, we're incredibly happy with what we've returned so far.
Oh, great. Okay, another thing that I hadn't always realized, but when I interviewed your predecessor, Bill Maris, a few years ago, he told me that every decision fell to him and him alone ultimately, that there are just wide-ranging discussions, everyone's sort of opinion is factored heavily, but he said, and I'll quote because I have it in front of me, GV is not like a democracy in any way, though everyone knows where people stand, and we try to give each other good advice. So my question is, are you the ultimate arbiter of what gets funded now at GV?
I would say, technically speaking, we don't run remarkably differently. But that said, our success and really the excitement that we bring every day is really playing a meaningful amount of team ball. So the experience for the entrepreneur is not so unusual from going to any other Sandhill pitch room. An entrepreneur would come in, spend an hour or two with us. We would have a dialogue afterwards. We'd take some data. We would consult some data. And a discussion would sort of ensue. Technically, yeah, I can come in and have a little bit of influence on what's happening. But because we're scaling what we're doing so meaningfully, my objective, as often as I can, is to greenlight as many investments as makes sense.
How many investments are you greenlighting a year?
Annually, I think this year we'll do over 100 deals. In total, in 10 years, we have an active portfolio of more than 300 companies. And I think if memory serves me correctly, we've done over 600 deals in 10 years.
Wow. And how many people are on staff at this point?
About 90 people full-time.
90 people full-time. And I have to say, it seems like you've been more focused on bringing women into, sort of elevating them through the ranks. Is that
Absolutely,
accurate?
big focus for us. It's interesting, we used sort of a page out of the Google playbook that served the company incredibly well for goal setting and product and engineering, called OKRs, Objectives and Key Results. And we learned that OKRs are actually extensible to diversity and inclusion. So we set some goals a couple of years ago to, most importantly, go out to the market with more focus and do our best to fund a meaningful number of new and underrepresented founders. And I'd say in the last 18 months, we've deployed about $200 million into underrepresented founders. And conversely, we've used that same framework to improve the diversity of our team as well, and I think we've made some great progress there.
Great. Okay, I also want to ask, and I really don't know this of any corporate venture funds, but is the sort of compensation structure the same? Is it sort of, are there management fees and carry involved, or is it structured much differently?
Yeah, we have a single LP. That's probably one of the most distinctive attributes, but we're set up mostly like Sandhill firms. So we have access to all kinds of operating capital that we need to run the business. We have a carry on our outcomes. All interests are aligned. So it's a really attractive place to be able to do venture.
When Google formed this unit 10 years ago, there was also a lot of talk about the data-driven nature of the investing that you would do. So can you tell me a little bit about the algorithms that you're relying on and how they help you identify, promising companies?
Yeah, I don't think it would be Google Ventures without putting some emphasis on the Google part of that name. So using data, machine learning has been something that's very common in our practice for many years. We've got a team of something on the order of a dozen to 15 engineers that focus on technology and how technology can frankly make humans smarter in our business. We don't think it's an either or, we think it's an and. So we look at technology as an opportunity to analyze deals, discover new opportunities, but really most importantly, look at the portfolio at large and ensure that we've got the right exposure, we've got the right balance to do our best to capture industry-leading returns.
But maybe more specifically, what are you looking for?
What are we looking for? We use data in all kinds of ways to evaluate deal by deal, portfolio dynamics, discovery of new opportunities.
Okay. I guess, have you ever gone rogue and sort of defied the data?
We go rogue all the time. Yeah, data's there to help us. It's there to make us smarter, but it doesn't singularly dictate what we do in terms of investment decisions.
What are some of the examples of you sort of not listening to the data?
So an example would be a follow-on investment in a company. There may be some tension between how the data signal will present its view, how other attributes may be more important, and it's important for us to continue to show support to an entrepreneur, which we try and do as often as we can.
What's a company, though?
Oh, now you're going to have to stretch the depths of my
Gotta get a
imagination.
little more
I don't think anything
granular
comes to mind in particular, but we have 300 companies, so specific details around each company are somewhat hard to retrieve.
Okay. All right. You also have a big team here. You have a team in Europe, but it seems like you're predominantly still doing venture in the U.S. Is that accurate?
That's correct. Yeah, most of our team is situated in a set of offices across the U.S. We've got a small team in London. Most of the dollars we invest go into U.S.-based companies in a wide variety of sectors, and we do some investing in Europe. We don't invest in Asia. We don't invest in Latin America.
So, which is so interesting, especially Asia, since there's been so much going on there. And in fact, you had told me that you'd invested in a company, is it called Fresh to Home? That's sort of trying to tackle the fragmented perishable goods market in India. That's interesting.
That's one I did personally.
Right. So, first of all, how much personal investing are you doing versus GV? And also, I mean, if that company were to break out, would Larry and Sergey say, hey, David, why didn't you get us into that deal?
Well, there's certainly a chance if that company breaks out and we choose to expand our scope to investing in India that GV could look at it. No question about it. Today, we don't have plans to invest there. So in markets where GV isn't investing, we're happy to support our partners' personal interests. I do a little bit of personal investing in categories that honestly have nothing to do with the main line of GV. I invested in a men's outdoor professional lacrosse league, for example, called the PLL. That's probably not something that GV would do, but it's an area of passion for me. My children play lacrosse, and it's a big growing sport.
Great. But again, so why not Asia? Why not sort of cultivate a team there? And is that going to happen anytime soon?
So we're 10 years old. I think we're very proud of what we've accomplished so far. We have a lot more to prove in kind of the mainline market here in the States, in Silicon Valley, in the Northeast. But that said, we are called Google Ventures, or GV, and I think it's inevitable that over time, as we evolve, we'll consider taking on a new geography. But focus, again, is a feature for our business, too, and I think we have a lot more opportunity to continue to further establish ourselves here.
Right. One other question before we move on. A couple of companies that you've funded have been acquired by Google. Obviously, Nest Labs, a location analytics company called Urban Engines. How much does that factor into your decision making, whether or not this could potentially be something that one of the companies under Alphabet would be interested in partnering with or buying?
The single most important thing for GV is financial return. That's how our success is measured. So GV is quite close with Google. Many of us hail from early Google. Not surprisingly, Google and the employees at GV like a lot of the same things. So I'd say over the course of the last 10 years, something like a dozen companies have been bought into Google itself. We don't think of ourselves as strategic investors. We're return driven. If Google's at the table when there's a transaction that's looming, we're more than happy to facilitate and ensure that engagement is happening. But at the same time, we sell just as many companies to Twitter, to Facebook, to Microsoft, et cetera. Just last week, in fact, it was announced that Facebook bought one of our companies that was very early called Control Labs.
Right. Great. Okay, so let's talk about bigger picture stuff while we have you here for a few more minutes. We talked a little bit about Uber. You think Uber is still on sale and an attractive an investment. Obviously, some people disagree. We'll see what happens with that company. But bigger picture, are companies staying private too long?
No, it's interesting. There is so much capital in the market right now that there isn't the burden to put oneself in a position that's remarkably different from the control, the privacy that one has as private. So it's very company specific, your question, but I'd say in general, the market has changed so meaningfully in the last 2 years, there isn't that pressure to seek capital in the public markets. You have many, many options to stay private, and for lots of companies, that's a good thing.
But is it good for, I guess, Americans? You know, I mean, so much wealth is being created before these companies go out, as with Uber, that once they go public, there's not a huge amount of upside, as we're seeing with some of these deals. Is that sort of just, taking yourself out of GV, does that resonate at all?
It It resonates to some degree. Entrepreneurship is certainly one of the growth vectors in this economy, and so we want to see it thrive. We want to see people in the public have an opportunity to experience growth and ride the evolution of these companies. But again, I think it's really a very company-specific question.
Okay, what about direct listings? Obviously, top of mind this week, Bill Gurley, Michael Moritz, gathered 100 investors or so, maybe you were there. It's hard for me to imagine how this is an applicable model. I think probably everybody here in the audience knows what a direct listing is, but it's a funding event where, it's not really a funding event actually. It just allows companies to go on public markets and make their shares liquid instantaneously, but it's the company's not raising money. So the sort of thinking has been that it's great for companies that have big brands, don't need a lot of support from investment banks, retail analysts. What do you think?
So I think we heard on the stage yesterday that from the founder of Slack, direct listings are not quite as clear as some of the benefits have been presented. As you noted, the company doesn't always get capital, but I think there's a lot of thinking right now about how to do a direct listing, ensure that employees, shareholders on the cap table can get some liquidity, but the company can also seek financing as well. We were very fortunate to be part of Slack's direct listing, had a great outcome with that. And as an investor, it's great not to have a lockup on day one.
Sure, but I guess just do you think they'll pick up momentum, or this will still be sort of a very special company that can pull it
I
off?
think directionally there's a huge opportunity to continue to innovate and enhance on many aspects of how a company would find liquidity. Direct listings look promising. We're seeing some good examples of them. I think it's a little bit early to tell.
Okay. You invested in a company that I'm very interested in, and I'm going to be meeting the CEO soon, Jim Collins, Kitchen United. It's a cloud kitchen company. This is a huge trend. I think this is a particularly interesting company because it's operating in a space that Travis Kalanick has seemingly decided that he wants to dominate. He's making big investments here and abroad. Why go against him, I guess, or why jump into this space too?
That was far from our original investment thesis. I mean, this is an industry that's emerging. It's got some properties that we find to be very attractive. The idea that a restaurant brand can be created in the cloud, if you will, as opposed to in retail is wildly interesting to us. There's also a tremendous surplus of ugly, not so usable four-wall real estate that's just looking for a tenant, looking for new utilization models. And so dark kitchen is wildly interesting to us. Jim and his team at Kitchen United are focused on the US market, have made a heck of a lot of traction here. I think what we've seen in the competitors in the space is there's more traction internationally than in the United States. But again, I think we're pretty clear. This isn't a zero-sum business. It's about the top of the second inning. Lots to unpack, lots to evolve here. One that we're really excited about, though.
Great. Okay. And last question, and it's sort of a doozy, and I want you to think through this, but there's a lot of talk about regulating your parent company. Do you think it should be broken up, regulated? What are your thoughts on sort of these widespread sort of attacks from all these agencies?
So I've read the same fear and focused news articles that you have about this topic. I would say, honestly, I've been at Google 20 years. It lives inside my veins. I'm very proud of what the company's built. I'm proud to have played a part of that. But I'd say for the last 10 years, having focused on venture capital, I'm really not the most authoritative expert on how Google should think about those sorts of issues. So I'm actually going to take a pass on that one because what we're focused on is something totally different.
Can we talk about Facebook? Do you think Facebook should be regulated?
We can, if you like. These are companies that do have a lot of power. They do have a lot of control. But also the sum of those pieces can be very valuable for consumers and for partners as well. So again, these are big, complicated questions. I think these companies will have a lot of questions to answer in the coming months, and we'll see what happens.
So what's next? Based on your data, what does GV see as sort of promising and sort of largely undiscovered areas of investment?
I'd say probably the most interesting opportunity that we are prosecuting as aggressively as we can is working on some bold global problems around the human body and improving human health care. Over the last 10 years, this has been a big focus for us. We have MDs on our staff. We have technical and machine learning experts that just focused on life sciences research, computational biology. We've invested $1 billion in 100 companies in the last 10 years focused on some aspect of the human body. So if there's one single thing that I think I'm most excited about is continuing to accelerate what we're doing there, fueling this team of experts to, again, work on really, really hard, unsolved problems. Even if we're partially successful, many, many, many millions of people can benefit.
Great. David, thank you so much for joining us today. We really appreciate it.
Thank you so
Thank
much
you.
for having me, Connie. Yay.
Hit me, hit me. There we go. All right, on the Q&A stage, 10:20 or 10:30, my card says both, so it could go either way. The cutting edge of health tech with Dr. Rajai Bhatniji, co-founder and chief health officer of Collective Health, Arvind Gupta, founder and managing director of IndieBio, and Rachel Harwitz, co-founder, president, and CEO of Caribou Biosciences. Make sure to check it out. If you're interested, submit your questions on Slido. It's going to be a great time. And now, on the main stage, please welcome from OpenAI, co-founder and CEO Sam Altman, and co-founder, chairman, and CTO Greg Brotman, as well as your moderator, Frederic Lardinois. Warm welcome, please.
Morning, guys.
Morning.
Morning.
We're going to talk about artificial general intelligence. Now, I don't know that everybody knows exactly what that is. So maybe, Greg, since you're the tech guy, why don't you explain that to us?
All right, so today's artificial intelligence, you can almost think as starting to match the function of individual brain regions, like a module for vision, a module for speech. By contrast, so artificial general intelligence is going to be something much more powerful. It's going to be a system that can actually understand an entire domain of study, can actually understand multiple domains, integrate information between them, and actually discover new knowledge, work with humans to solve global scale challenges that we don't have solutions for.
And that's very much the mission of OpenAI, to get to that point.
And it's not just to get there, it's to make sure that it really benefits not just a small set of people, but all of humanity.
Got it. Now, to do that, you first set up a nonprofit organization. And then earlier this year, you switched to a for-profit, but with capped returns for the first round investors. Why did you do that?
Yeah, you know, the way that we started OpenAI was we had this mission. We wanted AGI, artificial general intelligence, to benefit everyone. And so we started in the most obvious way as a nonprofit. But one thing we found as we started to make progress, as we really tried to be at the cutting edge and make AI just continually do impossible things, is that it's actually a very expensive endeavor. That, you know, just like in physics, you got to build these massive particle accelerators. In AI, we have to build these massive supercomputers. And so we needed to be able to raise investment capital, but still stay true to the mission. And so we ended up designing a structure that is neither exactly a for-profit nor a nonprofit, but something where we can take investment capital, and if we succeed in creating an unprecedented amount of value, that we only owe a fixed return to those investors and to employees who have equity, and everything else is owned by the nonprofit to benefit everyone.
Right. And that return is capped at 100x?
So that's true for the first round of investment. That you can almost think of it as, you know, as we make progress, that future investors are willing to come in for a lower multiple.
Sure. 100x is that's a lot.
Not for a startup investor in sort of a first round.
Okay.
You know, we tried to think about what a good startup investment in sort of our seed round would be, and then when we did it with Microsoft, we did it at sort of a lower multiple to model the progress. But our goal is to have returns to investors like a good startup investment, but not sort of unprecedentedly good.
Has moving to this model changed how you do your research, how you do your business?
Not at all. In spirit, we still view ourselves as working for the world, but I think you have to sort of play the field as it lies, and we just need so much capital to do our work. I think like we'll need more capital than any nonprofit has ever raised probably, and so this was sort of a reflection of reality. But we put, you know, a year's worth of work into designing a new structure to let us keep our mission and still be able to succeed, like get the capital we need to succeed.
So even as a for-profit, you can still, did you say work for the world? Is that how you
a cap
describe
profit. We're an LLC, we're not a standard thing. We don't have traditional shareholders. We have documents that say in like very clear words at the top in a purple box that, you know, this is not a standard investment. We can choose to make it worth nothing at any point if we need to. It's super speculative. But I think the technology we're working on has so much promise if it works, if we're successful in our mission, that it's not going to be a particularly difficult thing for us to provide a great return to our investors and also unprecedented value to the world.
There's a big if there in, though, if it works, right? Where do you put your chances of actually making AGI, or you being the first one to make AGI work, or at all?
If you ask a typical startup what their chances are of success, I think that you don't start on these endeavors because they're certain.
Sure.
You embark on them because they're important.
But you've got a technical challenge that still needs to be solved. You're not just building a social network app that maybe gets users or not.
Absolutely. So I think that AGI is something where it's just like there's been 60 years worth of debate on when this thing's going to come, and there were people in the 80s and people in the 90s who thought that it was just around the corner. And I think it might still be true that it's just around the corner. I think we can't rule it out. But I think one thing that's also really important is that along the way to AGI, it's not quite like making a singular breakthrough and either you got it or you don't. That we're producing these super valuable AI technologies that are becoming more and more powerful. And so I think that actually the upside of if we truly succeed in the mission, we build this kind of system that we're talking about, we make it benefit everyone, that's going to be something on the order of the Industrial Revolution. And if we fail in that, then we'll just have created really amazing AI technologies that can still be used to benefit the world.
I think it's always, maybe we'll succeed, maybe we won't. Certainly we have an enormously difficult challenge in front of us. But I was reflecting just now on January of 2016. OpenAI started in Greg's apartment. I was mostly working at YC at the time, but I came by a few days, and it was like, 8 people sitting around a kitchen table.
Yep.
And I remember talking about what we thought we'd be capable of over the next, let's say, 3 years. And that so badly undershot what 3 years later we're actually capable of, that I suspect, in the way that humans are bad at estimating exponential curves, we still are underestimating what we'll accomplish in the next 3 years. I think we have technology that learns. This is this amazing, amazing secret in the world. That's what makes humans special. And we figured out how to do it. That's like figuring out how to go to the moon. And we're able to keep driving that forward. And every year, I think the field is doing things that experts say are difficult or impossible. And recursively defined, if that keeps going, we'll get very far.
Is that why you decided to go to OpenAI after Y Combinator?
Yeah, my general strategy is if you don't know the most important thing to work on, you should work on many things and take a portfolio strategy. And I love YC. It was a great way to work on many, many things. But once you identify the one most important thing, and power laws being what they are, you should just go to try to work as hard as you can on that. And I think expected value of us succeeding this is by far the most important thing I can imagine working on.
What's the ideal outcome for OpenAI?
Well, the ideal outcome is that we succeed at the mission. So you can imagine what we're really trying to do right now is trying to continually be at the cutting edge of making AI do impossible things, all the way up to building a system that can really be an artificial general intelligence. And it's not just about then, again, it's about actually applying this to these global scale challenges that right now seems like might just be out of our reach. Think about climate change, right? There are just so many aspects of that problem that are super hard, and that you think about technological approaches, think about societal and incentive problems, and if we can actually have tools that can work with humans that can really help us figure out how to tackle that, that's what we really want to be able to accomplish.
But you're not doing any commercial products yet.
That's
You're
right.
just doing research at this point, and it's very deliberate.
Yeah, so that's very important, right? The way to think about it is that the quote of that one of the best ways of doing a startup is you just find an exponential and you ride it. So it turns out that right now we are on this insane exponential of AI progress. You can actually look at it as driven by the amount of computational power that underlies these models, which has been increasing about 5 times faster than Moore's law for the past 6 or 7 years, which is just this really unprecedented amount of
People
progress.
don't get that. Intuition on that breaks down.
That's right. It just totally breaks down, right? So I guess one way to think about it is that it's almost like if your phone battery lasted for 1 day, you wake up 5 years later, it lasts for 800 years, and then you wait 5 more years, it lasts for 100 million years. That's the kind of progress we're seeing on the computational power. And so that I think for us, that the most important thing is to always be at that cutting edge.
Are you saying it's basically a waste of time for you to lock yourself into the state of technology right now?
Yeah, I think that it's not a waste because I think that there's so much good applications. And actually, one upside of this Microsoft deal is that it's not just an investment; it's also a partnership. And we have an arrangement where if we choose to license technology, that they're actually super excited to commercialize it, put it into Microsoft products, and that's one way that we can both continue to fund the research, but also get some of these breakthroughs to actually make it out into the world.
Sure. Let's talk about that Microsoft deal for a second, because you took $1 billion from Microsoft. I think there was some confusion about what that actually meant, the $1 billion. Can you just explain what kind of deal this is? It's not just Azure credits, right?
No, it's cash.
It's
I mean,
pure,
we'll spend a lot on Azure, but it's in cash, yeah.
Right. So what is Microsoft getting for that?
Yeah. So first, again, there's just an investment, so that they now
Sure.
hold some of the instrument. But there's secondly this partnership. So we'll be running all of our things on Azure, and that we're working together to build
Exclusively.
That's right. That's right. And that we're working together to build these massive supercomputers and push forward AI technology. And I think that people in the world who use Azure are going to see that platform continue to just get better and better for AI development.
Yeah, if Microsoft can collaborate with us and we can build an amazing supercomputer to train these models on, that clearly benefits us. We really need that, and Microsoft's a great partner to build it. But that should eventually benefit all Azure customers with what they learn from it.
Why lock yourself into Azure, though?
Well, it's logistically much easier for us to be on one platform.
Okay.
And we need, we're sort of interested in particular supercomputers that work for our workloads. And we sort of talked to all of the players, and I think this already is off to a really good start.
And just as some historical context, we've actually used every major cloud plus our own physical hardware over the course of OpenAI. So we've kind of taken a look at everything that's out there.
All right. So you said you talked to all the players. Would you have taken the same deal from Google?
I think that's particularly good about Microsoft is the degree to which they're mission aligned with us. It's hard to find a partner that can, really scale with us on the capital side over the coming years, have the capability to build the computing infrastructure we need, and have a super aligned vision for us on the mission. And so we're super happy we found that at Microsoft.
And I think it's hard to underemphasize how important that mission alignment is for investors. Like as we said at the beginning, we have a very atypical structure. We have a very atypical mission. The idea that we might actually need to serve the world over serving investors, it's not something that most investors are willing to sign up for. But I think to Microsoft's credit, I think this is actually super aligned with their corporate mission.
Because the overall mission of Microsoft is also to build AI for the greater good of humanity?
Well, so the overall mission of Microsoft actually is to empower, I might not get this word for word, but to empower every organization and individual to achieve more. And the actual individuals at the top who run the company, I think, are super aligned with this mission of trying to make sure that artificial intelligence and general intelligence happens in a way that benefits everyone.
I think I've heard Satya say the same words.
That's
I think
right.
You're
That's
pretty
right.
close there.
Satya genuinely believes that AI will be the most important trend for Microsoft to get right in the coming decade. And he really thinks like we do about how to distribute the benefits.
Sure. Now, you've talked about how much money it takes to just run the models and build the models, and you've got the money now. Let's talk a little bit about what you're building right now. And you've talked about the money, that stuff is done. Let's talk about the multi-agent model you showed, and maybe we can put the video up on screen of the work you just showed. I think it was last week?
Yeah, it was a week or two ago. So what we did is we trained some AIs to play hide and seek. And what they learned was the sequence of strategies and counter strategies. Right.
Maybe we can loop that video a couple of times since I think it just went away.
Yep. So at first they just learned to hide in a room and put some boxes in there, and then they learned that there are these ramps that the seekers could use to jump over the walls, and eventually they got better and better and got to the point that actually they figured out how to break the physics. So what we're actually seeing here is one of the seekers figures out that it can actually break the physics of the simulation in order to kind of have the ultimate out catting and mousing. and can actually get to where the little blue guys are hiding in the corner. I think there's a second one too of these unconventional strategies that we didn't know about. There should be a second video which hopefully we can put up, where these seekers learned, hey, I can box myself in, and the hiders learned they could box themselves in. The seekers learned, hey, I can actually use the physics of this world to get on top of this box and surf my way into the shelter. And so I think the thing that's really exciting about this is that we kind of have this open world where you have this very evolutionary process, right? We know that evolution is the thing that made us smart, and there's a question that people have had for a very long time of, can you use it to make AI smart? And this kind of shows that, yeah, you can actually even have them discover strategies and ways of exploiting your physics that humans couldn't have imagined. And I think this actually really showcases like why we want to build these systems at all, right? We really want to keep pushing the intelligence. We want to make the world more open and have more diversity of things these things can do. And then you can actually have them discover things that we didn't know were possible.
Yeah, I think, in a very simple environment, you can have incredibly complex behavior emerge just because of agents having to outsmart each other. If you think about humans, we don't need. Evolution did not give us such giant energy and efficient brains because they help us outrun a lion or run down an antelope. We have them to deal with each other. And similarly, most of the complexity in that environment comes from the agents having to deal with each other, interact with each other, cooperate with each other. And I think that actually gives me a lot of optimism about a path to intelligence. Is if you imagine what we just showed, on this exponential ramp of sort of 8x improvement per year as the models get smarter and smarter, I think you can imagine enormously complex behavior coming, new knowledge discovery coming that we ourselves didn't have from this multi-agent strategy.
They're exploiting basically a glitch in the setup. Is that what's happening? And they figured out a way to do that?
Yeah.
Is that a good thing?
Well, so I think it's an interesting thing, right? That I think ultimately what we want are AIs that can work with us to help us solve problems we can't, right? Why do we want tools at all, right? Is to extend what humans can do. So I think there's real promise there. But I think it also highlights the fact that, yeah, we're going to have to really think about as these systems come into society, you don't want your self-driving car to go and do some crazy strategy that maybe has some bad externalities. And so part of what we work on, it's not just the capabilities, it's also safety. It's also figuring out how do we make these systems actually do what humans want, be aligned with our values. And I think that's really crucial.
Getting the systems to do what we want, not what we try to say, I think will be increasingly important.
Interesting.
And I actually think that there's a lot of people out there who I think this problem is intractable. Like, how are you ever supposed to write down the reward function for humanity? How are you supposed to write down what you want?
You can learn it.
Exactly. And this, I think, is the really key insight, that we already have technology that can learn super well all of these problems and solutions that humans can't specify, and we're trying to do the exact same thing with what do humans want.
Mm-hmm. Some people would be nervous about that.
And I mean, tell me more about why.
Just in terms of, you're training these, you may have good intentions training these models, right? Somebody else may say the reward model is very different.
So this, I think, is actually, all the things we've been talking about to date have been these technical problems, the question of capital, the question of how do you build these computers. I think this is actually the most important question, right? Let's say you can really succeed and build these super powerful systems. What values are in there? Mm-hmm. Whose values are they? We as humanity, we're not very good at agreeing on a global value system. And I think that this is also a super important challenge. And we actually have a policy team at OpenAI whose job it is just to think about this.
Mm-hmm. And do you have any results from that? How do you approach that? Yeah.
I think there are some things that most of humanity agrees on as values, and then there's a few big spectrums in sort of world philosophies. Maybe you could talk about like individualism versus collectivism is one big one. How we start a process now about a global discussion about what deployment of advanced AI is going to look like. We've really turned our attention to that given the acceleration of our results. We just this year put a team on that for the first time, saying like, this sounds a little premature, but better to be a little early than a little late. But I think what it's going to come down to is step one is just sort of a global discussion, which has not even really been started. I think as people start to take this seriously, as the non-tech world starts to take this seriously, the first stage is just a discussion about what kind of world we want on the other side.
Sure.
And I think one really key part of that is it's not just a Silicon Valley problem, right? I think that so far, Silicon Valley, I think, has kind of started to really isolate itself off. And I think that's causing a lot of issues. And for the most powerful technology ever, we just got to really be able to get global engagement.
Sure. In part, I'm asking because you had this other result recently, GPT-2. It's a model that can generate text based on a prompt like an undergraduate would get, basically, in an English class. And you decided to withhold some of those results, at least the models, for a while, and roll this out in a staged fashion because you thought the model was too good?
Yeah, so this is a result that is, just like 5 years ahead of where we thought we were going to get it. That was, we generated this model that we just trained it by looking at internet text, and you could ask it to write an essay on, say, why recycling is bad for the world, and it came up with this great argument of why are we generating so much waste in the first place? Like, we're just masking the symptoms with recycling, and we'd never seen anything like it. And so everyone who looked at it within OpenAI thought that the implications were totally obvious, but we couldn't agree on exactly what those implications were. Some people thought it was obviously totally benign. People use it to generate books and things like that. Other people thought that it could potentially be used for malicious purposes. For example, generating fake news at massively unprecedented scale. And when we started this company trying to make AGI benefit everyone, we always knew that not publishing everything would be part of that. The day would come, and we knew it was super important to be a year too early rather than a year too late. And so, we might have been a year too early, but we decided to do a staged release of rolling out bigger and bigger versions rather than everything at once.
Why the staged release? So some people accuse you, this is just a publicity stunt. They want to show off. We're so good, our stuff is already dangerous, so we can't just show it. But why do this staged release?
We didn't say that it's dangerous. We said it might be. We said we're not sure.
Fair.
And we said it's, this is like a good time for a practice run at a minimum, or maybe like actually someone will misuse it. It certainly got reported as us saying this is too dangerous, but we definitely never said that.
Fake news?
Fake news.
Yeah. Your AI wrote that.
Exactly.
So I think what we said is publication norms deserve a conversation, and that I think we'll stand by very strongly.
Yep. And I think that worked. We're now at a stage where people have, there's really this industry working group that's thinking about these problems, and that we've seen various people replicate the model, but also hold it back. Because it's, and to some extent, it's not about GPT-2. It's about scaling this model up.
GPT-20.
Exactly.
GPT-20 will be dangerous, or will be capable of misuse.
That's right. And so I think that it's so important that you have the norms in place. I'm actually kind of glad that we took a lot of anger and ridicule and whatever emotions people wanted to pour our way. The funny thing is there's also a lot of support and people who, it's funny, I tweeted something about that recycling thing, and someone replied to that and got a whole lot of likes saying, I can't believe these people aren't taking this seriously. Why do they think this is funny? And I looked at that and I was like, exactly why we're taking this seriously.
Got it. When are you going to roll out the full model? When are you going to show that to the world?
So, my expectation, if everything goes, if nothing crazy happens, is within the next couple months. If you look at the history of our ramp, that we basically release the next version, get some data, see how people are using it, and then go from there.
And internally, you already have GPT-10 that you're not showing yet?
We do not comment on unreleased projects.
3, 4?
Something
Nothing?
like that.
All right. All of this work you've been doing on the multi-agent, the GPT, it's all still within not the AGI realm. How does this work get you there?
Yeah, so the way that we think about progress, right? I think the way that sort of in science you normally think about your progress is about ideas. Right, that you really are building up this ladder of, okay, I came up with this theory that explains these phenomena and simplifies everything, and now I can make the next theory, and eventually you get to whatever applications you want. The way that we think about AI, I think we take much more of almost a startup mindset to it, is to think about capability. We think of it as, can we solve this super hard challenge? And in doing so, we think we'll generate these general purpose methods that can be reused elsewhere. And so, for example, we built a system that beat the world champions at the complex video game Dota 2. We actually took that exact same training system, pointed it at robotics to solve this robotic hand problem that no one had been able to solve. And so I think the way that I think about it is, yeah, for sure, everything we generate still has limitations, but somehow they're becoming more powerful. They're able to do things that are years ahead of when we thought would be possible. And as long as we're on that ramp, then I think we're being successful.
Do you think that's enough, just making the current methods better, or do you need a completely new technology at some point?
So I think there's only one way to find out.
Okay.
Like our hope, and honestly, our hope with Dota was that we would find our current methods would hit a wall. We'd scale everything up, we'd push it as far as we could, and it just wouldn't do it. And that, I think, is the current unsolved challenge in AI, is trying to find a real task that we just can't solve through pushing all existing methods.
We have to fail at something to know what to do next. But I would say if you look at capabilities, stuff like Dota, the multi-agent, the robot, given a goal and a simulator, we can solve that. Mm-hmm. And if you look at stuff like GPT-2, given a massive information, we can understand it. And those are two pretty powerful capabilities towards intelligence.
That's right. Now, there's something that's funny about GPT-2, is GPT-2 is terrible at math. You ask it to add some numbers, it just starts making stuff up.
Because the data you fed it just has nothing to do with math.
Exactly, right? And maybe if you just feed some data that has to do with math, it'll work. But maybe we're missing reasoning. Maybe that's something that's not there. And so right now, we don't really know that answer. And that's one thing that we're really trying to discover.
Sure. It can write a book at this point.
That's right.
Something, right?
Yeah. So I think maybe a good thing to wrap it up is I brought on stage this book. It's not written by a human. This was written by GPT-2 and illustrated by a human, but you can kind of look through it and see if I can get it in the camera properly. And you can kind of see that it's got lots of nice, game mechanics for this RPG game that it wrote. It's got lots of nice lists of different elves and items and things like that. And I think that this shows you why these technologies are amazing today, is that you can actually work with them in order to build artifacts or to build creative things that humans wouldn't be able to do on their own.
So that AI is a bit of a nerd.
Turns out.
What's next? What's the next big step you're expecting to see?
Continue the ramp. I think that reasoning is a good example of a technology that no one's ever seen. I think that GPT-2 is on the cusp of having machines that we can actually talk to and can understand us. But we're not quite there. And I think that there's work that we and everyone else in the field are trying to do to get there.
Got it. You happy about your move?
Yes.
Good. I'm happy about the interview. Thanks, guys.
Thank you.
Thank you so much.
Thank you.
Does everybody feel like their brain's bigger now? No, we don't laugh at your jokes, Jordan. Thanks, guys. Love you too. Thank you. Green shirt, you're my new fave. Okay, on the Extra Crunch stage at 11, how to build a secure startup without slowing growth. That'll be with Heather Adkins, who's the Senior Director of Info Security at Google, Jennifer Sunshine Stevens, CEO at IO Active, and Doug Song, who's the co-founder and general manager at Duo. It's going to be a lot of fun. The last time that we had our next guest, he brought a little puppy on stage, and I was just thinking how nice it would be to cuddle with a husky, kind of like the husky from Game of Thrones. You guys watch Game of Thrones? Nobody gives a shit what I'm saying up here. So let's just do it. How about that? How about flying taxis? Does that excite you? Anybody excited by flying cars? Okay, cool. Well, let's talk about flying cars then. Please welcome to the stage the CEO of Kitty Hawk, Sebastian Thrun, and your moderator, Kirsten Korosek. Warm welcome, please.
All right, well, Game of Thrones doesn't excite anyone, but apparently flying cars does. So we're in the right spot. We have the right group of people here. Sebastian, thanks so much for coming back to Disrupt. You are pretty sure part of the Disrupt family now. I think you've been on stage more times than I have.
I love this conference, and it's so great to see such a great audience today.
Yeah, he's telling you to applaud. He loves the audience.
I should applaud.
All right. All right, well, as Jordan mentioned, 2 years ago, you were on our stage, and you brought the puppy in a baby Bjorn on stage, right? And but at that time, you said that flying cars will be the hot new thing. And I've been covering bold predictions like this for a long time. And here's how it looks to me. A lot of companies are pursuing flying cars now. But it doesn't appear that we're any closer to getting people in these vehicles. Am I wrong about that?
Look, any technology, specifically hardware, takes a while, right? You want to make sure it's really, really, really safe. But that doesn't deter us from the vision to understand that if we take daily traffic from the ground a few hundred feet up in the air, we could literally free the world from traffic. We have technology that can get you from here to San Jose in 15 minutes, from here to UC Berkeley in like 4 minutes. So now the onus is to really make it safe, work the regulatory difficulties and challenges, find a way to operate them safely, and then get social acceptance and see if we can change the world.
But what about autonomous vehicles? That used to be a thing, or your thing at least. What happened with autonomous vehicles? Are you over that now?
I'm not working on it myself. I would say the vehicles we built are also autonomous. They're just a bit higher up in the air. And if you go a bit higher in the air, then all the difficulties with not hitting stuff like children and bicycles and cars and so on just vanishes.
Just buildings, maybe, right?
Yeah, go above the buildings, go above the trees, like go where the helicopters are.
Okay.
And I think when there are vehicles that do this, they're called helicopters, they're just incredibly noisy. And they're typically incredibly expensive, they're for rich people. Napa last year illegalized personalized helicopter flights for the reason they're too noisy. So one of the big questions for us has been, can we make them quiet?
So I think it's important at this point to explain. Tell me what a flying car is. How is that different from a plane? Because we like to throw these words around, but it's not really clear.
Yeah, it's not a car. And I personally don't like the word flying car, but it's very catchy. The technical term is called eVTOL. These are typically electrically propelled vehicles. They can take off and land vertically. It's eVTOL, it's vertical takeoff and landing. So you don't need an airport. And then they fly very much like a regular plane.
Okay, so I want to do a poll really quickly. How many people here think that flying cars, even though we don't like that term, but flying cars are going to be here in 20 years, either in San Francisco or, okay. Now, what about in 10 years? Okay, what about in 5 years? Fewer hands, but
Yeah.
is your hand up for 5 years?
I happily lived it for 5 years. I'm super impatient. I've flown one.
Well, okay, the company that you're running is one of, as I mentioned earlier, one of many flying car companies that have emerged in the past few years, and I'm wondering what Kitty Hawk is optimizing for. What are you going to do to survive?
Well, it's a wide open market. It's way too early to call a winner. We focus foremost, of course, on safety, like everybody else, there's no question. Secondly, on noise, to be honest. We feel that for this to be acceptable, it has to be basically imperceptible, it has to be able to not disrupt you. And I even find drones noisy, to be honest. They're way too noisy. They're annoying. So I want to be so quiet like the wind.
Well, it's interesting that you brought that up because Kitty Hawk has actually 3 vehicles. We know of 2. One is the Flyer and one is Cora. But a week ago, I got a chance to see a secret project that you've been working on for a couple of years that's called Heavyside. And it is quiet. So tell me, what is Heavyside? And once you finish describing it, I think we have a video we'll show. But why don't you kick things off? What is Heavyside?
Heavyside is a project led by Damon van der Lind, a genius engineer. And it's a mixture between a fixed-wing aircraft and a drone. It takes off like a drone. The noise level is like a leaf blower. It's not super quiet. But the moment it goes into forward flight, it becomes super quiet and super efficient. Just last week, we were able to fly this vehicle over a distance over 102 miles total, with 30% reserve still in the batteries. So it's, for me, an existence proof, a prototype that shows that the technology is generally feasible.
So does anyone want to see it? Should we show the video? All right, let's show the video. This is what Kitty Hawk's been working on. And so I can't say where, as we wait for the video to come up, I can't say where it was, but I do know that it was complicated for me to get there.
Yeah.
And we did a little bit of a test. We compared the noise of a helicopter to the Heavyside.
Yeah.
And let's see, are we showing it?
No.
All right, here we go.
Project Heaviside is Kitty Hawk's latest electric VTOL vehicle. It is fast, small, and exceedingly quiet. Heaviside is 100 times quieter than a regular helicopter. Introducing Heaviside. We're building the future without adding in the noise.
Cool.
Thank you.
So I didn't have that soundtrack when I got to see it, but I can say that it was quite quiet, and it was quieter than a helicopter, and we had a decibel meter in hand to measure, and there was sound.
There was sound, yeah. You saw it at 600 feet. When it goes to like 1,500 feet, it's literally as quiet as it gets. So 38 decibels in comparison. If you step out in San Francisco, the city is about 70 decibels. And if you are next to Google and there's no car coming by, it's 50 decibels. And if you climb Mount Whitney, it's about 40 decibels. So that's roughly the noise levels.
Okay, so when are we going to see this? When is this going to be publicly available?
Well, you just made it public. It's the very moment.
Well, okay. When are we going to be able to either buy it or ride in it?
Yeah, so there's hurdles. There is a regulatory hurdle. The FAA is very open-minded. We've just hired as a part-time advisor the former administrator from the FAA, Mike Huerta, who's assisting us navigating this. The general question is, what would happen if there's like 10,000 in the air? How do we keep the air safe? And what will pilots do? Who will operate those? And how do you make sure they don't bump into each other? And then there's a general question of societal acceptance. We want this technology to be for everybody. We want it to be available for everybody, not just for rich people. Ideally, it becomes some sort of an air taxi system that you go to your phone and you summon the Kitty Hawk app, and up comes your Heaviside or your Cora or your Flyer, and you hop in and you go where you want to go.
So the Heaviside just fits one person. I was able to sit in it. Some of it, the interface was not in there. But I'm wondering how do you really actually make this not just for the super rich? Because it's quite stunning. It's beautiful. I'm trying to imagine how you get the cost down. You mentioned through some sort of shared network, but really, how are you going to do that? I mean, what would the cost potentially be?
Yeah, so there's the today and then there's the tomorrow.
All right.
The today, obviously, this thing is incredibly expensive, and we're funding it with Larry's money and other money. From the cost perspective, there's the vehicle itself, and it weighs maybe a third or a quarter of a car. And it should, in principle, be not more expensive per pound than a car when mass manufactured. From the energy side, almost all the energy is being used for drag and not for lift. Lift is this thing that keeps you up here. That's the extra price you pay for having not wheels and being on the ground. But drag is the energy you use to combat the air. Because we can go on a straight line, we believe it will be roughly a third of the energy cost per mile as a Tesla.
As a Tesla?
As a Tesla, yeah.
Okay.
And Tesla is very efficient.
So what do you envision for this system, specifically with the Heaviside, within a city, let's say like San Francisco, where we are today? Do you see this as a commuter vehicle, solely as a commuter vehicle, whereas the Flyer and Cora have different use cases?
Yeah, so I mean, from a specs perspective, range, say 100 miles plus reserves, let's say about 10 times as fast as ground transportation. The average car is about 16, 18 miles per hour. So you can go from here, as I mentioned, to Berkeley in a few minutes. I would imagine there's utility. That I hope all of you, when you're stuck in traffic, remember this little presentation this morning and imagine what you could do if you just fly up a few feet. How cool that would be. So then the question really is, how do we get it safely integrated? And there's obviously work to be done. People talk of vertiports. Ideally, I would love to be able to land in any street corner. That's going to be tricky today, in part because there's also these overhead wires and so on. So there's some work that has to be done to integrate this new modality into our lives. But look, 100 years ago, we were all about horses, right? And then the car, 120 years ago, and then someone invented the car, and all of a sudden, I think New York City flipped from all horses to all cars within 20 or 30 years. And then we built paved roads, and we built gas stations and garages and so on. So when there's a fundamentally better capability to get ourselves around, I think we're going to find ways to use it.
So do you envision being able to walk out on a street corner, like you said, and have an app and hail it? Or do you see this more as central points, hubs, if you will, where you go and that's where you pick up your heavy side?
With all three projects, Flyer, Core, and Heavyside, we want to build an air taxi system. And I believe an air taxi system is better because it gets much higher utilization per vehicle. It pains me that I walk on the street in San Francisco and there's so many parked cars. What an amazing waste. And even today with Getaround and Uber and Lyft, we are now beginning to use cars more efficiently. With self-driving cars, we can do this even more efficiently with Waymo and Aptiv and these companies. And with flying cars, there's no exception. I believe if we can share those as an air taxi system, the cost per mile can go to something like 30 cents per mile eventually, which is going to halve as car ownership.
What's the big challenge then? I mean, you mentioned regulations. I mean, is that it? Is that the last?
It's a big one. The FAA has been entrusted by Congress to manage the national airspace, and it's basically anything that you can't reach with your hand on the ground. In the past, there has been at most 6, 7, 8 vehicles in an area at the same time. If you look up here, we are between 3 major airports. You're going to see at most 10 aircraft. Now, not just us, Amazon, Project Wing, and Google come along and say, how about 10,000? It turns out there's no technology today that could manage 10,000 vehicles safely yet, according to the standards that the FAA wants to see. And we all know that accidents in aviation are much more tragic in some way than accidents on the ground. So the trick is going to be to work with authorities, with other technology companies, to really redesign and redefine how we manage airspace. I'm hopeful because the sky is empty. You can look up and there's nothing there. So the capability is there. We have the highways. We have the volume. It's just a way to work with the government, with authorities to find ways to manage it responsibly.
So you mentioned that former FAA Administrator Mike Huerta, who was there for 5 years, is going to be advising you. So is he going to be directly working with the FAA in terms of helping craft rules around this, or for the industry as a whole? Or is his role going to be more about just helping Kitty Hawk? I mean, what is his role over there?
For the time being, he's just helping us. There's a limit as to what he can do when he just left the FAA. But overall, what I really see is it's a broad dialogue. We talk to the FAA almost daily. We're talking to the New Zealand equivalent, to CAA, almost daily. And I can tell you, at the core of the conversation is a 100% compliance and interest. Both the FAA and us want to be safe. It doesn't help either them or us if what we build is unsafe. And both of us want to be innovative, turns out. Every person that I meet in the government wants to drive the company forward, has a vision for the company. The difference is we are technologists, so we can build technology, but we don't have the same skill set as the FAA. We don't have the same experience. As you might have heard, we recently started a strategic partnership with Boeing and Quora, specifically to bring in a 103-year-old, incredibly experienced company to assist us in making this technology safe and safely go to the market. To me, this is a great opportunity for dialogue. I've done the same for self-driving cars before. My team started all the legislative work in Nevada, in California, in Florida, other places. We found the DMV, the CHP, all these institutions incredibly forward-looking and incredibly thoughtful, and this will be no exception.
You mentioned air traffic control, and I'm wondering what sort of innovation, do you see that as something becoming more automated? Because there is pressure on the people who do air traffic control.
Yeah, so I'm a pilot myself. I would say the interaction with ATC, while it's safe, is incredibly cumbersome. There's very obvious way to automate things. When you think about flight as the future, one of the nice things is we can actually instrument every flying vehicle with a transponder. We can't do the same on the ground. We can't instrument every cat and every dog with a transponder, but in the air we can do this. So we can conceivably have a situation where we know where everybody is and where everybody is going. And that is a technology that is imminently doable, right? Today, we have multiple billions of cell phones that report where they are, so we know where our cell phones are. It's not that hard to imagine we do the same 400 or 500 feet up in the air. And once that happens, I would believe that aviation will become an automated field. I would believe that you don't want to all fly manually. You want to be flown. You don't want to be pilots, and you don't want to be in a sea of 10,000 aircraft at the same time. You want to just be flown. And the technology for flying, autonomous flying, is so much easier than for self-driving cars. I actually believe you're going to be done with self-flying vehicles long before we're done with self-driving cars.
Okay, that's a bold prediction, and we'll have to revisit that when we, maybe in a couple of years or something.
2 years from now.
When do you think that that's going to be achieved? I mean, not just talking about Kitty Hawk, but being able to achieve what you just laid out.
I think the best progress we've seen so far is actually in the country of New Zealand, where we've been working for 3 years with Cora and now working alongside Boeing, where the regulators have put forward a specific path towards remotely piloted air taxi systems, first for recreational use and thereafter for commercial use. And the timeline right now is in the order of 3 to 5 years. But there's a specific path of requirements that are now laid out, which really helps. In the US, many companies are talking to the FAA. There's a lot of interest. We're not quite as advanced yet. But then also the US is much, much, much bigger.
Right. One of the things you were talking about earlier was, how you see all these parked cars and that's sort of a waste, and then you look up in the skies and there's all this opportunity. Aren't we going to just be taking, if you're successful and if other companies are successful, aren't we just taking the congestion that we have on the streets and just lifting it up and putting it into the sky?
Yeah, that's where the cool stuff comes in. 1D versus 3D, okay? So for the non-mathematical people, on 101, you have like 4 lanes and you're cramped into 4 lanes. And if you want to make 8 lanes, that's going to be a $100 billion effort per mile or something like this. In the sky, if you want to add 100 vertical lanes, that's a software fix. You recompile, right? You can make as many lanes this way and as many lanes this way as you want. So on the ground, if 2 cars approach an intersection, one has to stop, call a stop sign or a traffic light. In the sky, you can just do that. So the volume of 3D is so much bigger, even if all of us were in the sky all the time. And now add to this the following. With the Heaviside project, we're literally 10 times as fast, which means your time in the sky would be 1/10 of what it was to be on the ground. If today you could take 90% of the cars away, there wouldn't be any congestion. So to me, from the math perspective, this is a very solvable problem.
Solvable, but it will definitely change the skylines. I mean, San Francisco will look completely different than it has ever looked before.
Yeah, and how cool would that be? I mean, if you could just hop into something and fly over to Berkeley in a few minutes or to San Francisco Airport in like 2 minutes, as opposed to being stuck in traffic, wouldn't that be cool? We believe that the typical American worker commutes for about something like 238 or so hours a year, okay? If we can get this to 23 hours, wouldn't that be cool? Give you back like 200 hours of commute time.
So do you think people are willing to give up maybe how they see their cities today and then replace it with, maybe filling it with a lot of Heavisides?
Yeah, so let me ask the audience, if I could give you a vehicle for the same cost of a car that gets you around 10 times as fast, and you're in the air, you can look down, and it's safe, who would use it? Okay, and who would not use it?
Ooh,
one.
I see one hand.
Okay, good. Wise man. Good. Maybe you walk to work.
All right, we're out of time, but I do have one question for you. So you're often on the cutting edge of technology, and you've been a part of X and Google Self-Driving Project, and Kitty Hawk, in fact, has been is backed by Google co-founder Larry Page. So I'm wondering, when you and Larry get together and you brainstorm, what do you dream of building or solving that you haven't already?
Oh my God. So right now I can tell you I'm 100% committed to making the flying car a reality. I think it's going to be not just a massive business, it's going to be a massive benefit to society to be able to get around much faster. I have no plans past this, to be honest.
Okay.
I'm going to be
So
stuck
2
with this
years
for a
from now,
while.
when you're back on stage, we're going to be talking about flying cars. Maybe we'll have one on stage.
Absolutely, you bet.
Okay,
Thank
great.
you, Kirsten.
Thanks so much.
Thank you.
Awesome. More mobility for the folks who like mobility. Anybody ridden a scooter in the past few weeks? Anybody gotten injured on a scooter in the past few weeks? Okay, cautious bunch. I appreciate that. Risk averse. It's good. Ha ha ha. Good joke, Jordan. Cool. Okay, welcome to the stage the founder and CEO of Bird, Travis VanderZanden, and your moderator, Megan Rose Dickey. Warm welcome, please. Careful.
See how do I lock that up? All right, that was pretty seamless.
Great ride, yeah. They were a little nervous backstage.
Oh, yeah, they were, but it all worked out. So the title of this session is actually pretty perfect. I scooted in, and you've actually just announced a Series D round of funding at what I've heard at a $2.5 billion valuation.
Yeah, so we formally announced our Series D fundraising today, $275 million round, co-led by CDPQ and Sequoia, and it was actually a $2.5 billion pre-money valuation. We're super proud of the team. It's just a milestone for us, but we are very proud of the team. About 12 months ago, we pivoted the entire company from a growth at all cost company in a lot of ways, and spent the last year really focusing on the unit economics of the business. And so we're really proud of the team, and we think this round is really a testament to all of their hard work in that shift, because it wasn't an easy transition, and the world is definitely changing from a tech investment standpoint, as many of you know, and we're fortunate to have raised the round from some great investors.
Yeah, so I mean, unit economics has definitely been a major element of the shared electric scooter industry. And so, what does unit economics mean to you? And does Bird now have positive unit economics?
Yeah, and I know there's a lot of different definitions of unit economics, and I do think it's, historically, tech companies have looked at the top line and revenue, and I think partially that's because it's what everybody can compare apples to apples. Unit economics tends to be a little fuzzy, and there's a lot of gray area. We try to take a very punitive view on unit economics, and for us, that's fully loaded cost per ride, including the depreciation of the vehicle, which of course is one of the bigger costs for us. And so for the last year, we've just been really laser focused on optimizing and being positive on the unit economics. We are positive on every ride now across the globe, and so we're very excited about that.
And so that's on every ride, including the ones from the third-party scooter providers? Or is it just on the custom, or the ones that you've made?
On Bird Platform, our economics are a little different, and we can talk about that, but Bird Platform is basically, our way to help take the Bird mission to the world. We recognize that we don't know every city in every part of the world, and we don't have the capital to go to every city, and so we've really partnered with local entrepreneurs to take Bird into a lot of these local markets, and the economics for us are a little different in that case. It's actually looks and feels a lot more like a SaaS business, because we don't have the CapEx outlay, and we actually just take a rev share on every single ride that happens, and so the economics we're finding are quite good. In a lot of these longer tail cities, there's not a lot of competition, and so the economics work well for the partners as well.
So in July, you had tweeted that Bird has positive unit economics across its custom scooter models. And so now you're saying actually across all of the models, you're seeing positive unit economics.
Yeah, so early in the summertime, we were about 80% of our rides were on the custom designed Bird scooters. And now I think it's like in the 99% plus range of all rides are actually on the Bird design. So we phased out all of the old retail scooters, which we're excited about. When we first started the business, nobody was manufacturing ruggedized electric scooters. And so when I first started Bird, I didn't know anybody who was even riding electric scooters. And so we actually would import the Xiaomi scooters, the retail scooters from Alibaba. And they were great to prove out product market fit, but they were incredibly fragile, and the economics didn't work very well. So we're excited to now officially have those phased out of the ecosystem.
Yeah, and I mean, I think a lot of people have wondered, just in regards to scooters, like, is venture capital just subsidizing the entire business? So I'm wondering, at what point do you think Bird will achieve profitability?
Well, look, I think that's part of the disconnect we've seen in the category is a lot of folks, look historically at the economics on the retail scooters, and we always knew the economics there weren't going to be good, and they certainly were negative on the unit economics. Those old retail scooters only lasted about 3 months on average. We've been hard at work on designing our own hardware, so you see up here on stage the Bird 1s in different colors, and then the Bird 2, which is now already rolling out in LA. And the Bird 1s are lasting about 15 months on average, and so the difference in the economics is pretty phenomenal when you come out with better hardware and you continue to get better at operating. And so today we are excited that the unit economics are positive. Now we certainly have a lot of work to do on kind of OpEx as the next step for us as a company. So we're not fully loaded profitable yet, but we are profitable at the ride level and at the city level.
Okay. Yeah, and I mean, we talked a little bit about this backstage, but just with everything going on between like WeWork and Peloton and just all of these companies that are now either looking to go public and then maybe like pulling back from it, how does that make you think about your business and maybe the need to raise more funding or not raise more funding at this point?
Yeah. Well, look, I think it's one of the reasons I'm very glad that we were fortunate to have a board last year and a lot of smart advisors that say, hey, look, now's the time to shift to unit economics. And so we really made that shift early in the company's life cycle. We had only been operating about 15 months by the time we went from all in on growth to all in on unit economics. It was a very fast transition. In a lot of ways, even though that was a difficult transition, we were still relatively young as a company, and it was achievable. I do think the longer you wait to make that transition, the harder it becomes, and so I think you're seeing that with some of the companies that have stayed private for maybe 10 years, and at that point it's very difficult to steer the ship towards profitability, and so we really wanted to start that early in our life cycle.
So did you make that shift from growth to focusing on unit economics earlier than you anticipated?
We did make it earlier than I would have anticipated. I came from the ride-sharing world, obviously, and I think that was a very different world. And for us, we had a lot of our board members who are very smart folks that have seen a lot of different industries saying last winter, we got to shift, we got to go all in on unit economics. And we had a feeling as well that the world was going to change this year, and so we did go all in, and it is different in that regard. But I think, because the tech investment community is changing and reacting quickly to the public markets, I think it's very difficult if you're a growth stage company, a growth at all cost company burning hundreds of millions of dollars with negative unit economics. It's going to be very difficult to get funding moving forward, and that was a big reason why we went all in on the unit economics. And I think this is going to be a healthy reset for the tech community.
Yeah, and I'm curious about what were your conversations with investors for this most recent round of funding?
Well, look, we investors, have seen a lot of the press in on the category and looked at some of the old kind of retail stuff. But then when they dig in on the data on the new scooters, they're like, "Wow, this is fundamentally a different business." And I think folks were excited about that. I think the fact that the unit economics are positive, folks are excited about. We're no longer the biggest micromobility company from a top-line growth standpoint, but we're by far the best on the unit economics side, and I think investors seem to care about that the most, which is great.
And so how do you know that you're the best on unit economics?
Well, it's difficult to know for sure. Most investors are incredibly respectful of not sharing data, obviously, with competitors and things, but we consistently hear from investors that are comparing the industry that we, as far as they can tell, the only player in the industry with positive unit economics. And so that's positive reinforcement for us and a sign that we need to continue to focus on that as a company. Sometimes I'm an ex-growth guy, and sometimes it's painful for me because I actually want to see us growing across the world, and I want to take Bird and the mission to the world as quickly as possible. But so the challenge is trying to stay disciplined, and even educating the company on profitability is more important than growth sometimes can be challenging because they're seeing a lot of the press headlines about top line, right?
Yeah, and so I want to get a little bit more local. So I think it was in July, Bird officially acquired Scoot for $25 million or so. Was that's the number?
Well, we won't comment on the number, but it's a little off. But
it's a little okay. Higher or lower?
We won't. Let's just say it's in the ballpark.
Okay. So in the ballpark of $25 million, what made Scoot worth $25 million, give or take, to Bird?
Well, look, I first had dinner with Michael, the founder of Scoot, last spring, and recognized in that dinner that he's incredibly passionate about what Bird is passionate about, which is removing cars from the road and reducing carbon emissions and traffic. And Scoot, as many people know, was really the first electric moped sharing company in San Francisco years ago. I think it was 5, 6, maybe 7 years ago or something. And so they had the most experience doing this. Now we had a different form factor and a different way and different vehicle type. But one of the things we were very excited about was the team was aligned with our mission and very passionate, but also they had the most experience in the world working with cities on micromobility, and we thought that was super valuable, and we've really infused that culture into Bird, and I think it's made us a lot stronger as a result.
Mm-hmm. And I remember chatting with Michael Keating, the CEO of Scoot, when they actually were first granted a permit to operate here in San Francisco. And he mentioned that Scoot had been looking at ways to integrate helmets onto its kick scooters. Is that something that Scoot under Bird is still pursuing?
Yeah, definitely we are. I mean, we do think helmets make sense to wear. It turns out on an electric scooter, as you can see here, there's the form factor is pretty small, and trying to figure out the best way to mount a helmet on it is challenging. And you can mount a helmet on it. It's just when we in our industry, when you put things out on the road, it tends to get damaged incredibly fast. And so really what the hard part is figuring out how do you make sure it doesn't get damaged or the helmets don't get stolen at scale, but it is still an R&D project. And certainly on the moped business, we do have 2 helmets. As you know, I think you've ridden the Scoots before, 2 helmets in the back cargo box, which we think makes a lot of sense.
Nice. And then, okay, so I think, last week actually, within the last 2 weeks, the city granted another round of permits for electric scooter operators. And so Scoot was granted one, so that's clearly great for you. But I noticed that Bird did not apply for a scooter. And I guess my thinking was, oh, well, if both Bird and Scoot had applied and both gotten them, then that's like 2 of the 4 operators. So I'm wondering, why didn't Bird also apply for a permit?
Yeah, so look, our thinking was Scoot has a great relationship in San Francisco, a great brand in San Francisco, and we felt like it made sense just to apply with the Scoot brand and continue to operate that in San Francisco. We could have applied, I guess, 2 times, but we didn't want to get greedy with it. We felt like the Scoot brand was already well received in the city of San Francisco, and decided to go that direction.
And long term, with the acquisition of Scoot, I mean, is the plan to always let it be its own brand, or do you see it becoming one brand in the end, or what's your vision for that?
We do want the Scoot brand to live on. We think it is a strong brand, in particular with cities, and so we want it to live on. It'll certainly live on in San Francisco, and then we're still trying to figure out in other cities what makes the most sense for the brand.
Mm-hmm. Yeah, and within the last 6 months or so, there were kind of talks that Uber was really looking to buy Bird. Was that true? Were you in talks with Uber?
No, I don't think Uber. We were never in serious talks with Uber. Certainly, we're talking with everybody in the industry, and we do talk to competitors from time to time. But there was never serious conversations to those regards. I think the industry is still so new, and I think folks are trying to figure out, how does this shake out over the long run. I also think this is one of these unique industries where it looks really easy from the outside, and I think a lot of companies are like this, where they look easy from the outside, and then you get in and you're like, wow, there's a lot of complexity here. I always like to say it's pretty easy to run a scooter sharing company in one city and lose over $10 per ride. Mm-hmm. The challenge is globally scaled scooter company and actually making money per ride, and that's really the big challenge. And I think the next 12 months will be interesting to see, how the industry really shakes out.
Yeah, and I mean, do you see Bird acquiring other companies in this space, or maybe one day selling to a larger company?
Scoot was, we think, a unique situation. We don't have plans to acquire other operators. Fortunately, we're the furthest ahead on the vehicle side, we feel like, and feel great about our hardware program. And we think we have a very good city relations team now. And so I think, taking that to the world for us is really the next step, and we don't anticipate any other operator acquisitions at this time.
Mm-hmm. Yeah. And so you touched on this a little bit earlier, but so Bird Platform, which is essentially like a franchise model, I'm wondering, mean, so you have Bird Platform, you have the shared electric scooter model, you also sell directly to customers, and then you have the monthly rentals. I'm curious which of those business models you're finding the most success with.
Mm-hmm. Well, the sharing business was the original business, as most of you know, and we think that'll continue to be the core business for us moving forward. We think most riders will actually want to rent by the minute, and so we continue to think that'll be the core business. But Bird's mission is to remove cars from the road, reduce traffic, reduce carbon emissions, and so we want to be there to help riders across the world really kick the addiction to cars, whether it's sharing, renting by the month, owning. Bird Platform, we think all those things fit very nicely with our mission, but we do think the sharing business will continue to be the core business.
Okay, and do you think you'll keep all of those businesses, or maybe are these experiments, or do you imagine these being more like long-term services and initiatives with Bird?
Yeah, I think there'll be long-term initiatives. So far, they're off to a great start. It's kind of interesting to think about, when Uber first started, ride sharing. Car ownership had already existed for roughly 100 years or so. And then, really trying to educate people to do sharing instead of ownership. With micromobility, it's really a fresh start. Not a lot of people own short-range electric vehicles. And so we think for that reason, vast majority of folks will do sharing, although some percentage prefer to own and rent by the month, and we want to make sure that we serve those customers as well.
Mm-hmm. Yeah, I mean, because I think there has been this ongoing conversation around okay, is it going to be the shared model that sticks around, or is it going to be ownership? So I guess by having your feet kind of in both areas, you can kind of figure that out firsthand.
Yeah, exactly, and it fits with our mission, and it's great to offer the different colors as well for sale. We had some fun with the white and the electric rose. That folks seem to really like, and so we think it's a great business for us moving forward.
Yeah, and I mean, you definitely have a lot of vehicles too. So you have the Bird 1 and the Bird 2, and then you actually announced recently a two-seater. It's like a hybrid bike, moped, scooter thing. You can probably explain it better.
Yeah, we call it the Bird Cruiser, and part of the reason we call it a cruiser is it does kind of fit in between a few different categories, and really it could be an e-moped or an e-bike depending on whether it has pedals or pigs on it. But look, for us, we really want to try to help reduce car trips, and the scooters was a great first vehicle towards that mission, but most scooter rides tend to be 1 to 2 miles. Mm-hmm. And we think the cruiser will be nice between the kind of 2 to 5 mile trips. And so we think it really is the missing piece in the portfolio of the mission of trying to reduce the car trips. And so we are very excited about the cruiser.
Okay, and those would also be shared, like part of the shared model,
That's right.
Okay,
yeah, they'll be available via sharing. Yeah.
Hmm. So I guess who are you envisioning as a customer for that type of vehicle? Are you envisioning just really good friends or couples or?
Well, look, I think that with the cruiser, it's kind of interesting. I think the use case is if it's longer distance trip. So if you're going maybe 4 miles, you probably want to use the cruiser instead of a kick scooter. And then just anecdotally, we've talked to folks that maybe are a little bit older that don't like using the kick scooters that we think would prefer to use the cruiser is kind of what we hear anecdotally. And I know myself, I kind of go in between depending on really the length of the trip.
Mm-hmm. Yeah, and so obviously you have raised a ton of money for Bird, and I have heard that maybe you've taken some money off of the table. Is that true?
There was some money taken off the table. We were in a position last summer. It was a really weird, unique position where we kept increasing the size of the round of the Series C, and we kept being oversubscribed. Mm-hmm. And we had gotten to the point where we basically, the board didn't want to take any more capital and take any more dilution. Mm-hmm. And there were still some strategics out there that wanted to invest, and we felt like it made sense at the time. But look, it's something that I know a lot of founders do over time, and but it was a little bit of a unique situation because we were so oversubscribed.
Mm-hmm. Yeah, I mean, I think some might say that it may suggest that you're not long on the vision of Bird, But so how would you respond to that?
Well, anybody knows me knows that I am very long and super passionate about the mission. The reason I get up every morning is I really believe that we need a world with fewer cars, and that's what gets me excited every morning to come into the office. And so I'm definitely in it for the long haul, and we do see Bird as a long-term standalone independent company. And that's one of the reasons we're so focused on the unit economics and the path to profitability is we want this to be a standalone company. We don't want this to be a quick flip company.
Yeah, and we're actually out of time, but one last thing. So just with the recent influx of funding, so what's the plan for that over the next year? How are you going to, what are you going to do with that funding?
Yeah, so it's going to be used to continue to scale, to more cities. Europe in particular is we're gonna invest more heavily in Europe, but continue to take basically our 3 business lines now to the world. And because we have strong unit economics now, we think this cash will actually last us quite a bit of time. And so we feel good. Nobody really knows what's going to happen at the macro level, and are we heading to recession or not? And I know that's a big debate. We want to make sure the company's well financed for the next few years.
Yeah, have a bit of a safety net just in case.
Exactly. Yeah, exactly.
Cool. Well, thanks for taking the time, Travis.
Awesome. Thanks
really
for having me.
It. Yeah.
It's
Do
great
you want to
to
scoot off or?
I'll let you do it. I'll give you the honors.
All right. It's just. Sorry, I don't want to hit you, Jordan.
Please be careful. There's stairs over there. I don't know what her plan is. Okay, coming up next on the Q&A stage, collaborating with corporates with Chris Bartlett, SVO of Corporate Development, Head of Verizon Ventures, Quinn Lee, SVP Global Head of Qualcomm, and Lee Radford, VP General Manager, Procter & Gamble Venture Studios. If you have questions for those folks in particular, now's the time. Head on over. Anybody in the audience play video games? Cool, me too. I'll kick your ass. Our next guests also play quite a bit of video games and make a lot of money off of it. So with that, I'd like you to please welcome to the stage founder of SP Products, Scooter Braun, and founder and CEO of 100 Thieves, Matthew Nadeshot Hogg. I'll be your moderator. Please welcome him. That's yours.
How you doing?
Good.
Hey.
A fun little awkward handshake. Okay.
I think we did great. It was awesome.
So raise your hand if you know what 100 Thieves is. Anybody familiar in the audience? It's probably weird for you.
There's a few in there.
There are a couple.
There's going to be a lot more, hopefully, in a couple years.
Yeah, or maybe by the end of the afternoon.
That makes more sense.
Oh. You're probably used to going to a lot of these like gaming conferences where you get mobbed.
Yeah.
Do you feel weird being like unnoticed?
No, absolutely not. Well, I promise you I'm not that famous.
Probably enjoy it.
I definitely have my niche community. But I always enjoy talking about video games and the business that we're in with people that are unaware of what's happening in the gaming industry as a whole. And it's a great opportunity to inform people of just this emerging business that we're trying to build.
Yeah. I have a lot to ask Nade, so I wanted to ask you, like, you're an investor in 100 Thieves and a co-owner. What drew you to this business?
Well, first, I'm just here for emotional support.
Yeah.
I know most of your questions are for Matt. Look, what I was drawn to was we started looking at the space and realizing that the gaming world is, if you take all of music and all of film combined, gaming is bigger.
Yep.
So we wanted to kind of look at the space and see how we could get in. And we started looking, do we buy a team? Do we create a league? And I said, let's just sit back and kind of watch, and it's a youth-driven business. And we realized when we met Matt, he was looking at it completely differently. He wasn't looking at it as about his professional teams, which they have, but he was looking at it as a brand. 100 Thieves started as an apparel brand.
Mm-hmm.
And I like to bet on founders, and Matt actually was a professional gamer.
Mm-hmm.
And
very successful one.
Very successful, but also someone who believed in this space really early on. And when he goes and he talks to players, he's not going to brag about himself, so I will. 7 years ago, this guy worked at McDonald's and was a 4-year employee while he was a professional gamer, trying to put himself through school. 7 years later, he's an owner and running this large organization where he pays gamers who actually work in his organization millions of dollars.
Yeah.
So when you hear a story like that and you see someone who had that kind of drive from the beginning and really has his finger on the pulse of the culture, you make a bet on them. And I've been friends with Matt ever since.
Thank you, Scooter. And you want to know something that's interesting? If you want to know how much Scooter actually supports 100 Thieves, if you go on his Instagram, he has not taken off his hat.
No.
Since he became a co-owner. I swear to God, every single photo, you cannot find one. If he has a hat on, it's 100 Thieves.
I hope you have a few of them so that they get watched.
I actually have
and stuff.
3 and they just trade and
Okay.
no one has to see how much I'm receiving.
Okay, so let's lay the landscape for these people here. There are 3 pillars to the 100 Thieves business. There's apparel, right? 100 Thieves branded gear, cool shirts, t-shirts, hats. There's esports. You own several different teams that compete at the professional level.
Yep.
They get sponsorships when they win tournaments. And then there's streamers who spend 8 to 12 hours a day putting their stuff up on Twitch and YouTube and bringing in money through that model. Which one generates the most revenue?
Right now, I would say it's a combination between streamers, which we would categorize as entertainment, and then our esports teams that go on stage, wear our jerseys, have logo placements, just like you would see in the NBA or NASCAR, NFL, MLB, just like traditional sports. So our biggest revenue driver is partnerships at this moment in time, but obviously we're hoping we can grow our apparel business and have those operating at the same level of what we would come to expect.
And so, as Scooter said, you're a former pro gamer and you played Call of Duty. This year, Call of Duty moved from a publisher-supported league, Activision, to now a franchised league, and you had to make the very sad announcement that 100 Thieves would not be participating next year in the Call of Duty, I guess it's still called the World League, right?
Yeah.
Call of Duty World League, which is a bummer for me. I've loved watching your team play in the last year. How do you protect your business against, esports is changing, it's growing, it's maturing, things are happening very, very quickly. How do you protect your business against those changes? Not participating in Call of Duty, it's like Call of Duty,
Yeah, I think for me, the game was always close to my chest because it's the title that allowed me to have a career.
Yeah.
And I built my following. I've made all of the friendships that I have to this day through the Call of Duty community since I was 16 years old. So it was a really tough decision to stray away from spending $25 million on a franchise league. It's not that we don't believe in the franchise model because we're a part of League of Legends, which is the biggest esport in the entire world. We paid $10 million to be a part of that league. But for us, Call of Duty is just in a tougher place because the game has been around for a decade. Viewership isn't as growing at the same rate as it used to. I mean, the player base is still pretty high, but it's a franchise that hasn't withstood the test of time to the extent that League of Legends has. And so for us, esports, a lot of people would consider it to be in a bubble or refer to it as a bubble sometimes. And what we're doing is we're hunkering down and really believing in the brand that we're building. Like Scooter said and that you brought up, apparel is a really big aspect of our business. It's what I founded the company as. And we believe that all the entertainment moves that we're making by signing popular streamers and creating original content on YouTube, we want that to grow. We want to invest in the right esports that we think will show return in the near future and long term. And then our apparel, obviously, like I said, we want to continue to grow. So we just have to be disciplined with the way that we spend our money. Just because we've raised our seed series, our Series A and our Series B, a lot of money, we can't just flush it down the drain and start wildly spending just because esports is used as a buzzword or just because Activision thinks that this is what we need to do. That's not going to define our success, and we want to really spend carefully.
Why not just write him a check, Scooter? $25 million.
I don't even know how to respond to that. Look, I think the reason what Matt is saying is correct, and the reason I wouldn't just write a check is because I don't want to be frivolous either.
Yeah.
I think, our goal is to make a 10-year and 20-year plan for where esports and gaming is going. And what we don't want to do is get caught out in the next 2 years and say we're out of money. So right now, we actually don't need to raise any more money. We're well-funded. We're making the right decisions. We're heading towards profitability, in different verticals. And I think that's a very tough decision Matt had to make because Call of Duty is so important to him, and he's so close with these guys on his team, and they won 2 major championships. So what I am excited about is he built the brand to a place where I think a lot of these guys will go to different teams, and you'll still see them wearing the brand 100 Thieves.
Well,
and because that's the most important thing to us, to build a brand that when all this thing kind of gets flushed out and we see where esports and gaming is, 100 Thieves will be standing there as the choice brand for gamers.
Well, and I think also, like, just my 2 cents for whatever it's worth is that 100 Thieves has gotten to the point, even in the short time that's been around, that Call of Duty isn't integral to the popularity of the brand, right? I wanted to talk to you a little bit about like the contracts you have with pro gamers.
Yeah.
So Tfue made some waves earlier this year. He was upset about his contract with FaZe Clan. He felt like it was an unfair contract. What does your contract with your pro players look like?
Well, they're very different depending on the game and depending on what they contribute to the organization. So like our Fortnite players, for example, we pay them tens of thousands of dollars every single month, and we take a percentage of their prize earnings, and obviously we negotiate with their agents and make sure that they are comfortable with the decision that they're making. We advise all of our young players. Our Fortnite competitors are under the age of 18.
Yeah.
So we thoroughly talk to their parents. We explain to them what this contract means and go through it line by line so that they understand the decision that they're making. We advise them if they don't have an agent to bring them on and help them navigate this space. I think for me, what's been really important is I was in their shoes when I was 16 years old, and contracts and the stakes were not as high as they are now in terms of the opportunity that they have to earn in the future. And so there's never been a time in my life where I just want to protect more than I ever have now. Because I was there, I wasn't making any money, there wasn't a beaten path for me to go down to try to figure out what is the next best decision for me. And so I'm really close with our players, and that's probably what I love about my job the most, is being able to help them build a career so that they can earn money for the rest of their lives doing something that they are in the top 0.01% at in the world, to really monetize this talent that they have. So I won't get too deep into the contracts, but I promise you that we pay our players well. And as they continue to grow and perform, we are always open to renegotiating. And it's something that's been very important to me and has been top priority for our entire organization.
So I know there's been a huge debate in the industry about whether or not it's fair to take winnings as opposed to like slices of endorsement deals, because with endorsement deals, in a lot of ways, you're bringing that to the table, right? Like you are the broker of that through 100 Thieves, whereas winnings is they're the ones going out and playing and winning the $1 million or whatever it might be.
Yeah, absolutely. I mean, that's something that we continue to reevaluate. It's been an industry standard for a long time. It was the case when I was a player, but as the stakes get higher, it's something that we always talk about inside the office every single day. I mean, I don't think there is a right answer to that question specifically right now, but there's no world where we are looking to take advantage in even like prize earnings up until this point. I think this topic has only come up because of the World Cup. I mean, they announced a $100 million prize pool because before, prize money never moved the needle for players or organizations. I mean, it's not even in the conversation of what drives revenue for a team. And so it's definitely adapting, and it's something that we have to continue to talk about because we want our players to be just as excited and feel like they're contributing as much as we are into their personal brand and helping them grow where nobody's being taken advantage of.
Okay, let's talk about the entertainment side of the business. These players, oftentimes, even if they've made a name for themselves, which normally they must to get signed to a massive organization like 100 Thieves.
Thank you. That was very nice of you.
But you know, they still see a huge lift, right? They get signed to 100 Thieves, and then suddenly you go from a few 20,000, 30,000 to $1 million, or from $1 million to 10 million, right? We see these big jumps. When I get signed on to work for my company, I have to go through standards of business conduct training to learn how to be a good representative for my organization. What kind of training do your players go through to prepare them to be in front of millions and millions of people and make sure that they're not smearing the 100 Thieves name?
Well, I think that actually starts with us first. So I'll be transparent and candid with you guys. We haven't done media training up until this point. I did when I was younger, when I signed on with Red Bull, which was my first endorsement back in 2012 or 2013. Really what we do is we're meticulous in the way that we recruit players. I think 100 Thieves has taken a very different approach when it comes to entertainment in esports, where typically teams would operate like the New York Yankees. They would try to sign the best players, and hopefully they win, and that's their fan acquisition strategy. But for 100 Thieves, we have a combination of professional players that are really good at what they do, and we try to help them grow their live streams or just like their entertainment footprint, whether that's on YouTube or any other media outlets that they want to be a part of or contribute to. And then we have content creators that their entire job is entertainment through video games. And so we haven't ran into any situations where players just pop off and say something wildly ignorant that would cause many problems, because I really feel like we have good kids that play for us. And obviously that's not a great answer or a great solution, but I really trust in the players that we've signed, and we make sure to talk to them very sternly about how they should represent 100 Thieves, and I think they have a pretty good handle on it. But as the industry grows and gaming becomes more prominent in how many people are watching or where it's being shared, I definitely think media training can be and is a necessary standard of operations that we probably should enact into the company and how we operate.
Do you have guidelines at least? Like, we don't use these words. We don't say these.
Yes, absolutely.
Okay, good.
There is a banned list of phrases that we actually just brought on a team called the Mob. They basically started as social media stars that would just tweet hilarious memes. I'm sure a lot of people here in tech, or hopefully, are familiar with memes. But that's literally how they got started, was just interacting with the biggest gaming personalities in the world and making them laugh. But there was definitely choice content that they would upload that was a little dicey. And when we brought them on and we flew them out to LA and we put them in a house, like, listen, guys, we got to have a very serious conversation of some of the words you guys are using.
Yeah.
So it's definitely changing and evolving, but we're brand safe. I mean, with the partnerships that we have, there's too much on the line to risk what we've built, and that's the most important thing to me.
Well, and that's kind of something that's really close to me, actually. I play a lot of video games. As a girl, woman, whatever, it is terrifying. It's really not fun to play video games as a girl. The things that people say to you are just jarring. It's way worse than anything I've ever experienced on any other part of the internet. And I guess I'm just curious, like, you know, there might not be training, and there definitely clearly is guidelines, but are you reminding these players that they're role models for the next generation of young men and how they're going to treat not only women, but just everyone around them?
Absolutely. I think what we've done from a culture standpoint with 100 Thieves is, again, another thing that's one of my top priorities is really teaching the gaming audience how to be a normal contributor to society. I feel like gaming was in such a different place 10 years ago, where the standard was you're in your mom's basement, eating Doritos, drinking Mountain Dew all day, and playing video games and saying whatever came to mind in a realm of competition. And now it's become so mainstream. Players that are younger and gamers that are younger are being reminded of how you're supposed to act as a man or woman that's interacting with other individuals.
Yeah.
Can I speak to this?
Yeah, Scooter, jump in.
When Matt and I first met, one of the things that impressed me the most was he was recruiting, I'm not going to say which game or what player, but he was recruiting one of the best players in the world at a certain game. And around that time, that player, out of nowhere, came out that there was a little bit of controversy because the player had said some choice words. And without even batting an eye, without talking to his board, without anything, he holds himself to a very high moral standard, and he also considers 100 Thieves his baby. And he stopped recruiting the player, shut down the deal. He had it. It was done. The player was going to come play for the organization. And he said, I don't want someone like that representing this brand.
Yeah.
And I think that we can't speak for the rest of gaming, but I think with Matt at the helm and the standard that he holds himself to and everyone around him, I think he said it best. It's about the culture. It's about the people that you bring in. And it's about not only setting up, to what words they say to their role models, but also who is he putting on the platform. So Valkyrae, who's the #2 most watched female on Twitch in the world, is one of our entertainers at 100 Thieves. And she's a part of our streaming, she's a part of our podcasts, and she is such a role model for all of these young girls in the space. And Matt has put her at the highest level of our platform because he said, I want young girls to see her and know that they can be like her. And I think that with someone like Matt at the forefront, you're going to see a shift from your experience early on.
Yeah,
But that's the hope, at least.
Yeah, I sure do hope so, because it says that like the ESA says 46% of gamers are women, 25% of the pro gaming audience is women, and yet we see at the Fortnite World Cup, for example, there's 0 women competing. You and I both know that there's nothing physical that separates a girl and a boy playing a video game. There's a culture that separates and keeps the women away, right? That scares them from wanting to play and be a part of it. And so Valkyrie is a great example, but what is the breakdown, men to women, at 100 Thieves?
I would say we are one of the leaders in esports. I don't know the exact statistics, but it has been very important from the ground up that we have diversity in the workplace. I think that we actually have hired the most women out of any esports organization, and they are incredible at what they do. We just threw our first party ever, our first public party at TwitchCon that some of you guys may have attended. Actually, one of Scooter's entertainers, Lil Dicky, who's a phenomenal.
That's a real name, Lil Dicky.
Lil Dicky, yeah, he's great.
And if you don't know about him, you'll be watching him on TV next year. That's my plug. Continue.
He performed at the party. We were at Omnia nightclub, and from day one, she's our senior marketing manager. Julia was probably our 5th employee at 100 Thieves. She threw the best party that I think esports has ever seen.
Yeah.
And she did it from day one till the day of the party, 3 months of work without any help. And she is just like a shining example of why people need to look around the industry for the right talent, not just because, or not specifically because of their gender or their ethnicity, because talent is talent at the end of the day. And so we have searched like throughout the entire industry to find people like Julia, and every single day we're recruiting better and better employees, regardless of where they come from or who they are. And so it's something that is very important, and we're trying to set the standard and really push the industry in the right way to diversify and not discriminate because of whatever reasons.
Well, and one of the things that we talked about a little bit backstage is like you're at the mercy in some ways of these streaming platforms. There are executives in Silicon Valley for Twitch that could change an algorithm or could change their rules, and that might make a difference. And Scooter, you said something interesting, which is a two-way street, right? Like you can't have a highway without the cars, I think is what you said. When a big streamer moves like that, like Ninja is a great example. Do you think Ninja made the right decision moving from Twitch to Mixer?
I think Ninja made an incredible decision for himself personally.
Yeah, I'm sure he made a lot of money. Do you know how much he made?
I don't know how much he made, but I probably wouldn't say if I did. He's doing well. Tyler's a good friend of mine, and he has really transcended what it meant to be a professional gamer, and is like breaking down barriers.
Yeah.
I talked about this in a video that I recorded yesterday because we received his Adidas collaboration in the mail, and I unboxed it. And just to look at where he started back in the day when I was coming up on Halo, to fast forward like 7, 8, 9, 10 years later, to be like the biggest name in Twitch and going on Jimmy Fallon and writing books and doing all this charity work. Scooter, or Ninja, is just a phenomenal example of what hard work can breed if you really keep your head down and do what you believe in and be passionate about what you're working on. So I think he made an incredible decision for himself, his family, and that's all you can ask for. Now, will that withstand the test of time? Will viewership transfer over? I don't know the answer to that question. I think streaming is in a much different place than when I was in his shoes many, many, many years ago. But I'm incredibly happy for him, and I think that streaming and just entertainment, we don't want monopolies. We want there to be companies that are empowering the community that is gravitating towards their websites, and I think it's really important that Twitch and YouTube and Mixer have like a variety of talent and not all on one platform.
Well, and the other side of that, I'm sure you're familiar with Nick Merckx. He was on 100 Thieves for a long time. He just signed exclusively with Twitch, and he left 100 Thieves rather abruptly.
Yep.
And signed with FaZe Clan, and the rumor was that he was promised 5% of 100 Thieves. You're at $160 million valuation now, so that's a pretty penny.
Absolutely.
Is that what happened?
It's a very delicate and intricate situation that I promise you that I cannot explain on this stage in this time.
That's fine.
I respect Nick Merckx.
I'm going to do this for you because you've been kind about it the whole time, and I'm not. I've had people defend me in the past on stuff. Matt never broke his word on anything that he did. You know, I think sometimes people use their platform in this world to say whatever they want to say as long as they have an audience to say it to. And those things are not always based on fact. And he had a right to come out and tell the truth, and he decided to take the high road, which he'll continue to do on this stage. And I think more people should take that approach. But he doesn't need, I'm going to step up and say, you don't need to defend yourself. I appreciate the question, you have to ask it. But you don't need to defend yourself for something you never did anything wrong. We think he'll go on and have a great career. And Nick's a good guy, and he should go on and have it. But some of the things that were said publicly that Matt never responded to, I was proud that he didn't respond because he did the right thing and he let the organization speak for itself. And one of the things I get frustrated about when I hear that stuff is we're living in a society where we don't have to worry about fact. People can literally say anything they want, including our president, as long as he has an audience to say it to. And I think we need to get back to a place where we actually hold people accountable to what they're saying and actually not just allow them to say anything that they want at any and every different time. So you don't have to defend yourself. You're a good guy. You run a great organization. And that one hiccup happened, and I think the way he handled himself by staying silent, wishing Nick the best of luck, and then running the organization in a great way was a testament to the type of leader that you wanted at an organization.
Yeah, I appreciate that very much. I have a ton of respect for Nick and what he's done with his career. I've known him for a very long time. Him and I come from similar places, like humble beginnings. And he's been working very hard, just about as long as me, to try to build a career that he can sustain a family and build something that he can truly believe in. And I wish him the best. I think he's going to go on to do great things. He just signed a Twitch contract. Nick is doing really, really well, and I hope he continues to do well.
See? High road. Good dude.
You're right, Scooter. I have two quick ones. Ithaca Holdings. Can you tell us, there are a bunch of founders out here who are looking for checks. What is your investment strategy? What are you looking for?
It's funny because I think people just recently found I make investments.
He makes investments.
Yeah, and then you get phone calls. No, I think what I look for personally is you always want a great idea. But I also, with our team, we look for great founders. Because a great founder is going to pivot. And I think we're also getting to a place where you want to see some kind of profitability and build a business. And I think it's important when you make an investment that you meet someone that has what I call a burn the ships mentality. They used to arrive on the shores of their enemy, these generals, and they would tell their soldiers, burn the ships. The only way you go home is if you take the ships of your enemy. There's no retreat. And I think a really good founder finds a way to pivot and move into a place where they can build a real business regardless of the bumps in the road. And that's what I saw in Matt. That's what I saw, with the guys at Discord and at least in this space. And I've seen it before, and I've been fortunate to be part of some really good ones, and some that I'll bet on the founder the next time because it didn't work out.
Do you want to focus in on esports as a way to kind of like build that network effect of, okay, we have 100 Thieves, we have these, and kind of
right now, I kind
together?
of trust them and the expertise of this space. And for me, when I look at everything else, I think I got 3 kids under 5 right now, and I got to focus on that. And
Yeah.
I've made my bets, and I have a business to run myself. And right now, I have to worry about diapers.
Okay.
Scooter's being really humble. He's very good at bringing companies to profitability, and that's why we want to work with him at 100 Thieves. He's fantastic.
Okay, my last one, because we're out of time. I know you love your 100 Thieves squad across the whole board. If there was one streamer that is not signed right now to 100 Thieves, who would it be?
You want to sign
Who's the
me?
one you want? Who do you have to have?
That's a tough question. There's a lot of people that I love. But if sponsorships aside and nothing mattered, it'd be a tie between Tim the Tapman and Dr. Disrespect.
Oh, I
love
would be
those
on
guys.
Tim the Tapman for that one.
They're both
if you care.
fantastic human beings and phenomenal entertainers, but they have their own individual businesses, and sometimes those two don't intersect.
Right.
But they're friends of the team. They represent the organization by wearing our apparel. They're fantastic. So those are 2 of my favorites.
Cool. Thank you guys
Thank
so
you.
much.
Thank
I
you.
really appreciate it.
Appreciate it, guys.
Big round of applause.
Not enough.
Thank you. Okay, I have a surprise for you guys. It's a really big one. You're not going to want to leave. You know how I've been talking about Game of Thrones all morning? There was a reason. I'm not just a psycho. I'm not a crazy person. There's a big, big reason that I did that. And I would like you all to join me in welcoming to the stage our next guest, Maisie Williams. Yeah.
Hi.
Maisie,
Hi, thank you for having me. Look at this.
Thank you for coming. How about that? We'll put it that way.
Yeah, no, this is great. This is lovely up here.
So how many of you guys know Maisie from Game of Thrones? Obviously. Yes. She defeated evil, so we all love her. But she's also a very talented entrepreneur. She started a company called Daisy. I was hoping you would tell us kind of where did that come from? Why?
Yeah, so I have a co-founder, Dom, who's backstage right now. And we worked together on a movie. Dom was on the crew, and I was acting. And he came to me one day and said that there's a huge problem with breaking into creative industries. And the series of events that had got me to where I am now were mainly based on luck and timing and difficult to recreate. So we spoke about the problems and how people really struggle with connectivity and finding people who they can collaborate with, even at a really simple level. And so that's where the idea of Daisy really came from. We wanted to create like a social network, but it was more just focused on the creative industries and focused on your work rather than your private life.
Right, and you've fundraised a little bit for this already. Your seed round, you've already raised it. I was talking to Joseph Gordon-Levitt. It's actually weird that because there's a lot of similarities.
Yeah, we actually chatted with.
I have to try really hard not to recycle questions because there are lots of correlating things. But one of the things that I was talking to him about, and that I think would be interesting to hear from you, is fundraising. I'm sure it's really easy to get your foot in the door, but maybe things get a little bit more difficult for you once you're actually in the room.
Yeah.
What was that like?
Definitely. I mean, I think just because something's celebrity endorsed doesn't mean that it's good. So I think I definitely, there was no problem with reaching out to people on LinkedIn and Twitter and like getting in the rooms with like these amazing VCs. But, you've still got to pitch them. Like they're not just going to, give it to you, and you've still got to convince them. And they had a lot of really amazing advice as well. They've seen things that work and things that don't, and the reasons why. And so I think they just had a lot of advice for me as well, like going through this, like how to manage, this insane platform that I have, but how to still make like a really good product. So yeah, I mean, like getting in the room is fine, but yes, convincing them is still, it's like convincing someone to give you a role. It's like an audition.
Well, but I mean, you've lived your essentially grown up before our eyes and lived under immense scrutiny.
Yeah.
You feel like that kind of gave you the skill set you need to go in confidently and pitch, or is it a completely different set of skills?
No, I think like having determination to create a career within the creative arts, it takes a lot of self-belief. And I think founding a company is the same, because a lot of people do look at you like you're crazy and you're pitching them like the greatest idea ever, and people just like sometimes don't get it and it's not for them. And in those moments, you do need a lot of self-belief. Because otherwise you kind of like stop before you've started.
Right. Well, and so Daisy connects artists, creators who want to collaborate and work together, but then they've got this thing that they've built and worked on together. Like, what happens next? Can Daisy succeed without like scaled distribution or brokerage for those deals, sponsorships, whatever they might be?
Yeah, it's actually where the company is sort of heading right now. So we want to work on sort of partnerships where our users can have like a real brief from like a real client and like pitch their ideas and then get them made and have like a budget and be paid for their work, which is like ultimately, one of the most difficult things within the creative industry is to get paid for what you're doing. So that's, at the moment we've got a really wonderful community that's thriving and creating these amazing projects. But in terms of like, transferring that into the real world and helping people actually get jobs, these partnerships are going to be really, really great for that.
And you chose to not put any follower counts
on
Daisy. I'm trying not to say Maisie. I'm actually trying really hard not to say Aria, if we're being honest. But so you chose not to put follower counts onto the app. Are there like counts? Is there a like?
No. you don't have follow counts. We have like comments, so you can like engage with people. We were speaking about doing this like like a reputation, possibly.
Oh, like a clout score kind of thing.
Yeah, kind of. And it's about like how much you interact with people, when you interact with people that are outside of like your group, and how much you post and like the work that you're doing. But you know, something like that, it just takes a lot of thought, because once you put it out there, you can't really take it back. So that one's, you know, kind of difficult. But we didn't want follow counts. I think that rewarding people for these typical kind of metrics can be quite damaging, and can make you feel just because you're not popular, maybe you're not talented, and that's just not true. And the thing about creative endeavors is that, you know, the things that are popular aren't necessarily like the best things, and like, you know, just because something that you do isn't liked by many people, it doesn't mean it's not incredible. So yeah, we wanted to really like take that metric away and just have people be able to connect with whoever they want, and it not be like a status thing.
Yeah, well, and like, you know, you kind of came out of nowhere. You were Arya Stark, and I'm sure your follower count and all your social media accounts just up and up and up and up and up. I'm sure there was tons of pressure on you. Like, do you wish that follower counts and like counts went away across the whole internet?
Yeah, I'm actually losing followers at the moment, but I quite like it. It's nice.
You guys,
like,
follow her.
It's no.
No, stop, please.
I like it because it's like you start finding your audience, and I think for a long time I was part of this show that, you know, had its own like following, and now that I'm doing my own like adventures and like whatever it is that I'm doing, like I'm finding the people that really like that rather than just people who like the show. So, you know, I think that's, you know, the other thing is that it's hard to sort of find your niche. And with Daisy, like that's kind of what it's all about, like helping you find your group rather than it just being like quite a lonely experience.
And do you actually go on to Daisy as a user and collaborate? Like, what are the chances that these people sign up for Daisy and you're like, oh yeah, you can work with me on this?
Yeah, people like request me to be part of their projects all the time.
I bet they do.
They're so interesting, and I love to sort of read about them. In terms of like actually working on things, like I've just been doing Daisy really at the moment, and I'm only just now, well, we're gonna start raising again soon, so it takes up a lot of time founding a company. Not, you know, I'd love to do more creative endeavors than they get the chance to, but you know, it's really great to see the work and that people want me to be involved in it. And you know, even then, it's great for like the marketing team. Like if we find something that's really incredible, we love to bring those creators into the marketing team for like a small campaign and create something with them. So it's like, you know, our Daisy community are also the people who create Daisy content and like our marketing and everything like that. So it's really nice to have that like flow, I guess.
Bit of a virtuous cycle there.
Definitely, yeah.
So one of our writers, Josh Constine, actually wrote an amazing piece recently about TikTok. You're familiar with TikTok, I'm sure. And about how Zuckerberg doesn't understand it, essentially. But I'm curious to know what you think about this whole new idea of remixing content, right? As opposed to just creating something original or telling about your life, something more autobiographical. It's like taking this other content and mixing it up. Do you think that's, you know, makes people more creative or less creative because they're kind of recycling things? You
know, I think like when you limit variables that you like, limit the variables that you use for like a creative endeavor, like this does make you more creative because you have to sort of think outside of this like much smaller box. Which, yeah, I really love, and I think like this whole like recycled meme after meme or like whatever it is, like edits upon edits. Like you mean like even the SpongeBob one that's like going around at the moment, like SpongeBob Ed, like that episode was so long ago, you know, and the fact that it just keeps coming around and around, I think is really exciting, and it can like have a new life. And I think, you know, we're all inspired by everything we see every day, and yeah, I don't think that, I think something like that should be really celebrated, and like it's obviously doing really well, so.
Yeah. Do you, is it possible to create, because one of the differences between, and I'm sorry to keep making the reference, but to Joseph Gordon-Levitt said specifically, hit record is not to launch your career. It's not to create a viable career. You cannot do that on Hit Record. It's really just about connecting with like-minded creators to build something together. And I think that Daisy is a little bit of a different approach. I think you kind of are trying to get your foot in the door there.
Yeah, we want to try and bridge that gap in any way that we can. At the moment, we have users that just come on Daisy for fun, which is absolutely fine as well, and is still celebrated. And you know, even if this is more of a hobby, then it's still a place where people can upload their work and have a good time. But in terms of people that are just trying to make some sort of portfolio for themselves to be recognized for the work that they can do, like, people just don't even know where to start right now. Like, you have no idea. If you don't know anyone in the creative industries, like, you just don't know where you'd begin. And so we're trying to create somewhere where there were real opportunities and, like, there will be clients or, you know, people, like, to finance work you're doing. Like, we want to create, like, a big hub of Gen Z creators and I guess the audience too, to be able to, like, you know, hopefully launch their career.
What is the internet like for you? Like, I'm nervous going on the internet, and I'm nobody, and you have, like, this slice of people who are, like, love you, and then you have these people who love you in, like, a really creepy way, and then you have
sorry.
and then you have people maybe who don't love you as much, and, like, it's just a lot. Like, what is it like for you to be a human who has to be on the internet?
Yeah, it is strange because, I mean, the internet isn't really built. It's hard to be yourself on the internet because the fact that you know, you have to, like, post everything to be seen on the internet. You can't just be, like, quiet on the internet and people, like, get to know you.
We
like,
can, but you can't.
Yeah, I guess so. But, like, you know, the fact of, like, being seen on the internet is because you've posted something or, like, actively done something. So it's like a strange thing. It's, like, definitely, like, a side of my personality that's on the internet, and it's, like, very fun and loud and, like, extroverted, I guess. But there's, like, a side of myself that I keep for myself and, like, the people that I know in person and, like, meet day to day that is just, like, I guess a lot more, like, I don't know, different.
Okay, that's good. You did it.
Yeah.
Okay. One of the questions that I want to ask you is more, like, around the media industry in general, which is, like, it's possible that Game of Thrones was the last show that we all, like, tune into weekly and get together with our friends and talk about for the next week and make theories about and all that stuff. What are your thoughts on, like, scheduled releases versus binge viewing?
I mean, even with shows that I can binge view, like shows that come onto Netflix, like a whole season at once, like, I really try to pace myself because, I don't know, it's just, I think it's nice to have suspense, and, like, everything is so fast that I think, like, yeah, it would be nice if these things lasted longer. And the, you know, the show typically would have lasted 10 weeks every time, and, you know, sometimes the build up to these shows that are online is, like, longer than anyone's talking about them because they've watched them in, like, 2 days. So I think that is a real shame because the amount of work that goes into creating content like this, and you're going to have to wait a whole year until you can watch the next one. So I think it is a real shame that everything's become so fast. But, you know, the internet and that way of sort of consuming media is really the way forwards. And, you know, a lot of companies that are more traditionally like cable network, like shows, they're now sort of pumping money into these, like, online platforms for them to be able to do streaming services for, you know, whatever shows they're making. So, you know, people are definitely moving in that direction. But yeah, I think it is a bit of a shame sometimes.
Well, not only for, like, the people that created it, obviously you're right about that, like the hype cycle around something, if you watch it in 48 hours, like, people forget. But also I feel like you don't, like, sponge it in quite as much as a viewer either.
Yeah, true, because you just move on, and I think, like, the episodes just end up blurring together, and I can't tell which episode I'm speaking about, and it just like runs into one big blur of a season. Whereas when you have something staggered, like you're thinking about it the whole week and wonder what's going to happen next, and that's like quite a nice way of, just consuming something.
With the streaming wars going on, like it's amazing for all of us because we have just literally a million things to choose from. You could watch whatever you wanted, and the biggest problem that we all have is finding the time to watch all of it.
Mm-hmm.
But for like talent, on the other end, does that make a difference? Is this a good or bad thing? The fact that we have just so many platforms that are trying to push content to us.
Like I think as long as you're happy and like the way you're choosing to live your lifestyle, sits right with you, then I don't know that it's a problem how you spend your time. I think.
For you though, like as an actress, like.
I think it's great. Like, I love to be able to watch everything. I see that as being my job, to know, like, what good TV there is, what good films there are, what's being financed, what new networks are, like, hitting off. And, like, that's something that I feel the need to know. So I definitely partake to a certain extent. But, also staring at a screen all day makes me insane. And, like, I can't sleep at night. So, like, I have to balance that and, like, sometimes go outside. But I do love to just sort of, like, hide away and watch YouTube after Netflix, after Amazon, after TV, and then movies, and just start again from the beginning and go back to YouTube. And then, I love to do that just as much as anyone else, I think. And as long as, I don't find it damaging within a day, then I'm happy to do it for hours and hours and hours.
You told me that you don't have upcoming projects to talk about in terms of the acting stuff, but do you feel like the next one you do you feel pressure? Like Game of Thrones is the most popular and award-winning show that has ever existed on the planet.
It was such an amazing opportunity, and if I don't do anything like that again, I'm not that mad about it.
You'll be okay.
It was
killed
quite,
the Night King.
It was.
Sorry, spoilers.
Sorry, guys. It was pretty one of a kind as far as anything like that goes, and I think my goal now is not to do something like that, but to do something that people maybe don't expect. And play a role that people wouldn't imagine me as, because I think that would be a lot more fulfilling than trying to surpass anything that I've already done.
You're 20 years old, right?
22.
22. You have a long road ahead of you. Like, where do you want to focus your attention? Is it going to be more on acting? Clearly Daisy's your kind of full-time focus right now. Is it entrepreneurship?
Yeah, I think everything. Like, I really look at my future and I want to try. I'll always be within creative industries, I think. And I've loved founding Daisy, and I can't wait to see where we go in the next few years and what happens, and I really enjoy my time doing that. But I think I'll always be doing something creative. And I'm really I'm very open to the future that's coming. Like, I've never really had a plan or like a goal and it's like sort of it's going okay.
Yeah, it's going great.
So I guess just like keeping an open mind
cool.
is good.
Okay, we have a minute left, so we're gonna do something that I like to do, which is the lightning round.
Okay.
Maisie's gonna be asked either or questions. You can pass on one, but I'd like it if you didn't. You should just go for all of them. We're gonna start with a really easy one though. Are you a cat person or a dog person?
Dog.
Dog. Good answer. Nick, Kevin, or Joe Jonas?
Joe.
Yeah, that's an easy one too. David Benioff or DB Weiss?
DB Weiss.
DB Weiss.
Yeah.
Okay.
Sorry, David.
Boo, David. Netflix or like Apple TV Plus? If you had to do a new project, Netflix. Dragons or dire wolves?
Dire wolves.
Yeah, Nymeria.
I don't know, actually. I say that because I played Arya Stark, but really it's dragons.
Really, it's dragons. Oh, that's news. All the press were like,
Oh my God, she's a traitor.
she turned on the dire wolves. Okay, acting or entrepreneurship. You just said you want to keep your mind open, but if you had to choose.
I've been doing a lot of entrepreneurship right now, so I'll go with acting.
Yeah,
But it will switch in a year.
Okay, so nothing permanent. Like, are you more of like a party person, or would you rather just like be in bed?
Be in bed.
Be in bed. Me too.
Yeah.
Twitter or Instagram?
I spend more time on Instagram.
So Instagram.
Mm-hmm.
Okay, last one. Jon Snow or Sansa?
Sansa.
All right. Will you guys please give her a huge round of applause? Thank you so much, Maisie.
Thank you for having me.
Thank you.
Have a great day.
Oh, yes, I will. It's lunchtime. Go ahead, enjoy lunch. $10 off Sweetgreen. There will be something on the Extra Crunch stage at 12:40, how to build a sex tech startup. We're going to call it the Sextra Crunch stage for a minute. I'll see you guys soon. Thanks.
As companies transition to using microservices in their architectures, more APIs are created across the organization. With this increase, it can become more challenging for developers to find these internal APIs and reuse them when they're developing new software. That's where Rapid API for Teams can help. Rapid API for Teams enables development teams to publish their internal APIs into a private workspace. Developers can find any internal API, view its documentation, test it, and connect directly, or collaborate and share information about the API right in Rapid API. Team members can also subscribe to any public API available on the Rapid API Marketplace, and the entire team can see and use that subscription. This way, you only pay once for any API your team uses. Rapid API for Teams makes it easier to share and collaborate on APIs. Get started today on rapidapi.com/teams.
We like to partner with local entrepreneurs who use technology to address big societal needs. We back local teams because they know their customers best and they're best placed to make the right decisions for them. We bring operating expertise and global scale to help our partners overcome challenges and grow their companies. Our teams love building companies that create value and make a difference. As well as our investments in companies such as Tencent and Mail.ru, we're building meaningful global businesses in online classifieds, food delivery, and payments and fintech. And we never sit still. We actively seek new opportunities to create value over the long term. It's what keeps us moving forwards.
Why did you come to this workshop? To learn. But quickly I realized I started unlearning some things which I've been doing very incorrectly in the past and which didn't really give me the results that they're supposed to get.
I want to be where we ask questions like why? And the big question I ask is what if? You know, it's a different way of thinking at Stanford than it is at any other university in the world.
I realized I was getting stale, so I said, you know what, it's time for me to move on and look for greater things and have more impact.
At Lockheed Martin, we're on a mission. Your mission. When millions of people are counting on you, you can count on us. To build the impossible, to invent the inconceivable, and solve every problem with speed and reliability. Every mission is an expedition of the greatest importance, both to you and to us.
They're not called Zuckerbucks, but Facebook just reinvented digital money.
Facebook's Libra cryptocurrency will launch early next year, and it's more like PayPal than Bitcoin. It's designed to be easy enough for everyone to use, but it's still complicated to understand, so I'm going to break it down for you nice and simple. Libra is like cash that lives inside your phone. You'll be able to buy Libra through Libra wallet apps on your phone or from some local grocery and convenience stores. You cash in your local currency like dollars and get nearly the same number of Libra coins, which are represented by this wavy 3-line emoji instead of the dollar symbol. But first, you'll have to verify your identity with a photo ID. You'll then be able to spend your Libra while online shopping, or potentially pay for things like Uber's or your subscription for Spotify, since those companies have partnered with Facebook to make Libra popular. Since it's almost free to digitally move Libra from one account to another, you won't have to pay high credit card processing fees that can add almost 4% to your total. And some Libra wallet apps and shops will give bonus discounts or free coins for signing up and paying with Libra. You will be able to send and request money from friends like you would with Venmo or PayPal, and it's easy to send Libra just like a message. In fact, Facebook is building its own Libra wallet app called Calibra that will live inside of WhatsApp, Facebook Messenger, and its own standalone app. You won't have to attach your real name and identity to any of your payments, but they will be public. Facebook knows it's a little bit creepy, and you probably don't want it spying on what you buy. So Facebook set up a new company called Calibra that will keep all of your financial data separate from your Facebook profile. That means it can't use your transaction data to target you with ads, reorder your newsfeed, or sell your info to marketers. Eventually, Facebook hopes that you'll use Libra to pay your bills, scan your wallet's QR code to purchase coffee, or tap your phone to buy your public transit ticket. At any time, you can cash out of Libra and get your local currency back in your bank account or handed to you at a local store. But how does the Libra cryptocurrency technically work without a bunch of blockchain buzzwords? Well, Libra is coded to have a stable price, be secure, and be controlled not just by Facebook. Instead, Libra is run by the 28-member Libra Association that it hopes will grow to 100 members by the time it launches in the first half of 2020. Financial companies like Visa and MasterCard, merchants and apps like eBay and Lyft, venture capital funds like Andreessen Horowitz and Union Square Ventures, and nonprofits like Kiva are all members. They each paid at least $10 million to get one vote on the Libra Council that controls what happens to the currency. They'll be responsible for checking to make sure Libra transactions are real and creating the Libra Reserve. See, each time you cash in $1, that money goes into a big bank account called the Libra Reserve that creates and sends you roughly 1 Libra token. The Libra Reserve is made up of a collection of the most stable international currencies like the US dollar, British pound, the euro, and the Japanese yen. The idea is that even if one of those currencies goes up or down in price, the value of the Libra will stay stable. That way, shops will accept the Libra as payment without worrying that the value of the coin will drop tomorrow. Big swings in price are why older cryptocurrencies like Bitcoin and Ethereum haven't grown popular as payment methods. Libra can also handle 1,000 transactions per second, while Bitcoin can only handle 7. So how do Facebook and other Libra Association members earn money? Off of interest on all the assets held in the Libra Reserve. After the Libra Association pays for its operations and investments in technology, members earn a cut of the remaining interest in proportion to how much they invested when they joined. If Libra gets popular and tons of people cash in, then the reserve grows huge and the interest could add up to serious revenue for Facebook. But there's also a subtle second way that Facebook could get rich from Libra. If the currency makes it easier for small businesses to accept payments online, they'll sell more stuff. They'll then have extra money to spend on Facebook ads, which will make it extra quick to buy things with Libra. 90 million small businesses already have Facebook pages, but only 7 million advertisers currently exist on Facebook. If Facebook can turn more of those local merchants into ad buyers, Facebook's revenues could skyrocket. The big risk of Libra is that anyone will be able to develop apps for it. That could lead to another Cambridge Analytica scandal. Instead of some shady app maker snatching your personal info, they could steal your digital currency. And Facebook and the Libra Association say they won't vet Libra developers, which leaves the door wide open to abuse. And if people get scammed, they're still going to blame Facebook. But if Facebook succeeds, the real win could be for the 1.7 billion people left in poverty with no bank account around the world. They're exploited by international money-sending services like Western Union or MoneyGram that charge steep 7% fees that take $50 billion away from families per year. And if they're mugged, they could lose all their money since they have nothing stored online. But all they'll need is a photo ID, and Libra could give them an alternative to a bank account that's tougher to steal and can make it easier to pay for what they need. There are plenty of reasons to worry that Libra could give Facebook and other tech giants more power or lead to people getting scammed, but it could also give disadvantaged people everywhere a way to join the modern economy. And at least it's not called Facecoin.
We are here today to take a look at our new system, Nintendo Switch Lite. This is a dedicated handheld system really optimized for portable on-the-go gaming. It launches on September 20th for $199.99 and comes in 3 really cool colors. You have turquoise, yellow, and gray. And of course, it is compatible with our very, very large library of Nintendo Switch games. Any game that works in handheld mode will work on Nintendo Switch Lite. It's optimized for handheld gaming, so it has Joy-Con that are now attached to the system, and also it's a little bit smaller than Nintendo Switch. At Nintendo, we're really about giving the customer choice. So whether you are more of a gamer that wants to play in your living room with a docked Nintendo Switch, or if you know that you're going to be really gaming on the go a lot more, then there's a system out there, a Nintendo Switch system out there for you to pick.
We're standing on the floor where we just launched HoloLens 2 just a few days ago. I think there are 3 key pillars that we would talk about. One is immersion. And so the field of view against our first version of HoloLens is over twice as large. Also, we have this ability to interact with holograms naturally, what we call instinctual interaction. So reaching out and touching a hologram as if they're really there. We also have a comfort pillar. We've adjusted the center of gravity, adjusted the electronics, batteries in the back, sensors in the front, make it much easier to wear for much longer extended period of time. And finally, we talk to our customers, and they want to talk about how they can quickly get value out of these HoloLenses. And so with HoloLens 2, out of the box, you get immediate value. You can immediately start deploying these for your scenarios. And we announced here many Microsoft 365 solutions like Guides that allows you to train your customers, or rather your employees, in a much faster way through 3D visualizations. And so between immersion and comfort and this notion of time to value, we think HoloLens 2 is the best way to enjoy mixed reality. Pricing, we have 2 ways to approach this. You can use a subscription model, which is $125 a month, using our services, or you can buy the enterprise package, which is $3,500, which has been reduced from the original $5,000 of HoloLens.
We are back at the Steve Jobs Theater in Cupertino here this time to talk to you about this. There we go. This is the Apple Watch Series 5, that little trick right there. So what you're looking at right now is the always on display. This is kind of the big new feature for this product. It'll turn off if I cover the light sensor, or if I'm resting my arm on the side. So that's actually the biggest feature here. Apple has improved battery life to such a point where you can get about 18 hours on this, which is standard that you get on the last generation, but you're able to get that this time with the always on display. We did not see sleep tracking, which is one of the things we were anticipating, which I suspect would have taken quite a bit more battery life. Other big improvement here is the compass. So there's a built-in compass like the one that you'll find on the iPhone. They're opening up to developers right now. A bunch of different applications you potentially use for it. The most obvious one is probably mapping to help you orient yourself. And then my friend at Apple over here just showed me one of the cooler early apps that has been developed. So this is Night Sky, very familiar to probably most people with smartphones. So spin it around and you can see where the constellations are in the sky. So those are the big top level features. There's international SOS, so if you have an emergency abroad, that's helpful as well. A couple of new case designs. There's ceramic has returned, titanium. Price point on titanium is pretty high. That one starts at $799. The standard watch starts at $399, and it's $499 if you want LTE built in. We are here at Steve Jobs Theater in Cupertino for Apple's new iPhone 11 launch event. This right here is the iPhone 11 Pro. So Apple actually announced 3 new models today. There's the iPhone 11, iPhone 11 Pro, iPhone 11 Max. This presents a little bit of a paradigm shift for the company. So they're doing away with the iPhone R line, and instead they're making the iPhone 11 basically the entry-level device. So that one's $699, which is obviously a bit of a reaction to the way the smartphone market has been going over the past couple of years. People just aren't as buying as many phones. And a big part of the reason why people aren't buying as many phones is because they're just really expensive. Apple's flagships have routinely been over $1,000. So they're basically just shifting everything down a little bit, which kind of makes the iPhone 11 Pro the successor to the iPhone XS. Looks very similar. Form factor is very much the same as the 10 and 10S. You got the notch in the front. The big difference, however, if you flip around back, is this 3-camera array right here. So if you have trypophobia, this is going to make you feel a little bit funky right now. The iPhone 11 has a 2-phone array, also in a very sort of similar square configuration right here. This one adds a 3rd. So that one does wide angle and ultra wide angle. This one adds a telephoto lens. So you're going to get better video, better photos, and one of the more interesting features here from a software perspective is something called Deep Fusion, which takes photos from all 3 cameras. It essentially shoots 9 shots, and it makes a composite of them to get you much better images. So the camera array is really the big change. A couple of other differences. Obviously, we'll be seeing a lot of feature updates with iOS 13. All right, so the big change on the front is a Super Retina display. It's even higher res before. On the 11 Pro, you're going to get 5.8 inch and 6.5 inch on the iPhone 11 Pro Max. This is coming at the end of the month. It'll be available on September 20th, starting at $999, so similar price point as the 10S for the Pro and $1099 for the Max.
Livewire is an all-new Harley-Davidson Halo product that's an EV, and its core architecture is based on an internal permanent magnet machine and an RESS with lithium-ion technology.
How is Harley-Davidson developing the technology for its electrical vehicle program? Are you leveraging startups? Is it all in-house? Are you using the Silicon Valley office?
So Livewire actually started with an idea in 2011 where we started investigating different technologies, motor technologies, power electronics, battery packs, all the way back to 2011. And what we've started doing, and you can see in our startup of our West Coast facility, is we're bringing a lot more of that design and development in-house to bring the absolute best in EV technology to market.
Why is Harley-Davidson pivoting toward electric?
Livewire is an all-new product in an emerging category for Harley-Davidson. It represents the future of Harley-Davidson, and we can expect to see future models with part of the technology that you see showcased on Livewire today.
Who is the Livewire for?
Well, Livewire is for a lot of different people. Actually, we know that many of our Harley-Davidson customers will want one. And we know that from when we had Project Livewire in the hands of our customers, how excited they were. But really, we're looking at a new market. These are customers who are more urban, they're younger, they're wealthier, they're high in terms of their style and appreciation of design and quality, and they're looking for an electric motorcycle for urban use.
So for market development, how does Harley-Davidson balance its loyal chrome and steel gas market with building this new EV market that probably is going to be a different demographic?
It will be, for sure, and there'll be some crossover as well. And it's an and, it's not or, right? So we'll continue to lead in touring and custom development and making motorcycles that'll appeal to those customers, and we're going to reach out to these new customers. And not only with Livewire, but we intend to have a whole portfolio of electric vehicles in the future.
Scooters, bicycles?
Well, you name it, we're going to be broadening the portfolio and leading the electrification of two-wheelers. And so there'll be different visuals, there'll be different price points, different performance points. In some cases, you won't need a motorcycle license to enjoy them. So yes, our intent is to lead the electrification of two wheels.
So on price point with Livewire, which comes in at $29,000, right?
Correct.
How do you expect to compete with, say, Zero, who's coming out with a new motorcycle roughly comparable that's $10,000 less?
Well, the reality is they're not that comparable when you look at the level of quality, the fit and finish, and some of the performance attributes, as well as the overall customer experience. If you think about the level of customer-dealer interaction, the fact that our dealers will have a servicing ability, they'll have charging ability at their stores, and the ability to really give the customer a broader and better, we believe, customer experience. So we think when people make the comparison, there really is no choice.
With Livewire, Harley-Davidson will be the first big gas manufacturer to release an e-motorcycle to the US market. Do you think you'll have an impact in shifting the industry in that direction?
I think everyone's watching, that's for certain. We're the first mover in the space. We have the best dealer network, not only in the US, but globally. We have a very strong dealer network that are all in, and it's a very exciting time. And I think you'll see others move after a Harley-Davidson.
Is Livewire all American made?
Good question. Livewire is assembled in York, Pennsylvania, so American made.
Harley-Davidsons are famous for their sound, for their gas motorcycles. Is there an electric Harley-Davidson sound for Livewire?
So absolutely, it wouldn't be a Harley-Davidson if we didn't have look, sound, and feel. So sound on this motorcycle will be authentic to Harley-Davidson, and it comes from the combination of the electric motor, the spiral bevel gear, and the drive line. Each of those are engineered specifically to have that signature sound.
But a little quieter than a gas bike.
Absolutely.
I think the most robust ADAS systems out there are considered level 2. Level 4 is considered full autonomy under certain conditions. What is Rivian going for?
So Rivian's actually going for level 3, so autonomous driving in certain conditions, in certain geofenced areas, where we actually take over the entire driving operation of the vehicle in a fail-safe manner.
So what is Rivian's approach, and how are you going to ensure that there's some safety there?
We're building a driver monitoring system that is made up of multiple components, so it's not just one sensor like a torque input sensor that would detect if the driver wants to actually disengage the longitudinal and lateral controller. There's a driver monitoring camera, and there's also going to be hands-on wheel sensors.
To me, the biggest issue with DMS is not just that it's monitoring the driver, but what kind of either corrective or preventative behavior. So
that's a good point. It's really trying to determine the driver's intention, because if you've enabled the autonomous system and you're on the highway and you've pulled out your iPad and you're watching a movie and you kind of have it on your lap, say you want to turn and get your notebook out or put that away and get a book, and you inadvertently give a steering input to the steering controller and it senses torque, the driver monitoring camera will see that you're not looking at the road and you also don't have both hands on the wheel. So we'll have to ignore that input from the human to understand that they're not intending to change lanes. They're actually just doing something else while the vehicle's in control. And then on the flip side, it's important to know that the driver is actually ready to re-engage in the driving task. So say you're approaching your planned exit. A minute before that, the vehicle will notify the driver through HMI that it's time to get ready to drive, be aware of your surroundings, and then we'll detect both hands on the wheel, the inputs of the steering controller match the algorithms, and the driver's eyes are on the road.
my job specifically is going on adventures to meet people who are mountain biking, who are surfing, who are rock climbing. I flew down to North Carolina and showed up at this overlanding conference with a couple of generative research tools, which basically allows the people that I'm talking to kind of co-create with me as we're talking. So, it's asking what are the tools that you brought specifically for Overland? What are the biggest problems? Working together on those problems. And then it's also just being a part of the community. So because I was there alone, there was a lot of people that invited me into their campsite and were like, hey, do you want this ground beef burrito? Everyone was making ground beef burritos on this trip. I probably ate like 7. But yeah, and then just sitting and having conversations about their vehicle, what overlanding means to them.
So give me an example of, either a design element in one of the 2 existing models that you either contributed to or came directly out of your research.
I designed the crossbars. One of the biggest things is just realizing that it's super annoying to set up your vehicle before every single trip, because there's a lot that needs to be attached or taken off so that you don't have this huge rack on the back of your vehicle, things like that. And so one of the things that we did was we made it a quick release system. So there's ports on the entire vehicle, or along the entire vehicle, spaced 36 inches apart. The crossbar system is modular so that you can undo one of those crossbars, take it off, throw it in your garage. It seems simple. A lot of people at the shows, when I'm talking to them, are like, why has no one done this before? Partly it's because we have this really great ecosystem of the vehicles, but also partly it's because there's very few automotive manufacturers where the process is ingrained this deep, right? Where before we design anything, we have to go out and talk to people who do those things and understand it.
Why pursue level 3? Why can't that just be achieved with level 2? Because level 3 is harder.
We want to embrace the challenge in a sense. And OEMs, you see that they've been adding some automation to certain controls of the car for years now, with cruise control and then adaptive cruise control and then lane departure warning. And you're seeing these features come together and provide more and more driving features taken over by the vehicle. We're building a consumer product. We want people to use it. We want them to love it. If we can give back some of that commute time, some of that drive time to them to unwind or to engage in something else while the vehicle's kind of on that daily commute, or you want to hang with your friends and check out pictures and swap them while you're driving home from a climb or something like that. We want to enable that for our customers. And there are mobility companies working on level 4, and they're looking at it kind of from the top down, coming from 4 and 5. For more fleet applications possibly. So we want to get a feature in our customers' hands sooner than possibly some of those other systems might be fully vetted for wide adoption.
Managing on-shelf inventory is really hard because of the flow of product. That volume makes it difficult to make sure a product is on the shelf right on time for the shopper to find it. We're essentially giving visibility to the stores, telling them what is the ground truth. Where are the products? Are they stocked? Are they in the right location? Is the price right?
Are the robots doing anything that a human employee couldn't do?
It's much more minute in its analysis. So what we do is robots don't have any hands. We're not actually restocking shelves. But what we do very well is we automate the data collection and analysis. So we have a bunch of 3D cameras that we point at the shelf. And as the robot rolls down the aisle, we capture the details of the shelf and of every product.
How does this data come back to the employee?
It tells them what problems they want to fix and in what order. So when the shift starts, you come in and you have the entire store analyzed, you have the problems in rank order, and you can hit them in that order, which maximizes your efficiency.
So you had the underlying technology, you had the hardware and software, AI, things like that, but you had to build a custom robot specifically for Walmart's needs?
Yes, we had the building blocks, but you have to put them all together, and that tells you the baseline, and then you figure out what you cannot do with the building blocks, and then you have to go and invent them. So we did that, and that's why it took us, 6 years now working on it. We actually naively thought it was cameras on wheels. How difficult could that be? Maybe in 9 months we could deploy it, and here we are continuing to peel that onion.
I look at a company like yours and Amazon Robotics comes to mind, right?
Sure, yes.
Kiva Ty Brady, building this company, a giant retailer, approaches them, starts using their stuff, he eventually acquires them and turns it into Amazon Robotics. Did a deal like that not necessarily make sense for your company? Is Walmart not in the business of buying technology companies right now?
I think that's, I have to leave that to Walmart to answer. If we were to guide our own destiny, if we continue to be successful doing that, what we would like to do is serve the entire industry. Because fundamentally, the problem we're solving, which is lack of visibility of what's on the shelf, is universal. The entire world has the same problem, and nobody has a solution. And for large stores, the best solution is a combination of robots and AI. And so what we want to do is completely maximize the impact and help the industry as in general improve their efficiency and improve the shopping experience.
Huawei Mate X is the world's first and also the fastest 5G foldable smartphone Huawei introduced it here in MWC. This is very slim, just 54 millimeters. And also we support the supercharged 55 watts and also big batteries. It will give you the best experience in 5G new area. This foldable unfoldable phone can give you the 6.6 big large screen when you use it as a mobile, and also it can transform to the 8-inch tablet. Because it is a flexible soft screen, when you do the unfold and the fold, the important thing is for the hinge. So Huawei take 3 years to make it the 180-degree no gap design when you unfold it. We will start to launch it in countries starting from the middle of this year, and the price will starting from the 2,199 euros, but for sure it's vary by country and the skill.
What makes IM Robotics unique is that we're the only ones with a mobile robot that is capable of actually doing the task that a person would have to do of walking around the warehouse and actually grabbing physical items off of a shelf. The problem is that e-commerce is growing, consumers continue to spend more money online, and that's putting a strain for more and more people to do the work in material handling for e-commerce. Our customers or prospective customers are looking to automate to both reduce cost but also to alleviate this manual labor shortage.
Obviously, Amazon is building their own in-house. They bought Kiva back in 2012. Is your clientele largely smaller e-commerce sites? Are those the sorts of people who are looking for a system like this?
The cool thing about robots is that you don't have to be a gigantic player or have a massive multi-billion-dollar warehouse to automate. Because they do more of the full task of what a person would do, they're able to provide that value at a lower price point without having to build in a lot of special infrastructure.
But the goal for you is to have a kind of a one-size-fits-all approach that all of these different companies can just kind of pluck one off the shelf and deploy it?
We're going to be expanding the breadth of what we can handle over time, but we're also looking at broader applications like what we call bin handling. In that case, we just store everything in the warehouse in bins, and the robots go and retrieve those bins and move them to a conveyor, and take bins from a conveyor and move them to the shelf. And so now anything that you can put in a box or a bin can be handled or effectively automated with our robots.
So the Impossible Burger is better in every single way. This new version is not only craveable for the meat eater, it's actually preferred 3x the last version, but it still has no cholesterol. It has a fraction of the use of land and water. And it hits the spot for those of us who really crave a delicious, craveable burger. Well, in the last 2.5 years, we've gathered every shred of feedback from not just our celebrity chefs like David Chang or Mary Sue Milliken, but also from meat eaters around the country. And one of their biggest requests is to make this product more versatile, easier to cook. So while it still is beefier and tastier and has better texture, now this Impossible Burger, this new recipe, you can braise it, you can put it on a slated grill, you can cook it almost any way a normal burger from a cow can be cooked.
It grills beautifully. It's good to saute with, so you can make chili or maybe a ground beef that you put in an empanada. You make meatballs really well. You can do really anything you can do with ground beef. You just don't want to overcook it. When you overcook it, it gets dry, just like beef would get really dry. It's most similar to ground beef that's sort of 80% lean and 20% fat.
The biggest challenge for us is the fact that our mission is only served well if meat eaters everywhere happily pick our product. And the good news is that's what we've seen nationwide to date. But the biggest barrier is most meat eaters have been terribly disappointed by the plant-based meats of the past. This is truly different. So leveraging the credibility of celebrity chefs is an important way to overcome that barrier.
Up until now, the soy products that are mimicking turkey or bacon just haven't done it for me, so we really didn't bother to get too involved. So for me as a chef, it's very exciting to have this new tool in my toolbox.
We prototype 100 new products a week. I've tried prototypes of an impossible steak. I've tried a prototype of an impossible chicken noodle soup. There's no shortage of innovation and R&D at Impossible Foods.
MCity is a public-private partnership. We are really here to bring industry, research, and government together to work on a lot of the advanced mobility technologies, connected vehicles, automated vehicles, to help bring them to society in a thoughtful and beneficial way. We run a bunch of different living laboratories, including the test facility, but we also are supporting research in a lot of these areas. We've funded about $27 million over the last 4 years in engineering, social sciences, law, all kinds of disciplines that touch these new technologies. We do all sorts of research projects. We've got some funded projects on motion sickness. Will the seating configurations of tomorrow really be a reasonable thing, or will we need mitigation to keep people from feeling gross while they're reading iPads or whatever is going down the highway? We are also running a project around safety and testing of highly automated vehicles. So how can we guarantee that these systems are safe and ready to go out onto the public roads and mix with real humans? I think in terms of building public trust around the safety and testing of these systems, we need a more open set of testing standards. It'll be a little while before groups like SAE can finalize some standards in this area. So we can help feed into that with the research that we're doing. You can imagine 60 member companies, getting them to agree on technologies and things is pretty much impossible. We're not focused on policy as much as we're focused on informing good policy through data collection, on-road deployments, those sorts of projects. And the member companies are actually here to share data with each other on a lot of these topics. You can imagine safety, for example, is one where no company wants to have sort of the upper hand. I think they all see the rising tide floats all boats. So they want to bring all the companies up together and have everyone be following best practices for testing. And I think everyone benefits.
The plant was opened in the early 80s. It's built a variety of nameplates and car sizes. Currently we have about 1,100 people here on the site building small car, the Sonic, EV Bolt, and of course our Cruise AV.
Talk to me a little bit about, for folks who don't know or aren't familiar with how factories work, specifically manufacturing 3 vehicles on a single line. What's involved in that process?
You could have separate lines. It would be very inefficient. So obviously the people and the facility is an asset here. We want to leverage that to its fullest ability. The advantage is being able to integrate ICE, EV, and AV into one single line. Leverages the amount of space we have, the expertise we have in the operators. Also, it provides us an opportunity to be able to be more efficient than we would if we were separated.
Is it unusual to have an internal combustion engine vehicle and an EV vehicle on the same line?
We are probably the only plant that I am aware of that builds an internal combustion engine an electric vehicle, and also an autonomous vehicle all on one single assembly line.
And about how many EVs and ICE vehicles are produced here?
So we build to order. The days of building cars just to build cars and fill up dealerships are long past. We have the capability, the flexibility here to be able to build whatever mix is required by the orders we get from customers.
These are done in, looks like batches of about 6 or 7 vehicles at a time, depending on...
So not to get into the specific strategy that we've used, like I said, we do have some sharing between our AV and our EV. We've specifically tried to understand how we can be most efficient with specific content for AV and what makes sense to be able to share on the single line. So we did develop an area within the facility to make sure that we could scale it. They're set up very efficient, specific to the AV. It's just a very few operations because of the immense amount of sharing, but this was the right way to go about it. After the few operations that are done down here that are AV specific in our general assembly area, the car then gets introduced right into the same line that our regular production cars would be in.
And anything else that we should note about the vehicle?
There's a lot of engineering that you don't see that's gone into this to make it AV capable, to get the driver out of the vehicle. You know, I could go on and get into the nuts and bolts of it, but we've just done a fantastic job of integrating it into this facility with the people, leveraging what we believe is our competitive advantage, and that's our assembly process.
Ladies and gentlemen, please silence all mobile devices. The program is about to begin. Ladies and gentlemen, please take your seats. The program is about to begin.
TechCrunch Disrupt.
Ladies and gentlemen, please welcome TechCrunch senior writer and your Battlefield host, Anthony Ha.
Everyone have a good lunch? Yeah, that's all right. Well, welcome back to the Startup Battlefield. This is our third session. We're going to see 5 more startups presenting. Each of these sessions is kind of all kinds of startups, and this one is going to be no exception. Before we bring the startups out, though, I'm going to bring out our expert judges. First up, we have Dana Grayson, a partner at NEA. She has led many of the firm's investments in industrial software systems and additive manufacturing. Next, we have Aileen Lee, founder and managing partner at Cowboy Ventures, which seeks to back exceptional teams building technology that reimagines work and personal life in large and growing markets, what they call Life 2.0. Someone's excited about Life 2.0. That's good. Next, we have Anna Patterson, founder and managing partner at Gradient Ventures. Prior to starting Gradient, Anna was Google's vice president of engineering in AI, integrating AI into products across Google. Woo! Next, we have Nicole Quinn, partner at Lightspeed Venture Partners. Previously, she worked on branding and marketing at Nutmeg, a London-based fintech startup focused on online wealth management for millennials. Woo! And last but not least, we have Bradley Tusk, CEO and founder at Tusk Ventures, the first venture capital fund dedicated to working with and investing in startups in regulated industries. Give it up for all of our judges. Now it is time to bring out the very first startup of this round. That startup is Osano. Presenting for Osano are Arlo Gilbert and Scott Hertel.
For the last 25 years, the internet has been the Wild West. But between public opinion and government regulation, when GDPR came into effect last year, that era ended forever. The average company thinks they share data with about 40 different companies, but in fact, they share with an astounding 750. And while it's amazing what we can do with modern technology, there is no easy way to track what's happening with all of that data, and there's no easy way for companies to comply with their privacy obligations. Until now. Osano's data privacy platform makes it easy for companies to identify which vendors are best to work with, to comply with laws like GDPR, California's privacy law, and other upcoming regulations. Osano customers can browse lawsuits, and they can look at the policies for companies they're doing business with. Utilizing our proprietary data set of 7,000 different vendors, Osano provides a 360-degree view of each vendor's privacy practices. Osano assigns an objective score to each vendor, making it easy for companies to identify where they have risk. Osano customers can browse lawsuits against vendors, they can track legislation, and we can track thousands of convoluted privacy policies on their behalf. Osano includes a fully managed cookie consent solution, so that with one line of code, websites can immediately become compliant with the laws of 40 different countries. And those dialogues appear in their native language. As well, Osano offers a developer API, so that developers can quickly build data privacy into their applications and their workflows. Let's move over to the demo. On the screen, you can see a website that is not complying with the law. When we load this website up, we see 80 different cookies in the forms of beacons, ad networks, and social shares. And while it's great for marketing to be able to drive traffic, retarget, and analyze visitor behavior, there is no easy way for them to comply with the law. Osano customers, with just a couple of clicks, can copy and paste some code to their website. And with that one line of code, their website automatically becomes compliant, and Osano enforces best practices. Let's take a look at that same website as it looks with Osano. When the page is loaded, you can see there are only 3 essential cookies and no third-party scripts have loaded. Scott, go ahead and consent. Now, Scott's consented, and Osano's let those third-party scripts load, and our browser's full of cookies again. But what's different is that this website is complying with the law. Complying with the law by collecting consent is an obligation, and failing to do that results in severe penalties and fines. Osano customers, Osano also captures a list of all of the data, all of the vendors that are in your website, and sends that back to our servers. Osano customers can automatically log in and view all of the vendors they're sharing data with, look at their privacy practices, and see how they rank, and make compliance decisions based upon that data. Osano visitors can also browse lawsuits against their vendors, and they can browse historical and current practice policies and compliance documents. Let's switch back to the presentation. Data privacy and compliance used to be a complicated manual process. Osano makes it easy. One place to see your SaaS vendors, their privacy risks, and their ratings, and all of the data transfers that are happening. By 2023, companies will be spending more than $3.3 billion per year on data privacy software. That's up from $500 million last year. Osano is targeting the 90% of companies who are not served by the expensive point solutions, such as the 800-pound gorilla OneTrust. OneTrust is expensive and it's hard to use, and they have 14,000 users of their free product. By contrast, Osano has 750,000 users of our free compliance product, including those companies you see on this screen. Those companies serve more than 2 billion consent dialogues per month using our software. And this is a target-rich environment for us because we are already their compliance vendor of record. And we are the best team to tackle this problem. I bootstrapped my first company into a $50 million ARR category leader. Scott and I are coming off of a successful venture-backed exit in the B2B SaaS space. And Scott is a brilliant engineer, having risen the ranks through Accenture, Microsoft, and Dell, until he thankfully got the startup bug. And the dozens of attorneys who work with us have deep data privacy expertise. Their work is training our machine learning model so that in the future we can automate much of this policy review process. Don't let your vendors put you at risk. Be proactive about data privacy. Get ahead of the law. Go to osano.com today and sign up for a free trial. The first 50 companies using code BATTLEFIELD will get 50% off for a full year. Thank you.
Judges.
Anyone want to start? So I have a question. How much? How much does it cost? Is it annual, monthly?
Sure. Osano is intended to be a self-service product. We have enterprise offerings, but we're focused on that small and mid-market. So we have a free tier that's appropriate for solopreneurs. We have a mid-tier that's $100 a month, and then we have a top tier that's $200 a month.
And if they use this, is this going to cover all their needs, or do they also have to think about a OneTrust or some other service?
Yes, so no, if they use Osano, a great question. If they use Osano, they don't need to use a OneTrust. OneTrust is a great company, but they're really focused on the big enterprise, complicated workflows. You need teams of people and weeks of training. Great company, I respect them. But if you use Osano, you do not need OneTrust.
You clearly have a really strong why now to this business, but like so many other companies that have that, many other companies come into the space. So can you tell us a little bit about how you view the barriers to entry here?
Yeah, absolutely. Well, we have some proprietary data. So we have our data set of 7,000 vendors where we've ranked them on an ontology of 163 questions. So we have something unique that nobody else has. We also have a competitive advantage in the fact that we have 1 million visitors a month to our website looking for compliance solutions already because of our open source and our open core. So, really what's going to set us apart is those two items, plus the fact that we're focused on small and medium enterprise right now, whereas the vast majority of competitors in this space have really focused on big enterprises. Reason being, they were focusing on GDPR exclusively, whereas we're focusing more broadly, and we can help companies with California, Brazil, you kind of name it, the privacy laws around the world.
You said you had 750,000 customers, web pages, websites.
Yes,
Can
ma'am.
you tell us how you got those customers?
Sure. So we own and operate the most popular open source cookie consent solution in the world. It's called Cookie Consent. You can search for it on Google. We're the top 10 results. And this product was built back in 2015 by another company. We acquired it as soon as we formed this company, rebranded it, and took ownership of it, and continued to maintain it and improve the community around it. There are 1,700 forks of the product. There are many active developers. And if you've ever seen a cookie consent, my apologies, it's probably ours.
You mentioned that the spend on compliance software has gone from $500 million to $3.3 billion. And I assume that's because the world is changing really rapidly. If the whole Western world or the whole world adopts some version of GDPR, what does that number go up to?
Well, I didn't hear the last part.
Ultimately, what would the spend be if kind of the GDPR standard became the global standard?
Yeah, so what we're seeing really is that GDPR standard is kind of becoming the global standard. Yeah. So California's privacy law goes into effect on January 1st, which is effectively a national law. So we now have all of Western Europe, all of the United States, anybody who does business in Western Europe, anybody who does business in the United States. So we really do have global laws. They're being flaunted by people in smaller countries who don't have much accountability. But the $3.3 billion, I believe, accounts for that. That came from a third-party study. So we're looking at 33% compounded annual growth over the next 4 years.
Can you talk a little bit about your ranking system? And will you work with vendors to change their ranking? And then if because you're self-service, you can't really afford to do a lot of account management. If a website is using a lower ranked vendor and they wind up getting hacked or they wind up having problems, like what's our liability and how do you work with them to actually make sure they're complying with our recommendations?
Great questions. I'll start in the reverse. So we, like most companies, carry an insurance policy, including professional errors and omissions and cyber liability. So that's really our first line of defense if we make a mistake, because it would certainly not be an intentional mistake. Now, as far as ranking vendors, we have a proprietary 163 question ontology. So 24 attorneys work for us under an Uber model. They review all the complicated compliance documents that companies publish, and then they answer those questions. Those questions map closely to NIST and ISO standards. So if a company does well on our ranking, they'll probably do well in both of those areas. It's proprietary, so we're certainly not going to share our secret sauce, but it's very comprehensive, and it looks across the spectrum at GDPR, data security, many different factors.
How do you stay up to date with changing regulation?
Good question. Well, we have lots of attorneys who work for us, so that's helpful. In fact, one of the features of our product is that we advise customers about new regulations. We're seeing more than one new regulation being proposed every single week. So it's a flurry of activity. So we look, we watch, we monitor, we advise our customers, and then as laws change, we're a startup, we're nimble. We'll adjust our product accordingly.
Final question?
Could you guys get to a point where, so right now you provide ratings on vendors, litigation information, lots of data points that then people can use to make decisions. Is there a way to eventually get to a yes or no and say, based on all of this vendor is in compliance or not in compliance?
Yeah, so we do have product roadmap items for customers to be able to set their own thresholds so that their internal compliance teams can quickly get a red no or a green yes when they're in the procurement cycle, or if they're looking backwards at customers or vendors who they already have in their walls, they can quickly identify those that they have to go and remediate.
Okay.
All right, give it up for Asano.
Good job.
Let's go, buddy.
Time for our next startup to come out. That startup is Vise AI. Presenting for Vise AI are Samir Vasavada and William Naiman.
There are over 400,000 investment advisors in the United States, managing over $70 trillion in assets. But little has changed in the space over the past few decades. Clients expect personalized portfolios tailored to their needs, but instead are getting dumped into generic buckets of mutual funds and ETFs. Clients pay for individualized advice and education, but advisors don't have the time, tools, or technology to deliver. Expectations have, however, changed over the past 20 years, and the technology hasn't been able to keep up. However, advisors have been doing one thing right, though. They've built lasting and trusted relationships with their clients. These are attributes that tools or technology will never be able to replace. So we're introducing Vise AI. Vise AI is an artificial intelligence platform tailored to investment advisors so they can automate portfolio construction and management. Vise AI empowers advisors to be able to build personalized portfolios around their clients' values, goals, and dreams. Here's a little bit more about how it works. Vise AI analyzes a client's investment needs and builds them a personalized portfolio of stocks, bonds, and other assets. We then provide the portfolio intelligence for them to be able to explain those investment decisions and the why behind their portfolio to the clients. All clients want to hear a good story. And to show you a little bit more, let's move to the demo. Here's the dashboard, where the advisors can see key action items and data about their clients. But the core of the platform is in the portfolio creator. Here, the advisors can seamlessly transition existing portfolios from their custodians into Vise AI. We do all of the work, saving them the time and the hassle. Next, we take a goal-based approach to investing, looking at the client's goals, risk criteria, behavioral details, and others, and building a customized portfolio around those constraints. Next, we look at the portfolio structure, whether if it's asset class, stock, or sector. For example, if the client works at Facebook, they probably don't want Facebook options in their portfolio. They want a reduced exposure to technology and definitely don't want Facebook. Next, we look at the investment strategy. Whether it's a value strategy or a growth strategy or any number of strategies, we can customize a strategy on a firm-wide basis or on a client-wide basis. Whether they want small cap growth or large cap value, we can build that in and embed it perfectly into the portfolio. Next, the advisor can review the portfolio here. Unlike a mutual fund or equity manager, we lift the hood off the portfolio, showing the advisor exactly what they're investing in and why they're investing in it. We then show how the portfolio has performed through different times, like 2000 dot-com crash or the 2008 recession. We'll then show them how the portfolio is expected to perform over the next 20 years or the life cycle of the portfolio. And lastly, and most importantly, we provide the portfolio intelligence. This is the story the advisor needs to tell to their client, the unique talking points and justifications the advisor can give about the portfolio, making them look smarter and providing a better result. ViseAI automates all of the management, rebalancing, and everything, so the advisors can focus their time on what they do best, building great client relationships. Moving back to the presentation. Unlike traditional models, we don't just look at historical data. We couple advanced quant models with machine learning models to build a perfect personalized portfolio to each client. We then have a proprietary natural language generation model where we can look at how our previous model did to explain and justify those investment decisions using our portfolio intelligence feature. Our competition is mostly mutual funds and equity managers. Mutual funds and equity managers provide low differential to the advisor with highly generic and high fee portfolios. Robo-advisors at service advisors provide a digital advantage to those mutual funds and equity managers, but they still don't provide the customization and the true value the advisors really need. And they're also high cost. This isn't just a dream. This is a reality. We have partnered with Fortune 100 financial institutions and a successful trailblazer in the space, Riskalyze, to give us a distribution advantage to over 25,000 advisors. We have a team of we charge a low AUM fee of 20 basis points, selling direct to investment advisors. We have a team of top PhD researchers and quants from companies like Google, Morgan Stanley, E-Trade, and others. Our business team has a background with companies like Wells Fargo and E-Trade and has run successful financial advisory firms in the past. Our advisors have founded companies like Future Advisor, one of the first robo-advisors in the space, as well as Adipar and other companies. Feel free to visit us at viseai.com and refer us to your financial advisor. We'd really love it, and we think you could benefit as the client.
Okay, judges.
Can you talk a little bit about what testing you've done on your models in terms of past portfolio performance and with your guidance, how the outcomes in terms of desired returns might look different?
Yeah, it's a good question. So the one unique thing about our company is that, because we're building a personalized portfolio for each company, for each client, everything is different, right? So it's not like we're just testing one macro strategy and how it's done over the past 20 years. But we have seen that we have really good risk-adjusted returns. So our benchmark isn't necessarily alpha. It's the best risk-adjusted returns, so return to lowest amount of risk. And we've tested that rather than just using kind of overfitted back testing. We're looking at feeding the data in from a time frame like 1990 and running the model forward with new data. So it's all fresh to the model and then training backwards.
So in most industries, customers need to hear about something twice on average to buy. In fintech, the trust is so low that customers need to hear about it 4 or 5 times. So how are you thinking about building trust, building a true brand for the financial advisors?
That's a really good question. So part of it is we're also partnered with the big custodians they work with. So Charles Schwab, E-Trade, Fidelity, all of those guys. And they do a lot of the work in terms of distribution and actually helping us sell this product. And it provides us a significant degree of credibility, especially because we're partnered with them and other firms.
How do you suggest changes? You're not going to like flash trade my account, right?
It's a good question. So is the client changes, the advisor will enter that into our system and we'll reallocate the portfolio according to maybe the client lost a job, their income changed, whatever, maybe their goals changed, they inherited some money, any number of different things. Or if the market changes and we need to make a change, we'll update the advisor as to, hey, we're making a change and here's why. But the one thing we don't do is time-based rebalances because those have been proven not to work.
Oftentimes with the financial advisors, there's sort of a misalignment between the economic incentives for the advisors themselves and the best interests of the clients. How do you see this either helping realign everyone, or do you think it can't really impact it?
Yeah, so that's a good question. It's because a lot of mutual funds provided loads, which are basically like referral fees for those funds being selected. But that's a dying practice. And advisors are starting to realize that. And they've been doing that for the last X number of years. And with new regulations like the DOL fiduciary rule, which actually got shut down, advisors are starting to have to become more and more of fiduciaries for their clients. So right now, most tools aren't empowering them to be those fiduciaries, but we are, because we're providing that personalization and that level of touch, and also the ability for them to better explain it. So it builds more trust within the portfolio. Anytime something new happens, we're going to alert them. And clients love to get that phone call from their advisor saying, hey, this just happened with your portfolio, a new goal's been hit, or here's how your stock positions at Apple or Amazon or whatever is doing. And that the third piece is the transparency factor. What most advisors have been doing, providing these equity managed portfolios or mutual fund portfolios, is clients don't understand what they're investing in and why they're investing in it. But with us, we're creating a transparent portfolio of individual stocks and other assets where the advisor can tell the client exactly what they're investing in, and there's a very transparent set in terms of the fees where they know here's the set fee and it's getting billed directly to you, and it's far cheaper than what those mutual funds would be charging, which is in excess of 1%.
And is the dashboard only available to the advisor, or is it also available to the portfolio owner?
It's only available to the advisor because all the other technology in the space exists. So we're integrated with the companies that will provide it to the client. But where the innovations in the space need to occur, where they haven't before, is within asset management. So this is an advisor-facing interface, and maybe eventually we can go direct to client. But
So tell us more about that. Why not go direct to client? Do you feel like the advisors you'd be recruiting first are providing that much service on top of it, and they really need to handhold the customer? Or more and more customers just want to do more on their own?
So the average account size of Wealthfront and Betterment is around $30,000. What you notice is, even with millennials, is as they start to accrue assets, they want to talk to a human about their money. And that relationship element is incredibly important, and it's not going away. You're actually seeing the RIA space, and Silicon Valley doesn't really know this because there's too focused going direct to consumer, is that it's growing at a rapid rate. So the RIA space, the independent advisors, grew 17% last year, and they controlled an enormous amount of the market. So there are clear assets, and they aggregate a lot of assets together. So one advisor could be managing $100, $200 million in assets versus going direct to consumer and acquiring $200 million in assets, a lot harder, as you've seen with the robo-advisors.
Yeah, the focus of our product is to really just simplify the business for the advisor so they can focus on what they love the most, their clients. And clients love that too.
Yeah, they're great at building relationships, and that's their strongest suit. And we think that if we empower that relationship and give them the ability to act smarter and get more excited with their clients, it's a much better value proposition for both the client and for the advisor.
What's the purchase decision process when you're pitching a financial institution that has a bunch of investment advisors? How do they make the decision on whether to buy? And what are the KPIs?
That's a really good question. So we're not necessarily just going to those financial institutions just yet. So if you're thinking the Merrill Lynch's or Goldman Sachs Private Wealth Management, we're more thinking like, if you were to start a financial advisory firm and get all your rich friends together, you'd be a client of ours. And there's like a ton of those guys in the country. So the way they like to evaluate processes is, let's test this product out and see how well it works with 1 or 2 or 3 of my clients, and then we're able to grow share of wallet over a period of time. So the reason why we typically get a no is because, I'm just too busy working with my clients, I don't have time to get on the phone with you. But then once we're able to get on the phone with them and really demonstrate our value proposition, it's like, let's try this out, and then let's try and grow into the firm over time.
All right, one more round of applause for Vise AI. Okay, that means, no, you can go now. All right, let's bring out our next startup Civic Champs. Presenting for Civic Champs are Gung Wong and Mike Jeffrey.
$2 trillion in annual revenues, 10% of the US economy. If I were to ask you what industry this represents, you might think retail, construction, perhaps manufacturing. The answer is the nonprofit sector. Unfortunately, nonprofits continue to be underserved by our tech community. Many still rely on pen and paper for core processes like scheduling, volunteer tracking, and even donations. Try to envision a consumer-facing company like CVS or Starbucks using pen and paper for its customer loyalty program. Instead, volunteers should be treated no differently than retail customers. Volunteers not only give 6.9 billion hours of service each year, they're also twice as likely to donate and donate 10 times more than non-volunteers. Introducing Civic Champs, a mobile platform that will fundamentally change how nonprofits operate and engage their supporters. Civic Champs provides automated volunteer management by providing 3 different ways for nonprofits to track volunteer hours. A mobile application that uses geofencing technology, a self-service kiosk mode that can be launched on any device, and the administrative feature within the mobile app that allows staff members to check in volunteers on their behalf. And today, we're excited to launch the integrated micro-donations platform that will allow for nonprofits to automatically convert volunteers to donors. Let's go to demo. So Dana, you're the volunteering type. Let's see what your experience would be like at a Habitat for Humanity build.
Especially building.
As Dana shows up at the build site, she receives a notification asking if she's there to volunteer. She confirms she is, which launches a timer. This critical information is used by nonprofits to understand the level of engagement of their volunteers, and is a key impact metric used to share with both foundations and donors. When Dana's done for the day, she checks out and confirms what activity she's done and whether she's part of a group like NEA. She's also able to leave a reflection and give out high fives to the staff at Habitat, which is a fun way to say thank you that she can actually feel on her phone through haptic feedback. Now, Dana, you just had a great experience volunteering. And it's in this moment that you're feeling the most inspired. And so you're given the opportunity to further your support of this organization, and thus solving one of the key missed opportunities of nonprofits, converting volunteers to donors. By leveraging our volunteer data, we can tell nonprofits when to give, how much to give, and what to say. In this example, Dana donates $1 for each hour that she's volunteered. She's able to connect it with a corporate matching account, which then doubles her impact. Imagine if every volunteer was incentivized to do the same. Let's go back to presentation. One thing you might note from what you saw is that it required no work from the Habitat staff. It was simple, easy, and efficient. One question you're often asked, or we're often asked, is who are our competitors? We have 3 buckets of competitors: those that serve nonprofits, those that serve volunteers, and those that serve corporations. Unlike these competitors, Civic Champs has a database and technology architecture that's uniquely built to serve the full market, allowing for seamless data sharing between nonprofits, volunteers, and corporations. Civic Champs is targeting the $1.7 billion CRM market for nonprofits. This grows to $6.3 billion as we add additional features, and $20 billion as we look at adjacent industries such as corporate social responsibility, political campaigns, and donation processing. In the last 5 months, we've gone from launch to serving 34 clients, 100% of this growth has come from word-of-mouth referrals. We expect to hit 200 clients by next April. These clients pay between $25 to $450 a month and are concentrated near our home offices in Bloomington, Indiana, and Pittsburgh, Pennsylvania, home to a combined 38,000 nonprofits in just the surrounding area alone. Pittsburgh is also home to my last two startup companies, Rent Jungle, an apartment search engine, which we sold in 2014, and Community Elf, a social media management agency which served many nonprofits, also sold in 2017. As a team, we have a combined 60 years of experience from places like McKinsey & Company, the United Way, and have attended institutions such as Harvard Business School. So, whether you're a corporation looking to quantify your community impact, or your foundation looking to add to the capacity of your agencies, or you're a nonprofit looking for seamless volunteer management and a way to automatically convert your volunteers to donors, go visit our website, civicchamps.com/disrupt. Let's work together and make a greater impact in our communities. Thank you.
Judges, who's got the first question?
I'll go. So your customer base here is kind of notoriously really disparate, really fractured, and slow, right? Culturally, just they don't make decisions quickly. How do you guys, what's the sales process like? How can you sort of efficiently sign up lots of nonprofits?
Yeah, so we've been surprised by that, right? As you saw, in 5 months, we were able to serve 34 clients, which is pretty quick. I think one of the benefits we have is that nonprofits are not competitive, right? So they're able to share, and they're happy to share with each other what works. And so that's been a part of our growth. You're absolutely right that at times, maybe we miss the budget season for XYZ nonprofit, but that's the same for, I think, any other industry, right? Yeah. But I think we do have some benefits in terms of how viral the network is.
I saw a good experience for the volunteer checking in, but what about for the organization trying to figure out, for this event, how many volunteers do I need and who is volunteering, kind of the volunteer management side of it?
Absolutely. So this is only the tip of the iceberg, right? So there's a number of features that we still want to build for the nonprofits, including integrated scheduling, also the ability to curate the experience for both the volunteers, but to your point, also use our data to say, hey, last time you had this many volunteers, but in actuality, when we did the review, it looks like you were short by XYZ volunteers in these activities, right? That's one of the main reasons why we do track the activities that the volunteers do, is to understand later on that whether, from a capacity standpoint, was that enough?
There's already several different features that are within this product. If we were to speak to one of your 34 clients, what would they say are the features that are really addressing their pain points?
I think so we weren't able to show some of the other features such as like the kiosk mode and the ability for administrators to check in volunteers on their own phones. But I think all of that as a combined suite of tools allows for the nonprofits to really use this system or platform in any situation. And so they don't have to resort back to pen and paper. I think that's one of the drawbacks of other platforms is that if you only have a mobile app, right, you have lots of volunteers that don't want to use that. And so we want to make sure that we're able to support sort of this full ecosystem, if you will.
I guess just a quick follow-up. So when they're actually going into the app, where are they mainly spending their time?
Excuse me, say again?
Within those features, where are they spending their time?
Oh, got it. So for the volunteers, it's actually, they don't spend a ton of time, right? You sort of check in, you check out, you leave your reflections, and that's about it for now. The things that we want to build in the future are curated discovery, which will obviously allow for consumers to spend more time on our app. Most of our administrators, right, where they spend time is really on our web-based dashboard. So that has all the data that you can see, and you can sort of manage your volunteer staff.
Can you tell me more about how the volunteers discover the service to begin with? Is it through the organization? As Bradley said, a lot of these nonprofits have challenges in managing their day-to-day, managing or recruiting the volunteers to begin with. Is there anything that you do to help them actually recruit the users and the volunteers?
Yeah, so they do discover, so volunteers right today discover the app largely through our partner nonprofits. that say, hey, can you adopt this system as our new way of sort of tracking our activities and hours? In the future, we do think that this can become a network-based effect business, in that one of the key features that we have is that you can use Civic Champs across different organizations, and so you don't have to have an app for every single nonprofit. And so once we have a little more density within markets, we think this could be a really interesting tool for volunteers to discover places to volunteer, but also allow our clients a bigger platform to sort of recruit from as well.
I saw the way you hooked up the donation to corporate match. A lot of corporations donate per hour of employee volunteering. Do you hook into that and verify that they were there so that you can gather those funds?
Yep, great question. The honest answer is not today, but we absolutely want to do that. Yep.
Can you talk a little bit about how you charge? And then to Dana's earlier question, because a lot of these activities are volunteer run, I can imagine it could be hard to get compliance in terms of reminding all the people, hey, the way we used to do it was this way, but we want you to switch to this new system, and how much effort you have to put into kind of training the staffs to actually use it.
Sure. So we, for now, we try to learn as much as we can by actually doing a lot of on-site onboarding. And so that's part of the process. I think features like the reminders and notifications really help because that allows then for us to remind someone to say like, hey, it looks like you should log in, you can check in, and all that kind of stuff. So that's how we handle the onboarding piece of it and sort of compliance components.
Okay, and how you charge?
Oh, right. So we charge a monthly fee. It's a SaaS model. So $25 to $450 per month is our range for today in terms of our current clients. And it's based on the size of the organization or the number of volunteers that they have.
Okay, thanks.
All right, give it up for Civic Champs. Our next startup is T4. Presenting for T4 are Max Kurgan and Yev Spector. Come on out.
Every consulting firm, every investment company, every corporation needs market research. But if you've ever had to look for it like I did when I was a consultant at Bain & Company, you know how painful that process is. The average analyst spends 19% of their day researching. For every 5 that show up to work, 1 shows up to search. Companies are paying analysts billions of dollars every year to look for market research. Because the last major innovation in how we look for this type of data was Google 20 years ago. We need a better way. Introducing T4, a web platform that lets analysts quickly find comprehensive industry data. Tell T4 what you're looking for. T4 tells you what reports contain the data you need, whether they come from a paid source, like Gartner, or a free source, like the US Census Bureau. How? Let me introduce you to UX and Tom. UX is T4's unified industry classification system, a method of classifying industries that is 10 times more granular than NAICS, the industry standard. Tom is T4's proprietary human-in-the-loop indexing process. Tom ensures that we aggregate a complete set of market research within each industry and index the quantitative data within each report. Let's take the example of Sarah, who's an analyst at a leading management consulting firm. She's preparing an overview of the web security market ahead of a client meeting tomorrow morning. Sarah will begin her search on Google, which looks through a broad set of highly irrelevant sources. She can look at market research aggregators like Statista or MarketResearch.com, but they only look through a small subset of the market research universe. Sarah will spend hours looking through thousands of search results in as many as a dozen portals. Then, Sarah discovers T4. Move to demo, please. Sarah subscribes to T4's cybersecurity industry coverage. When she opens T4, Sarah lands on the cybersecurity dashboard. Here she sees industry statistics, recommended searches, and top industry reports rich in data. To gain additional industry context, she can open the UX taxonomy. For the first time, an analyst can see a comprehensive, in-depth view of an industry, its adjacencies, and when data is publicly available, market size and growth in a single viewing pane. As Sarah returns to the dashboard, she begins her search, typing web security market share. The Smart Assist search translates the query into the UX indexing filters. In less than a second, T4 reduces thousands of potential search results into the 4 paid and 1 free report that contains exactly the data Sarah needs. T4 tells Sarah which reports come from top sources, and Sarah can even see what page number the free data is on. What normally takes hours, Sarah just did in 30 seconds. Return to presentation, please. This is possible because UX and Tom enable T4 to comprehensively index granular data that AI does not have the capability to process. It's not just for consultants. We have investors, strategy, sales and marketing analysts who can access T4 through a SaaS license, charging up to $2,000 per user per year. 1/20th of what analysts are currently paid to search every single year. Initially, we're targeting the 3.5 million tech sector analysts representing a $7 billion global market opportunity. As we expand our industry coverage, we will scale to the $82 billion opportunity across all sectors. Our team comes from these leading organizations. I have lived and breathed the pain behind finding information throughout my professional career. Our CTO, Yev, has been architecting and building product from the ground up for nearly a decade, including building human-in-the-loop software for testing for the replacement to the Hubble telescope and for a shared economy marketplace platform. Since launching our first prototype just 5 months ago, with coverage of only the cybersecurity and esports industries, we've tested our product with a dozen cybersecurity and esports teams, 4 billion-dollar-plus hedge funds, private equity funds, and 2 of the top 5 management consulting firms, informing over $2.7 billion of M&A, saving highly paid analysts 7 months of research time, and resulting in our first paid customer. Today, I'm excited to announce that T4 is launching our public beta with coverage of these tech sector industries. If you are in consulting, investing, strategy, sales, or marketing, and you want to save hours of research every single day, go to www.t4.ai and sign up today. Thank you.
Judges.
Question about budget. I love that you're equating the cost savings here to how much firms are spending on their analyst. But as you probably know, they also spend money on subscriptions to Forrester and Gartner. Can you tell me more, one, about how this fits in with the budget that they spend on those reporting services? And then 2, a technology question about how that you get access to those sort of walled gardens.
Sure, I'll be happy to take both of those questions. The first question, which was about
money. How do they
pay for it? Yeah, the cost of T4 is a fraction of what a typical firm is paying for Gartner and IDC research. A lot of the corporates are paying several hundreds of thousands of dollars. Someone like Bain or McKinsey, that is closer to $100 million.
So my question with that is, this doesn't get rid of that spend, though. They still have to subscribe to those services and then use T4 on top of it. Is that correct?
Correct, yes. Okay. But currently what we see is for every dollar that a firm is spending on market research, they're spending $2 trying to find it. With regard to the second question, how do we get this data? For paid data, it's obviously very easy to index. or for free data, it's easy to index. For paid data, we infer what information Gartner's, IDC's, Forrester's of the world have based on publicly available information. We've tested our accuracy with researchers at some of the top consulting and private equity firms, and oftentimes we beat Gartner's or IDC's own search portals.
If I was reading what you said about the pricing accurately, it's per analyst pricing, is that right?
Correct.
So how do you avoid the shared login problem where like all 5 of us share the same login?
Sure. The problem of shared login doesn't replace the existing problem where a lot of these people have researchers that they can reach out to, a centralized person. But one of the biggest issues with that is it means that there's a long turnaround time. By distributing this across more analysts, you're reducing that turnaround time and increasing the tempo at which an organization or a team can run their business.
How do you think the paid research services will view you guys? Do they see you as additive because ultimately you make their product easier to use, or do they see you as a threat, and if so, why?
We are essentially lead gen for them. When you search on T4, we tell you what reports contain the data you need, and then we link you to that report. In the future, we would like to start creating partnerships with these publishers. We think that there's future potential to have a marketplace where we resell some of their data, and so we think there's a lot of potential for that.
As you've been doing your own research with potential customers, how have you, I guess, sort of, what replies have you been getting to them around no's, and what reasons have they been giving for those no's?
For the analysts or the publishers? The analysts?
Both would be helpful.
Sure. With regards to the analysts, a lot of the initial no's that we might get are when analysts might say, oh, I only have 5 or 10 minutes per day in order to search for market research. When we dig in, it actually turns out they're spending a lot more time. And one of the big value props that we can offer them is we can say, even if you do spend only 10 minutes per day, we can make that 10 minutes the equivalent of 5 hours of research time. And that begins to resonate with them a lot more because this research is essentially informing millions of dollars of potential due diligence process that they're about to engage in, for example, in the situation of an M&A. We are only beginning to engage with publishers, and so we don't quite have that answer yet.
Of the firms that would be your customers, how much do they already realize this is a pain point? Would they all say, yeah, this is a huge disaster for us, we've got to solve it? Or have you guys discovered something that hasn't even really occurred to them yet?
This was a pain that I myself felt at Bain & Company. And before we ever began designing a product, we spoke to hundreds of people across industries to validate that this truly is a pain point across companies. And what we discovered is, yes, this is a pain point. And when we show somebody a demo and show them how quickly they can find information relevant to them, that really hits home on almost every single demo that we ever show.
What's the feedback loop to either the human in the loop product or the AI product in terms of like you're teeing up a bunch of results and some of them are relevant to the analyst and some of them are not? How do you actually make the product get better over time?
I'm happy to take that. Currently, the human in the loop process is in our back-end indexing side. On the front end, what we have done is we show you how we've indexed the results. What we allow users to do is to reach out to our research team in case they're struggling to find some piece of information or if they find something that they think is erroneous, and then we take action on our end, very similar to what PitchBook does, for example.
How about sectors? I noticed that you had networking and data centers and esports and a few others. How do you decide which sectors to add next, and how long does it take you to add one?
An answer in 15 seconds.
Quick.
We decide what sectors to add next based on customer demand and where we see the most activity. And so we decided to do the tech sector first, which we're going to be completing early next year, because that's where we saw the most activity, and that's where prospective customers were saying that's what we want a product.
All right, one more round of applause for T4. Good. Thanks. Next up, we have Orbit Fab. Presenting for Orbit Fab are Daniel Faber and Jeremy Scheel. Come on out.
Cars are an excellent transport solution because you can drive an almost unlimited distance with them. And that's because there's a global network for distributing propellant or fuel. But imagine if that network didn't exist and you had to tow around all the fuel that you'd ever need. That fuel would extend maybe 100 yards down. That's a lot of fuel. It's impossible to think about throwing away a car after it's used up its first tank of gas. But that is the reality that we live with in the space industry today. I've lived this frustration personally. A company that I set up in 2011, we tried to buy the AM4 satellite. This satellite cost $400 million to build and should have brought in $6 billion of revenue. But there was a glitch with the launch vehicle, and it got put into the wrong orbit, and it didn't have enough fuel for us to take it where we needed it. Because we couldn't get any more fuel, we had to destroy that satellite to avoid it becoming dangerous debris. Now, this isn't an isolated incident. This happens all the time. In the last decade, almost 200 satellites worth about $100 billion have had to be destroyed because they've run out of fuel. But now we have the opportunity to recover billions of dollars of lost revenue. My name's Daniel Faber, and I'm the CEO of Orbit Fab. We're building gas stations in space. I've spent 22 years in the space industry. I've built about a dozen satellites, several successful products. This is my 4th startup company. I have lived with the frustration of having only one tank of gas for far too long. It is time to stop throwing satellites away. Here's what we do. We build tanks, we put them onto any available launch vehicle, so we get the best deal putting them into space. In space, we manage the logistics and the orbital mechanics, and we deliver the right fuel to our customers when they need them. Our customers can save 50% on their capital expenditure, and we take home gross margins of 90%. Now, you may ask, why hasn't this been done? There's a catch-22 here. No system exists for safely and reliably fueling a satellite in space. So we set out to solve that problem first. A famous science fiction author, Robert Heinlein, once said, once you can get to low Earth orbit, you're halfway to anywhere in the solar system. So we like to think that what we've built is the key to the solar system. This is a gas cap. This fueling port allows satellites to be refueled safely and reliably in orbit. It's not as simple as you might think. When you look at the fluids that are flowing in orbit, gravity doesn't take them away. So the surface tension and other effects are complicating how fluids behave. We solved that problem and many other problems. So back to the presentation, what you'll see here is the fueling port and an active half that allows us to connect. So we've developed these, and Jeremy here in the demonstration is showing the active half. The robotic arms on this, the small arms on the side, they close around the fueling port, giving it a lot of alignment tolerance, a lot of self-alignment. So NASA has been researching this problem, and they've developed a very good solution which assumes that you have expensive, complex robots that can line up the fueling ports to connect them. But we see a future which is a bustling space economy, where satellites can come and dock and depart without the need for very expensive robotic gas station attendants. So it works by coming into proximity of the satellite, the arms close around the fueling port, and then we can transfer high-pressure propellant. When the transfer is done, the spacecraft is released, it goes off to an orbit where it can make more money for its owners. Back to the presentation. This fueling port has been built at a small size, a small weight, small cost, the same exactly as the fill ports that they currently use to fill up satellites on the ground with their first tank of gas. But this one can be refueled on orbit. Because this is a drop-in replacement, we're getting rapid customer adoption. We've already flown these to the International Space Station, a lot of our technologies. So what you see here our 2-tanker test beds. We transferred a fluid between the two to test our pumps and our valves. In this case, it was using water. And when we'd finished that, we hooked our system up to the International Space Station. And as reported in TechCrunch, we became the first private company to resupply the space station with water. Now, those went up full of water and came back to us just last week empty. And the unit here that you see is the very same unit that was on the International Space Station just a few weeks ago. In case you think that this is a science experiment, let me assure you, we worked with 20 companies to develop a standard fueling port. They're all looking for a standard. We've sold already to 2 customers. We'll be shipping about 10 fueling ports in the next few weeks. We have contracts signed with the US Air Force, with Japanese conglomerate IHI, a partnership with Lockheed Martin, and many other deals. So the team that's put this together, you've heard my background. My last company was building small thrusters to go into satellites. That was acquired last December. Jeremy, my co-founder, he's an international business background. He's the vice chair at an industry association backed by DARPA that is working to standardize satellite servicing. And our brilliant young engineer, James, has 5 payloads on the International Space Station, has built 3 satellites, and he built our hardware for the space station in only 4.5 months.
Wrap it up.
OrbitFab is building the next layer of infrastructure for the space industry. So if your companies are building satellites, come and talk to us about the future. I'd like to share with you the fueling port.
All right, questions?
So 90% gross margins are impressive, but as with any hardware business, particularly one that's in space, I would have thought this would be pretty capital intensive. So can you tell us a little bit more about the costs and your capital fundraising plans over the next few years?
Yeah, really glad you asked about that. Because of the experience that I have in the industry, I know where a lot of the inefficiencies are. And so I've been able to find ways to do this very cheaply. The flights that we had to the International Space Station were covered by the International Space Station National Lab, a shout out to CASIS for anyone who knows them. And the astronaut time was also a part of that. They're helping American industry to commercialize space in a really big way. So that's one of the ways that we've been able to do this. So I've obsessed about minimum viable product, how to bring this to the space industry, and our capital requirement is 2 or 3 orders of magnitude lower than what others have considered necessary to get into this business.
Which is how much, roughly?
We expect to need about 20 million of capital total to fully build out the system.
Is that 20 million of your first working system, and then you need more after that, or is that all you need?
20 million is to get to positive cash flow.
Okay.
So we would continue to build out the system as customer demand grows, but that's the initial system.
Okay.
Are you selling these to people who are then bringing them to the satellites, or are you responsible for getting these to the satellites?
So this is a system that would be adopted by the satellites, then be launched into orbit. So we work with a lot of customers who are operating effectively tow trucks, satellite servicing vehicles, that can go and deal with the legacy system. So they've developed the complex robotics and everything that's needed for a system that wasn't designed to be serviced. Our system is designed to service them, so the tow truck can be refueled and can do a lot more work. Also, future satellites being equipped with these systems can then directly get refueled.
So your system can work with legacy satellites?
So not directly, but through the satellite servicing companies.
Okay.
And those companies, they're building these tow trucks. It's like buying a new tow truck. They can tow 3 cars, but they've only got 1 tank of gas. They have to throw the tow truck away and buy another tow truck. By working with us, we can deliver them fuel. They can now tow tens or hundreds of satellites. Completely changes the economics. So those 30 companies that are working to bring that to market are all very keen to work with us. We have a lot of deals.
How do you think about sort of, I guess, the unit economics of it? It's 20 million, I think, to create the product. You said maybe to get a cash flow break even, but per launch sort of economics, like how much does it cost to prepare that one system, get it into orbit, refill, and then do what you do with it?
Yeah, that's a very important part of our business model. So because we know the launch companies and we can work deals with them, we also have a payload that's very risk tolerant and schedule tolerant. So we can be a payload that fits in when there's an opportunity, and that way we can be very low cost in getting fuel to orbit. Whereas the customers who have the satellites, if they're putting fuel inside their satellite, they're paying the premium rate to make sure they launch on time exactly the way that they need. So we're actually able to get some really good deals with the launch companies, and that gives us a leg up.
You can think of us as third-class mail.
So can you talk a little bit more about the capital requirements in terms of like, is there a proof of concept or something you do with less capital that will prove to folks that they should give you the rest of it, or do you need it all at one time?
Yeah, absolutely. It's definitely staged. In fact, you can see the unit that we sent to the International Space Station here. The plumbing in here, the tanks, the valves, etc., are exactly the same as what we will have on our minimum viable product tanker. We take this tanker exactly this size, we put solar arrays, an off-the-shelf avionics package, and this becomes our first operational tanker. So we expect to launch that first operational tanker early next year.
And how much do you need to get to that milestone?
So we've just signed a seed round. Shout out to Tarek Waked from Type 1 Ventures. And that seed round is $3 million.
Okay.
That will cover the launch of that first tanker.
And do you think that the proof from that will enable you to get other customers to say,
That's
they're
absolutely
in?
right,
Okay.
yeah. And we have customers lining up. By the end of next year, we intend to do a full end-to-end fuel sale demonstration in partnership with one or two of the customers, and that will open the floodgates then to be able to sign contracts.
The picture showed the box of water inside the station, but I assume this is going to live outside. So I guess, have you tested it to make sure the water won't freeze?
Yeah, really good question. So having a lot of experience in the industry, we've done the designs to make sure that the thermal and the stress and the vacuum are all going to be acceptable with this design. And like I said, we need to add some systems to this, the solar arrays, avionics, etc., before it can be a free-flying tanker. So yeah, we've done those designs. We've started to do the testing. That's all planned for the next 6 to 9 months.
Really quick final question. All right, give it up for Orbit Fast.
Thank you.
Leave your gas cap is right over there so we don't lose it. That concludes the third session of the Startup Battlefield. The judges are now going to follow me backstage. They're going to help us choose some finalists who will be announced tonight. Before that, though, let's give it up one more time for our awesome judges.
As companies transition to using microservices in their architectures, more APIs are created across the organization. With this increase, it can become more challenging for developers to find these internal APIs and reuse them when they're developing new software. That's where Rapid API for Teams can help. Rapid API for Teams enables development teams to publish their internal APIs into a private workspace. Developers can find any internal API, view its documentation, test it, and connect directly, or collaborate and share information about the API right in Rapid API. Team members can also subscribe to any public API available on the Rapid API Marketplace, and the entire team can see and use that subscription. This way, you only pay once for any API your team uses. Rapid API for Teams makes it easier to share and collaborate on APIs. Get started today on rapidapi.com/teams.
Why did you come to this workshop? To learn. But quickly I realized I started unlearning some things which I've been doing very incorrectly in the past and which didn't really give me the results that they're supposed to get.
I want to be where we ask questions like why? And the big question I ask is what if? You know, it's a different way of thinking at Stanford than it is at any other university in the world.
I realized I was getting stale, so I said, you know what, it's time for me to move on and look for greater things and have more impact.
At Lockheed Martin, we're on a mission. Your mission. When millions of people are counting on you, you can count on us. To build the impossible, to invent the inconceivable, and solve every problem with speed and reliability. Every mission is an expedition of the greatest importance, both to you and to us.
we like to partner with local entrepreneurs who use technology to address big societal needs. We back local teams because they know their customers best and they're best placed to make the right decisions for them. We bring operating expertise and global scale to help our partners overcome challenges and grow their companies. Our teams love building companies that create value and make a difference. As well as our investments in companies such as Tencent and Mail.ru, we're building meaningful global businesses in online classifieds, food delivery, and payments and fintech. And we never sit still. We actively seek new opportunities to create value over the long term. It's what keeps us moving forwards.
What technology do you think will help us best deal with natural disasters? Go to the IBM booth number BF1 to pick your favorite from the Call for Code finalists. Over 5,000 people have already voted.
Ladies and gentlemen, please welcome back TechCrunch Managing Editor and Disrupt MC, Jordan Crook.
What's up? Everybody have a good lunch. Thank you, TechCrunch staff. Appreciate it. Yeah? We good? Can I get some enthusiasm in the room? Come on. Yes. We're like halfway exactly through the show. But I don't want you guys to fret because we have amazing, amazing things in store for you. One of which is coming up right now, actually, on the Extra Crunch stage. I'm sorry. I just always panic that my fly's down. How do I exit and what? I'm just going to breeze by. How do I exit and what happens next? That's going to be with Justin Kahn, co-founder and CEO of Atrium, Jess Lee, partner at Sequoia Capital, and Mike Marquez, who's the co-founder of Code Advisors. That's going to be a hot one, you guys. So if you want to check that out, now's the time to do it. And for those of us who want to stay safe and secure and private, I'm going to bring up our next guest. Please welcome to the stage Admiral Mike Rogers, who is the former director of National Security Agency, and Nadav Zafrir, who is the co-founder and CEO of Team 8, as well as your moderator, Zach Whitaker. Warm welcome, please.
Okay, we get this.
Hi, everyone. Good afternoon. Hope lunch was good. I'm really excited about this panel. Mike, you've spent a very long...
You've written notes. You're ready to go.
I've written notes. You've got a very long career in cyber. You spent 2 decades in the Navy. You spent 5 years at the NSA. You've served...
I spent almost 4 decades in the Navy,
oh, goodness me, yeah. And you served 2 presidents. You oversaw the NSA during a period of heightened tensions between the US and some of the other nations in the world. You're now a private citizen. You are working for Team 8, founded by Nadav Zafrir, who is sat next to you. Hello. Who used to run Israel's version of the NSA. I'm delighted to have you both here. So, it's been a year since you retired from the NSA. You began working for Team 8, a startup studio and a VC firm, for those who don't know, although you should. You must have had a lot of options post-government. Why did you choose Team 8?
So for me, number one, I was interested, just as I was in the military, it's probably what attracted me in the first place. I was interested in a mission that I cared about. I wasn't interested in doing something that was just about money. I was interested in doing something that I thought could generate better outcomes. And so cybersecurity was an area. It wasn't just what I did in the government. It's something I believed in, and I wanted to be involved in things that I thought could improve cybersecurity in the private sector and on a global basis, not just here in the United States. I love the people, I love the model, and the chance to work with Nadav. We did not serve our respective jobs. He, the leader of Unit 8200, the NSA equivalent in Israel, me, the director of NSA, the Unit 8200 equivalent, if you will, in the US. We didn't overlap, but I had known him by reputation, and because it's a small world out there in this area. And I just thought, man, I'd love to work with him.
So what was the driving force behind working for Team 8? Was it the startups? Was it the relationship that you had?
It's number one, the model. It's the idea that Team 8's an organization that wants to focus on hard cybersecurity challenges that if we can solve them, will make a significant difference. So that was number one. Number two, I liked the fact that because this is something I used to say in government. I would say, look, it is great to develop technology, but if we can't actually apply this in a meaningful way, we're spending a lot of money for no purpose. It's about how do we get to outcomes. And the outcome isn't just the development of the technology, it's the application of this. And I like the fact that the teammate model was all about, hey, we create companies to actually help this technology, this approach that we create, we then actually build a structure to actually implement it and execute it. I like that idea.
So you did get a little bit of flack from some of your former NSA colleagues for joining ostensibly a foreign firm. You know, what do you say to that criticism?
Number one, I would argue fully compliant with the law. In fact, so anything you do with a form, I actually had to get permission ahead of time. So I went to the government, said, hey, look, you know, this is an option for me. Want to make sure there's no issues, so I always get it reviewed. Secondly, my comment would be, so let me understand this. You have a problem with me working with one of our closest allies in the world. That's not the world I live in. My attitude is, if we can't think more globally, if we can't work with partners, we cannot solve problems. If you think the answer is, well, America is in cybersecurity, well, the United States is just going to do it all by itself, that has not been my experience. I find that to be a very narrow viewpoint.
And for those who don't know, obviously the relationship between the US and Israel in terms of intelligence sharing and collaboration is very close. So how did you two meet? If you didn't have any overlap in the intelligence agencies, how did you two meet?
Well, you know, the Admiral is a good-looking gentleman, and you know, we again, just like Mike said, we knew each other by reputation. So my successor has worked very closely with Mike and had just the most wonderful things to say about him. And so when I heard that Mike was retiring, I thought, you know, in terms of really thinking big thoughts, in terms of really understanding the fundamental fragility of the world that we live in, this is a team sport. And what Teammate does is brings together perspectives, right? So perspectives could be the retail perspective from Walmart, aviation from Airbus, insurance from Unicre, etc. But that's not enough. You need industry perspective, you need public perspective, you need the attacker's perspective, you need the government's perspectives. Because if you want to solve big problems, you first of all have to understand these problems. And there's really no one better than Mike to be sort of the lighthouse to understand not just why we're fragile today, but why are we going to be a little bit more fragile 2 years from now.
So tell me a little bit more about this and what Mike brings to the table and to the company.
Let's not talk about Mike. There's more interesting things out there to me.
No, I know, but I'm interested. You know, what does Mike bring to the table with his experience and so on?
You know, it's first of all, it's the experience, it's the leadership, it's the. I'll give you an example. We were in Tel Aviv a couple of months ago.
Yeah.
Talking to CISOs from about 100 of the leading enterprise around the world, about 50% from the US, but the rest coming from Latin America, Europe, Asia. And what Mike talked to them about is, you know, what does it look like when you're in a real crisis? You know, what does it take if you're a CISO to understand the problem, to overcome it, to explain it to your seniors? What is the decision-making process that comes with that? That's the kind of experience that in the past, leaders at enterprise did not have or didn't have to get exposed to. But you think about what's happening today, some of the most important infrastructures that make us as a civilization are not in the hands of government like they were in the 20th century. They're in the hands of private industry, all the way from the data, the utilities, and you know, data doesn't understand geography. So thinking about where a company is founded is not the question that you should ask yourself. The question that you should ask yourself is, do they understand the challenge? Do they have the right scruples? Do they share a common ethical infrastructure? And if the answer is yes, please work with them.
So you have 7 companies in Teammate right now, is that right?
Right.
And so tell me a little bit more about these you know, the companies that you have, the challenges they're trying to solve.
Sure. So, you know, I'll tell you about a couple, right? So let's start with the physical world that surrounds us, right? You know, let's all face it. If the lights go out right now and we find out in a couple of hours or in a couple of weeks that that's happened because of some kind of cyber distortion to the local utility, nobody in this room is going to be extremely surprised, right? Because what's happening is that we're getting convergence between the physical world and the virtual world, and we're getting convergence between two different environments that honestly were never meant to be converged. In this case, the internet and legacy environments in the real physical worlds and utilities. And so, for example, that's one thing that we're very concerned about. And one of the companies that we started, which is Clarity, has the ability to visualize into a very, very detailed manner every black box in every physical infrastructure so that now you can connect it to the rest of the world, to the IoT, to the internet, but you can do it safely, securely, optimize everything. This is one thing that we're very, very working very closely. In fact, Galena, one of our founders, is in the crowd here, and they started a tremendous company that is now literally deployed around every continent in the world, every industry in the world, making it safer, more secure, but also be able to modernize it, to connect it to the rest of the world.
So one of the things you have here, IoT, industrial control systems, companies focused on privacy. Admiral, privacy is a big thing these days. End-to-end encryption is on the rise. It's almost ubiquitous. It's on most messaging apps. With your experience at the NSA, how difficult is the NSA's job with the rise of end-to-end encryption?
I mean, it certainly makes, from a technical perspective, it certainly makes access potentially more challenging. For us as a foreign intelligence organization operating when we're doing our mission outside the United States, there's things that we can do where you can think beyond the encryption. You can think a little bit more broadly when you're thinking about penetration and how you access. So that, gives us some options. I thought the bigger challenge was more, it wasn't for us and our mission so much, but for our law enforcement teammates when I was in the government. If you're the local sheriff, if you're a state trooper, if you're the FBI, and you don't have the technical means to access devices or information that may contain insights, criminal activity, exploitation of youth, drugs, kidnapping, application of violence, how do we as a society, and this is something that all of us should be concerned about. This shouldn't be the government unilaterally deciding it. You don't want an intel person or a law enforcement person deciding this. I would also argue, no disrespect to the audience, but I don't want the tech community deciding this unilaterally. My view is we need to have a conversation as a society about what are we comfortable with respect to privacy and securing the rights of the individual and the data associated with them, as well as the broader, also an imperative, how do we ensure the security and safety of our citizens?
Yeah. Right now, there seems to be a deadlock between the tech companies in Silicon Valley and law enforcement and the intelligence agencies and the US government, especially when it comes to encryption and privacy. There is this deadlock. Is there any way to break that deadlock? Would it require legislation?
Well, my attitude always was be leery of directing something from the government. Not that government doesn't have an important role, but I think just historically, in general, we don't always get that right. When I was in government, the argument I tried to make was, can't we do some very simple coordination between the private sector and the government and take a look at what's in the range of the options? Because I thought there were two questions. Number one is, what can we do? What's in the realm of the possible? And the more important conversation, though, was, well, what should we do? Because those aren't always synonymous. And one is a very technical kind of focused discussion, and the other is much more about ethics, morality, legal framework. What are we comfortable with? What's going to reflect our culture, our heritage, our structure as a nation, and the things we value? Those have all got to be part of this. It just can't be, well, in the name of security, we should be able to access anything, anywhere, at any time unilaterally. I don't buy that. I mean, I was an Intel professional for 37 years. I didn't buy that.
Yeah. So Team 8 is obviously doing very well right now. You've got, for the security startups in the audience, where should they be focusing their energies? What are the biggest opportunities?
Yeah, so I think we're moving from protecting the existing infrastructure to trying to think about what's the world going to look like in a few years. And so if you think about privacy, for example, right, I think there are 3 layers that we should think about if we are going to make good things happen. Because when we speak about cyber, we're usually focused on the really terrible things that may happen. We don't put enough emphasis on the really good things that may not happen because regulation is not moving fast enough, because culturally we're not moving fast enough, because we find ourselves in really bad dilemmas and conundrums between using the data and infringing privacy. So, one of the things that we're working on right now on the technology level is introducing new concept in mathematics that will enable us to do both, right? That is, to encrypt data, but still use computation on encrypted data. So there's a very smart lady that her name is Shafi Goldwasser. She got the Turing Prize for this, for the theory around multi-party computation that literally allows you to take data, encrypt it, and run computation on encrypted data. So apropos government and private, for the first time in the UK, we've introduced this as a practical software which allows law enforcement to shorten the times it takes to do investigations for serious crime, anti-money laundering, etc. Encrypting their queries so there's no privacy issues, querying the data lakes of banks and other financial services without actually seeing their data, dramatically shortening the time that it takes to actually find these people without any privacy issues. And so it's always the layers, right? There's a cultural layer, as Mike said. What do we think about this as a society? Then there is the regulator level, and I think the regulator has to move from being prescriptive to being descriptive, because by the time you prescribe something as a regulator, it's always based on best practices. The problem with cyber and is that it's moving so fast that by the time something becomes a best practice, it's obsolete. So you have to be descriptive, not prescriptive. And then the layer of the technology is where we want to come in and bring fundamental changes. So Duality, which is doing homomorphic encryption, led by Professor Shafi Goldwasser and other professors, is one example. But there are others. We're also doing using multi-party computation to access blockchain without using a key at all. The company is called Curve. The idea is, here's how we protect the stuff that's already out there. Here's how we enable the future with using fundamentally transcending technologies that allow us not to be in this dilemma all the time.
Can I make one comment?
Sure, by all means.
One thing I would say to any startup, please think about security as a core aspect of whatever it is that you are developing or producing.
So whether or not you're a security startup.
Right.
Right.
Because one of the things that always amazed, look, we both ran organizations that in defending their respective nations penetrated networks for a living. And you can always tell systems in which security is a bolt-on that was added after it was written, and there are always potential access points. One thing I try to say to organizations is, look, you can't view cybersecurity as an afterthought. You need, just as you are always asking yourself, so what's the user interface? What's the user experience going to be like? I would argue you also be saying to yourself, so even as I'm optimizing that user experience, even as I'm focused on achieving the most effective, efficient way of executing whatever it is I'm trying to generate, can't you also say to yourself, and how do I do that within the most reasonable and responsible security framework that I can develop? But that part of the equation is often missing early in the cycle when it comes to development of organizations and capabilities.
You mentioned that, obviously the NSA does a lot of, offensive security work, essentially, hacking into, the enemy. And now you're working on, with startups focused on privacy, security, and defensive measures. How do you reconcile the two? You kind of go from one, career to almost, it seems like the polar opposite.
Well, remember, when I was the director of NSA and the commander of Cyber Command, I not only worked the offensive side, but I worked the defensive side. So as the commander of Cyber Command, for example, responsible for the defense of all DoD networks, data, weapon systems, and platforms from a cyber perspective. Also tasked with applying DoD, Department of Defense capability to support critical infrastructure in the private sector against cyber activity from non-US entities. So there was always, I've done every bit as much defensive stuff, if not more. NSA, we develop all the encryption from the mathematical algorithms to the actual production and distribution to include the football for the president, et cetera, every missile silo, every B-52 with nuclear weapons. So I've been part of teams that worked the encryption piece. So I was very fortunate. In my previous life, I've been able to look at this from a kind of tactical day-to-day execution. How do you defend? How do you penetrate? I've been able to be part of broader policy discussions about, okay, so how do we translate this to policy outcomes? I was very fortunate and got to spend a lot of time in the private sector between, up in New York as well as here in the Valley. So how can we partner together better? So I always try to remind people, look, I got it, the offensive piece is the sexy stuff. Secondly, one of the things for me that was a red line was I will not participate in any private sector offensive activity. That, to me, should be retained under the control of the nation state.
Obviously, there's this notion of hacking back as well, which is a controversial issue recently. So
now, the challenge with hacking, not challenge, part of hacking back is, so first, it's how you define it. I have seen some people describe this from what I would consider pretty escalatory offensive acts to fairly benign, hey, look, I'm just trying to make sure I can forestall what they're doing. And there's a wide spectrum there. In general, and I can remember saying this in the White House Situation Room with the leadership many times, as an individual who was part of teams that were tasked with securing and defending, the analogy I used to use with them was, look, I know sometimes you look at me as hey, you're leading the teams that are helping. I wasn't the only one, and the DoD wasn't the only organization, but hey, you're part of this broader government effort to secure cyber. What about hackbacks? And my comment would be, look, I already feel on most days like it's the Wild West, and myself and the team I'm a part of, we're the sheriff on the street. I said the last thing, in my opinion, that you want is more people running on the street with guns. This isn't the answer. I was also concerned about, so how comfortable are we with precision and attribution? Because if you don't get the attribution right, you get massive second and third order effects. From a liability perspective, I'm not a lawyer, but one of the conversations I've had with general counsels of large companies to small companies is, so if you go down the hackback road and you incur second and third order effects, what's the legal liability for you? And most lawyers will look at you and go, well, it potentially is pretty significant. Just in general, to me, my attitude is I certainly would not go offensive.
So while I have you two on stage, you both have seen all kinds of hacks and activity over the years. What do you two do to keep safe and secure?
Hey, you go first and I'll give you an opinion.
I think there's a generational gap. So my generation, we grew up where everything was private, and you decide what you want to publicize, right? What do you want to publish? And we're almost in a situation today where it's the opposite. Everything's public, but you can still choose what you want to keep private. And I think this generation, millennials and beyond, I think there's going to be a backlash back to privacy. And I think the world in which we traded our data and privacy for convenience, that party is about to end. I think the music is subsiding. I don't think that's going to be the future. I think in the future we'll see a backlash back to privacy. I think people value their privacy. I think it's a fundamental right that we have. And in that sense, I think the key word is trust. So, we came from a world where we knew each other, we grew up together, we had coffee, we talked, so we got trust. And then the world got connected. And so we said, we trust, but we need to trust but verify. And then the world became hyper-connected. And we said, now we are going for zero trust. And zero trust sounds very appealing, but it's also very costly. And so I think where we should go is beyond trust. Beyond trust meaning the stakes have to be at a position where we're able to collaborate without the high price of zero trust. And that's this kind of stuff that we're trying to do with homomorphic encryption, with Duality, with MPC, with Curve, going forward, creating that infrastructure that takes us beyond trust.
Admiral, we only have a minute left on the clock. You spent 5 years at the NSA during a pretty, many changes happened.
Interesting time.
Interesting times, let's say. You oversaw the NSA during the aftermath of the Snowden disclosures. There were multiple leaks. There was the exposure of the NSA's prized hacking tools by the shadow brokers. What is your biggest regret?
I'll be honest, I have very few, if any. I feel more pride than anything else. I got to work with incredibly motivated men and women doing something that mattered within a legal framework that we fully supported. And in so doing, we created increased security for the citizens and our friends and allies.
And do you think NSA
I loved every day of that, and I would do it all again in a heartbeat.
And do you think NSA is ready to continue with its mission for the next 5 years, 10 years, given the issues that we're facing with encryption and privacy and so on today?
Yeah, I mean, there's always been challenge. Hell, I can remember in the late 90s when we were going from radio frequency-based communications to the world of the network. And I can remember at the time was the executive assistant to the senior kind of signals intelligence officer in the Navy. And he was having a discussion with the director of NSA, and the director was telling him, oh man, things are terrible. We're going to lose access. We're not going to be able to do some of the things we used to do. And my attitude is, look, you look at these motivated men and women, you look at their focus, you look at their commitment, you look at the level of support that this nation, its citizens, the money, the legal framework that we've created to try to make sure we strike a balance and that we're mindful that we are operating as intelligence professionals in a democracy. This isn't the authoritarian states of my counterparts in Beijing or Moscow, where I would look at what they would do and I'd go, we not only couldn't do that, I would never do that. That would never work within this legal framework and the fundamental idea of the rights of the individual. We couldn't operate, I wouldn't operate like that. Bottom line is I always tend to be a positive individual. Look, motivated men and women can take hard problems and they'll do well. And there are such motivated men and women on those teams at NSA, at Cyber Command. I was very fortunate to be a part of it. I was very fortunate to get to work with teammates like 8200 in Tel Aviv and in other places around the world to try to address problems that if we didn't solve them or if we didn't improve our ability, we were going to see men and women die. You don't ever forget that in the job.
That's all the time we have. Thank you so much for your time.
Thank you.
Thank you.
Thanks, you guys.
Thank you so much, gentlemen. Appreciate it. No. I don't like that. Okay, on the Q&A stage, blasting into space with Tess Hatch, who's an investor at Bessemer Venture Partners, Sarah Spangelo, who is the co-founder and CEO of Swarm Technologies, and Adrian Steckel, who is the CEO of OneWeb. If you have questions about space, you know where to go. Hit up the Q&A stage. Our next guest is the CEO of a company that tends to fly kind of under the radar, but they have their hands in payments and fintech and food, classifieds, travel, retail, media. I mean, you name it, they got it. So with that, I'd like a warm welcome for our next guest. Please welcome to the stage the CEO of Prosus and Naspers, Bob Van Dijk, and your moderator, Ingrid London.
Hi, everybody. Hey, Bob. How you doing?
Very well. Thanks for having me.
Yeah, thanks for coming. So now we're here in the US. Naspers is not an American company. So I think maybe we should start out with you giving us the elevator pitch for Naspers, because I'm not sure how many people know who you guys are.
No, absolutely. So we're actually both investor in many consumer internet businesses around the world, and we're also an operator. So we have about 20,000 employees in the group. We invest in consumer internet models that are high growth, that typically would address a very fundamental societal need and has a lot of runway for growth. And we do that in the segments that we just heard about. So we're pretty big in food delivery, probably one of the biggest investors in food delivery around the globe. We're very large in fintech, particularly in enabling online payments in growth markets, where India is probably our most important market. And then we are the owners of the largest classifieds group in the world with OLX.
Right. And you guys had a major event in the last several weeks, which was Prosus. Prosus, do you want to tell us about what happened there?
Absolutely, yeah. So we took all our international consumer internet assets and we listed them on the Euronext exchange in Europe. That was
basically hived them off of the South African company, right?
Yeah, we listed them separately,
yeah.
And we placed a good chunk of those shares with our existing shareholders. So we didn't issue new shares. We didn't do a capital raise,
right?
But we issued those shares to our shareholders. It's been about $120 billion market cap company, which is the first time that Europe has a consumer internet company of that size, which is an exciting event.
So why did you decide to do that in Amsterdam?
So there were
not the U.S.
Yeah, there were a few really good reasons for it. So first of all, it is a very large exchange, about 4 trillion in overall market cap. So we knew we could have a lot of runway to growth from there. We think we can double the value of the company in the next few years, and we really needed a place where we could find that space, and Euronext has that. A few other things that were working really well for us. So we have our global AI team sits in Amsterdam. I sit in Amsterdam. Our mobile engineering, mobile marketing team sit in Amsterdam. So you have a great presence there. We found it also a great place to attract global talent. We even get great people from San Fran to move there. So we like the place a lot.
Yeah, I mean, I think Amsterdam has had an interesting evolution. You've got companies like Adyen there and so on. So it's had much more attention, I think.
Yeah, it's become much more of a tech hub in Europe. And it's also an easy place for people to settle. Now there is this sort of critical mass of great talent, engineering talent. So
yeah.
There.
Now, the important thing about Prosus, which you didn't mention at all, is the fact that it's got your holdings in Tencent, which is, of course, the parent of WeChat and a bunch of other things. Now, you guys are holding on to all that. Now, you said it's not raising money, but are you planning to, in the future, raise money through Prosus in any way?
So we'll see how we go. I think one of the things that was really important for us is to attract a new set of investors to the group, right? So we've been traditionally, even though we are sort of 100% consumer internet, if you look at our revenue base, we've had a lot of emerging market-focused investors in the company, which we are very excited about, but maybe a bit less represented on the tech side.
Yeah.
And that was very, very important for us to do. And also, since it's such a rare listing of that size in consumer tech in Europe, we're getting a lot of attention.
So it is a massive business, Naspers. It's, either giving you a mic, you're a little too quiet. Maybe, yeah. Thank you.
Try this.
Oh yeah, there we go. So yeah, it's a massive business. It's got Tencent and lots of other things inside it. Based out of Amsterdam. How much of an issue is it that you don't really have any profile in the U.S.? Is that a big deal for the company? Do you want that to change? Because a lot of your businesses are actually not in the U.S. They're in emerging markets. They're in Asia, and so on.
Yeah, so we've been historically, if you look at what the company's been doing, we're very much a growth company, right? So currently our organic growth is around the 30% mark. In some of the segments in food, it's growing more than 50%. And growth often has led us to go to growth markets.
Yeah.
But we're not a growth markets per se company. So we have invested in the US actually quite a bit in the last few years in a company called Letgo.
Yep.
So that's enabling people to use their mobile phones to buy and sell secondhand.
It's like an eBay disruptor.
Yeah, it is actually a new way, simpler way for people to sell things they don't need anymore. Basically, the guy who founded it, Alec Oxenford, is a great guy. He has as his mission in life to make selling something as easy as throwing it away. So then we invested, I think, around $500 million in the US in that platform. We also have a ventures presence here in San Francisco, actually just a few streets down the road, that looks at newer earlier stage companies, and particularly that have a global potential. Because I think what we really bring, and we operate in 90 countries. I spent 200 days a year on the road seeing the business in that country. And I think when you are a young company out here that has global potential, then I think we're the right kind of partner.
Right. Does that mean that you think you might try to increase your presence in the U.S. over time, or
so
do more investing here and so on?
We found some amazing early stage companies that we've invested in here. A company like Honor, for example, also out of the US, that is basically digitizing how people deal with elderly people who need care.
Right.
And doing that in a step change way. So I think we've seen exceptional companies come out of here, and we love it when they have a business model that addresses something that really would apply to the entire world.
Yeah. You were saying you've got a lot of investments in food. You've got also tons of fintech that you're doing. And maybe if we could put that all into the bigger basket of commerce. Why did you guys decide to focus on that area? Because if I could extrapolate from all of that, I would say it's sort of around digital commerce. Why?
So we think commerce is probably, in terms of addressable market, one of the largest opportunities out there. And I think there's another key criterion in there for us is we look for big consumer needs as one of the things we do. So commerce is a logical one, and food, I guess, is part of commerce. And also we have had, I think, most of our experience on the consumer side, right? We've been, as a company, around for a long time. We've always built consumer businesses that are driven by technology. So this is where our core expertise is, and I think also where a very large part of the opportunity lies.
Okay. In that area, one thing that you've done a little bit in, you've dabbled in it, but you haven't done so much, but I'd be curious to hear what your opinion is on it. Where are you on cryptocurrencies and Bitcoin and all of the rest?
Yeah, we've done 3 investments in
Yeah.
crypto so far. We are in...
But on a smaller side.
They're all relatively small.
Yeah.
So I think we are tremendously excited about what crypto can do for the world. And I think I would hope we're seeing sort of step one of 1,000 steps going forward. I hope really we're 1% or less into what it can be. And I do think there's, in terms of actual practical applications that take people's fundamental need and improve them, I think there's a way to go. I think we've seen a lot. I think the potential is high, but I think it's still very early days.
Do you think there's a lot of speculation and conning going on in crypto at this point?
Well, I think it's a mix, right? I think in terms of the ICOs, I think there's been a tremendous amount of mischief, and we've stayed relatively far away from it. There's also some really valuable ideas that are looking for backing, so you really have to be damn careful.
What do you think of things like Facebook's Libra project?
So we're one of the people who are supporting Libra.
Yeah, I know.
So one of the reasons that we got excited about it, we do a lot of work in growth markets, right? Where actually for people to transfer value, and it goes with incredibly high transaction cost, and there's typically a lot of friction and there's a lot of uncertainty there. So I think if you think what Libra could be, it would be a tremendous asset for people, particularly in those markets who don't have the benefit of a stable currency and low transaction fees.
Yeah.
So we think it can do a lot of good for the world. And we also think that it will be successful if many people support it. And that's why we were attracted to support Libra. And we have good hopes for it. I know there's a ton of discussion around the regulatory aspects of it, and that will need to be worked through.
Yeah, I mean, it's been really rocky for them so far, I think, because like they did launch with a lot of names attached to it, but you keep hearing about people threatening to pull out. I think the latest, I read a rumor that PayPal is apparently looking to not be involved anymore. I mean, is there something that could lead you to making that kind of a choice too? Or are you committed for the...
No, I think the reasons why we started supporting it still hold, right?
Okay.
So I think there's a number of issues that need to be worked through, but I think what it can really bring huge benefit to people, particularly in the markets we know and care about. And I think we see that if we have the right players behind it could be a great thing to build.
Okay, fair enough. Okay, I'm going to switch to one of the other things that you're doing in fintech, not fintechs as such, but in commerce, which is all of that food delivery and everything. You're a big player in that in certain parts of the world. We're going to have Postmates on later today, and I think it's a really interesting area, but it's making a lot of losses right now. It's a tough one to do as a business longer term. How do you think it's going to switch over into being a profitable industry? It's definitely popular. It definitely is growing, but it's definitely losing money. So, what do you think?
Yeah, if you look at, we deployed about $5 billion in online food delivery, so we hope it's going to work out. We obviously think it's going to work out. One of the things we spend a lot of time on when we go invest in is it a fundamental consumer need? And I think people spend a lot of time and money on food, and technology has actually played a relatively small role, I say, in the whole food delivery and food preparation space. So we know that technology can do a lot over time. And what we then spend a lot of time is like, do we understand the business? Are the fundamentals of the business model healthy? And I think in food delivery they are. So we had, for example, we started investing in food delivery almost a decade ago in Brazil. And we invested in a company called iFood that was actually profitable a year ago.
we saw the unit economics were great, but we thought this business opportunity is actually much bigger than we thought. So it's probably, from here, it's probably a 20x opportunity in terms of growth. And other people are spending against that as well. So you'll see, I think, you'll see losses, you see cash consumption, because the overall endpoint is so exciting. So we're quite comfortable we're going to get there.
Yeah, okay. But generally speaking, though, as an investor, I mean, you guys are an operator, but you're also very much an investor. So you take stakes in these companies. But a lot of them are still in this wider area of delivery and so on. It's, you know, they're still in the black or in the red. How much of an issue is that for you as an investor? And how willing are you to stay in the companies while they're loss-making longer term? Will you stay until they're profitable, or just until you can sell your stake to someone higher? Or?
No, in many cases. So one of the things that is typical for us, we are a long-term investor. We're not a fund, right? So we have no exit horizon. If we like an investment, we can stick with it for 20 years, as we have done with Tencent, for example. So we have a long-term horizon, so we don't need to get out, and that's important for us. We do need to have a lot of confidence that the business model works, and then we don't mind, as long as we see progress, that it consumes cash for a while. For example, our classifieds business, we started investing in it, I think it's about 8 or 9 years ago, and they made operating losses for 7 years. They turned profitable last year. Right. And then everybody says it's a great business. Well, we told you it was a great business.
Right. But it's how about, you mentioned Tencent, which is, I'm glad you did. You guys are their biggest shareholder now, is that right?
Yeah, that's right. We have 31% of Tencent shares.
That's an amazing thing to have. Now, of course, you guys amassed that when it was a much smaller business than it is now. But it turned out to be a huge hit for you guys. But you don't really have much of an involvement with the company operationally, do you?
So we have 2 board seats
yes.
At Tencent, and we're actually very well connected. And we've been invested for 20 years. And I must say that if you look at the opportunity that the Chinese internet has, because of the sheer size, obviously almost 1 billion internet users, the digitalization of the Chinese economy, I think, is at a level that the rest of the world needs to catch up on, and is not even close to. And I think the level of innovation we see there as well, it's just a fantastic opportunity. And within that space, I think Tencent has the most amazing leadership team. A very humble, innovative, hungry, fantastic team.
Do you have much of a say when they come up in controversial ways? So, for example, you know, there's questions over censorship in China, and what role, you know, Tencent, of course, owns WeChat, amongst other things. Do you have any involvement on that front when they have to face those sorts of questions, both in the international arena and in China itself?
No, I think the broader question is, and it's a really important question around how we operate. So we are a company that empowers local entrepreneurs to run their business, right? We do that in China. We're a shareholder. We're an active, engaged shareholder with close ties. But the companies that we have are operated by locals. So if you take India, for example, the food delivery business that you mentioned earlier, we've invested behind a tremendous entrepreneur. It's called Harsha. He runs the business. He deals with the specific local issues that need to be dealt with. And we operate in 90 countries. We really have to do it that way.
Yeah. So you don't try to get too involved in the.
No, we get involved in the strategy, but not in the local components of the business.
Okay. With Tencent, I know that you have a fairly large stake in the company. Do you have plans on changing that in any way, either growing it, trying to grow it anymore, or to reduce it and use some of the proceeds for something else? What's your sort of long-term strategy with it?
Yeah, we are really excited about the further growth potential of Tencent. So if I mentioned before, the overall market, I think, is the most attractive internet market in the world. And within that, I think Tencent has a tremendous position in terms of WeChat, but also if you look at the video business, if you look at the payments business, it just has a tremendous further runway from here. And we're really excited to be able to be there. So we want to see that further growth happen, and we're very proud to be part of it.
So would I take that to mean, would we understand that as you want to stay where you are? You don't want to grow it or reduce it in any way?
No, we've actually said we wouldn't reduce it in the near future. Okay. And given the future opportunity, we love it.
Do you think you'll may have an opportunity to increase your stake in it as well, or?
It's a good question. I think if I look at what we try to do, we're a growth company. We want to invest in consumer internet in the places in the world where there's most to be gained in our view. And we might be wrong, but I think China has been a focus for us for many years. I think if you look at where we spend a lot of our money in the last few years, we've been very active in India, for example.
Yeah.
And we spend probably most of our free capital in the last few years in India because it's been such a tremendous leap from only, say, 10, 15 million internet users 8 years ago to almost 500 million now.
Yeah.
And we're looking for those breakout opportunities. So that's where we'll probably spend most of our capital going forward.
Okay. Do you think that you may ever find an opportunity like Tencent again? I mean, you must wake up every day and ask that. What's the next Tencent?
Yeah,
Or do you think that we've passed that period? We're not going to find that kind of high growth company anymore in the tech world.
So we looked a little bit at how Tencent stacks up versus other investments that others have done, not so much ourselves, but we believe it's probably the best internet investment that anybody has ever done. So everybody is looking for the next Tencent.
Yeah, I mean,
in a way.
SoftBank had Alibaba. SoftBank's very
Exactly.
Naspers-like company, of course.
Yeah, no. So I think if you look at some of the companies in our portfolio, I think there's tremendous growth opportunity. Whether it will be as great as Tencent, who knows?
Yeah.
I think on our current e-commerce portfolio, we've managed to deliver an annual return of about 20%, which is well above market. If we keep doing that, I think we should be pretty happy.
Okay, I have just a couple of minutes, and I do want to. I mentioned SoftBank for a reason. You guys have been compared to them before. You're somewhat similar. You're outside of the places that you're investing. You have a large sum of money. You have an engine behind you, which is these fantastic investments out of China. How do you see their investment strategy? They've done really interesting things with the Vision Fund. Some would say very controversial in the current moment. What do you see there? Can you see yourselves ever trying to do something like that? In terms of forming a fund and going for really, hell for leather with really big investments into things. Using your acumen and so on.
Yeah, I've met Masa and many of his team at several occasions during the years, and I think they're an impressive group of people, impressive bunch of people. And I think what they've done is certainly unprecedented, and it has had a big impact on the industry. We've taken a different approach, right? So as I mentioned earlier, we're not a fund. We can invest for 20 years, and I think that actually helps because it allows you to think over a very long amount of time what will be the things that create value. And food delivery, I think, could actually take a lot of time to get to its full potential. I think it's 20x from here. I think they're great investors. They are very broad in their approach. We're typically more focused, right? We invest in those areas we really know. And that also, I think, is for us the right thing to do.
But do you think you might ever try to take a page out of SoftBank's book and try to do the approach that they've done? Or do you think that's been a bad approach?
So I don't think it fits us, right? I think one of the things that has served us really well is to build up expertise, but to find things we think are interesting, build up expertise, and then go bigger. But stay in an area that you really have a good view on. And I couldn't deploy 100 billion in the things that I understand.
Okay, so no plans for any funds of that kind?
Unlikely.
Do you think they've done the right thing by doing it the way they've done it?
Look,
it's really come to bite them with things like WeWork, hasn't it?
It's hard to speak about their specific investments. Actually, we've co-invested in Flipkart. And there I think we had the same vision of an attractive Indian market with high growth and great founders. And that's I think where we overlap. There we have very much the same view. And I think they have taken a broader approach, and a bigger volume approach, and I hope it works out.
Okay, we're out of time, but thank you so much. Appreciate it. Thanks, everybody. Thank you.
Well done. All right. On the Extra Crunch stage right now, we have how to be a positive force in the gig economy. Should be self-explanatory. We've got Amanda DeCadnett on that. She's the founder and CEO of Girl Gaze, and Derica Marins, who is the executive director of Working Partnerships USA. So if you want to check that out, now is the time. Here on the main stage, please welcome Assistant Director for Cybersecurity at the Department of Homeland Security, Jeanette Manfra, and your moderator, Zach Whitaker. Warm welcome, please.
Hello again. It's been a while. It's been 20 minutes. So very warm welcome to you. You are the most senior cybersecurity official we have at Disrupt this year. We're absolutely thrilled to have you. You're the Assistant Director at CISA, at Homeland Security, the new consolidated cybersecurity agency that's been around for about a year now.
That's correct.
How's that year been?
It's been pretty good. Not sure how many people know about our agency, but we are specifically designed to work with the private sector to defend against the most sophisticated threats of our country.
So what kind of threats have you seen, the threat landscape over the last year? You know, how's that changed?
Well, it often depends on what you're talking about.
Yeah.
A lot of times when we're in the...
Because there's a lot that you work on. There's
There's
an
a
awful
lot that we work on. You know, sort of at a high level, what we focus on is, on one hand, we're very involved in protecting federal networks. So everything from, you know, if you think about the database that houses everybody's social security numbers, which a lot of people need to have access to our immigration systems, to your, you know, school financial aid forms. There's a lot of information that the government holds. So we do a lot of work with that, all the way to critical infrastructure. So, you know, trying to prevent nation states from getting into our election systems, our electricity, our financial systems. And so it's a broad sort of swath that we cover. The biggest thing that I'm really proud of that we accomplished over the last year is we released something called the National Critical Functions. And this was really important because in cybersecurity, especially in DC, which is a, you know, sort of a unique place that has unique conversations about technology and cybersecurity, and it can get very broad. And over the years, what we really started to realize is we needed to define what it was we're actually defending. And so it's not sort of a specific industry necessarily, which was the big shift, and elections really taught us this, is when you have an adversary that's seeking to undermine a confidence in our democratic institutions, they're in some ways they're doing that through, you know, trying to traditional hacking, but then there's a lot of other ways that an adversaries try to accomplish their goals. And so coming up with these national critical functions, which is public, and covers everything from thinking about how we're trying to defend the internet ecosystem and to broader areas.
So you mentioned the nation-state threats that the US faces. You've got Russia, North Korea, Iran, China. What does it mean to build better cyber defenses against nation-state attacks?
I think that there is an element of, you know, building the actual technology defenses, and that's important. And when you think about a lot of these institutions that are the targets of some of these nation states, some of them have a fair amount of resources at their disposal. Many of them do not. Many of them are run by state and local organizations, and so they are often the least able to procure a lot of these, you know, sort of sexy cybersecurity technologies that people like to talk about. So there is a component of you know, how do we work with the market to build more secure solutions, particularly in industrial control systems. It's a space that we work in a lot. But then there's also, and really what we've learned over the last couple of years in particular, it's also about building a more resilient and aware public. Much of our institutions are built on trust, and adversaries have learned how that they can manipulate that trust in those institutions. So it's not just sort of a technology thing that we have to approach. It's really these sort of broader trust issues, and importantly from the federal government, you know, how do we get information out into the public, but also how do we get it to those who own those systems, who can do something about the threat.
So you have quite a senior job. You have an agency doing a lot of work. You know, most people have a 9-to-5 job. I don't. I cover cybersecurity. It's never ending. You know, some people go home and have a beer, and I don't get to do that. You know, for you, is it ever quiet, or is it just like drinking from a fire hose?
It's relative. I've been doing this now a really long time. I was in the Army for several years, and I've been with the department for a little over a decade. And so I think what I've sort of forced myself at least to do is you have to, you're in this for the long haul. And there is always something going on. There is always a breach. There's always reporters that are reporting on things that you have to deal with.
Those pesky reporters.
and so there's always something going on. I think what's really important, I have an amazing team of several hundred people that, we do have 24/7 operations, and it's about putting the trust in the team. It's recognizing that every day can't be that sort of most urgent fire hose. You got to save it for when things are really bad.
So, you've been in government for, over a decade, and so, the US government has a bit of a skills shortage, the private industry is, pays more, national security clearance takes a while. Is it a national security risk that the US government struggles in places to compete with private industry?
I would say it's broader. It's a national security risk that we don't have the talent, regardless of government or the private sector. We don't have enough. There's a lot of people that talk about the tech shortage overall, but particularly to security, it suffers even more, and we have a massive shortage that we are actually expecting that will grow larger. So we actually spend a lot of time investing in even K through 12 curriculum. We have a scholarship program that we put in place, and I think we're trying to change the way that people think about working with the government too. A lot of times historically people think, you go to the government, and then you've got 30 years, and then you have your retirement paycheck. That's fine. That's great if people want to do that. But I also recognize that there's people that I'll pay for a scholarship. They come work for us for 3 to 5 years. We train them. They're awesome. But then they go and they work in the private sector for a few years, and maybe after their kids are done with college, they can come back and work for us. And but I think some people refer to that in a negative way. I think it builds a community of people of a shared sort of experience. They understand what it's like on the government side. They understand what it's like in the private sector. And in security, we're really all trying to do kind of the same things. And so that's the culture. And we actually will be debuting in the next year an entirely new workforce program that's really modeled after how tech companies recruit and retain individuals. And so we're really trying to change the nature overall of getting people more into security overall, but also particularly encourage them to work for us, even if it's only for a couple of years.
Yeah. So CISA does a lot to warn businesses about the emerging threats. Some have complained that they're not getting the intelligence that they need. What can the government do more to protect private businesses?
So I would say, first of all, private businesses, there is an accountability. They need to be responsible for protecting themselves. Oftentimes, we do a lot of incident response, and we see a lot of people that weren't doing really some of the basics. And oftentimes, it's because they didn't think that they had anything of value that somebody would be after. They didn't really think about the fact that they have a business relationship with, maybe they weren't the end target, maybe they were just the stage to get to the ultimate target, or they don't think about the fact that their product is collecting a lot of private information that a criminal could monetize, or a nation state could even collect. So that's kind of part of it, and we're really trying to. And I don't know. A lot of people are aware, but this is National Cyber Awareness Month. Is October, so consider yourself all aware. And but one of the things we're trying to really focus on, particularly in October, is raising the level of public awareness. Everybody now interacts with the internet or computer or network system in some way. So how can you be accountable for that? How do you act as a responsible consumer, as an online citizen in your business? And so in terms of that, I think it's very important. And I also think a lot of people think cybersecurity can be fixed by better and more intelligence. Intelligence is not going to solve any security problem, much less cybersecurity. And a lot of it, we'd like to see, more market solutions, more automation, more orchestration of capabilities that are at a price point that, more organizations can afford. And I think the government has an opportunity to sort of push some of that, more standards. We do need to get more intelligence out. I will say we need to do better on that. When we have intelligence, we need to get it to organizations. And importantly, it needs to be in a way that they can do something with it. It can't be just, hey, here, here's this IP address, it's bad. It needs to be, here's what's going on, here's what we understand, and that's often very hard for government to release that information.
So what can improve that intelligence sharing relationship? It goes both ways.
It does.
You've got companies like Facebook who have complained historically that, in the run-up to the 2016 election, they weren't getting enough information. And it does go both ways. So how can the government proactively try to improve that relationship?
Yeah. Well, I think there's a few things, and those are valid complaints, and we've spent a lot of time. A lot of what we do is we're the point for sharing that information, even if we're not the ones that originally collected it. And what we found is that you'll have, and you heard from the former director of NSA, you'll have the NSA, you'll have other intelligence community people, and they have a piece of the puzzle. But where we sort of see ourselves is that's one part of it, but it's missing context. And we're doing a bunch of work with the banks right now and talking about these national critical functions, and understanding how the wholesale payment system works, and you're talking about the trillions of dollars that banks are clearing every day. That's something that an adversary would probably want to disrupt or degrade, or even just give the perception that they're doing that. So it's not so much about, and the government needs to have that understanding of how those systems work in a way that, in a level of depth, that you can then turn to the collectors and say, hey, can you tell me if you've got anybody looking to collect against this type of software that they're using, as an example. That then would be useful information. That would then be a potential indicator or warning that somebody is trying to do something. In the case of foreign influence, when you're talking about with Facebook, we need to, there's potential, information that is often some of the most sensitive information, and so we have to break down a lot of those barriers of, and we have to think about the private sector as a partner in intelligence sharing, which is a big shift for the government.
So 2 years ago, it was widely reported that the NSA mistakenly let go of its prized hacking tools, which were used to launch and spread the WannaCry ransomware attack, which I think most people are quite aware of that happening. It's quite a damaging event. So what is the US doing to prevent another public WannaCry style attack?
I don't know that we could ever prevent something like that. When you just have something that completely manifests itself as a worm, and kind of even I think the original perpetrators of that didn't expect probably that sort of impact. What we do want to prevent, and there's there's a lot of things on the preparedness and prevention that we have already talked about in terms of, frankly, the updating your patches, some of those kind of basic things that would have prevented a fair amount of people from being a victim of that. But I also think it's important to build more resilience in our systems. We talk a lot about mitigating the consequences. So acknowledge that these bad things are going to happen, but how can we be better prepared to work together? So for WannaCry, when and I've talked about those a little bit, but not a lot of people really, I think, understand the years of work that have gone in building global alliances. I run the United States CERT, the Computer Emergency Response Team. Most countries have sort of a version of that. And when WannaCry started in Asia, we were getting information from our partners in Asia about what was going on. They were passing information over to us, and when in the Brits and in Europe, they were so that in the U.S. for really that kind of entire first half of the day, we were getting advanced information because of the those partnerships we had built overseas, and those national certs were getting getting information from their local businesses who were being attacked. And luckily there was an enterprising individual who was able to find a way to kill it, and didn't impact the U.S. as much. But what we really recognized is that we needed to have those sorts of mechanisms, but much more robust in the United States, to think about like how do you mobilize industry and government and allies to combat something like this as it's emerging. And so since then we've been building more of those plans. We have a lot of representatives from companies that sit on our floor with us, and we work through these things together, so that if we have these sorts of scenarios come up, that we're ready to respond quickly, even if we didn't prevent it.
So the companies in this room, the startups and large businesses alike, have one thing in common, and that's that they very much rely on the supply chain, which is something I know, Cisco is obviously very, involved in. It's where businesses get their technologies from, their services, hardware, software. What kind of threats do you see, against the global supply chain? And of course, it's a difficult question. Every supply chain is different, but what kind of threats do you see?
Well, there's a lot of different threats. You see a lot of foreign governments that are sort of finding clever ways to mask their influence in investments, and in finding ways to maneuver around the ways that the government traditionally can have some ability to block investments that we're concerned about. I would say the best advice I could give would be how we thought about Kaspersky. And for many, many years, there was a lot of conversation about, should we use it, should we not? And I was very frustrated because, and this gets to the intelligence thing too, is a lot of people want intelligence to just give them, this is the right answer. And that's usually not what you're going to get. And so what we decided with Kaspersky is that we were not comfortable with government data being housed in a country where whether a company wanted to or not could be required to hand that data over to the security service. And so we have the authority to actually direct federal agencies to take action. And we decided to do it publicly for due process reasons. We wanted anybody who would be potentially impacted by this decision to remove Kaspersky. And our thinking was, and I would encourage anybody when you're thinking about your supply chain, whether that's from a software, hardware, or just business relationship perspective, sort of three things, and that we think about and will continue to think about from a broad national policy is the first is like the laws of the country. And I know that's something that a lot of people don't necessarily want to talk about, but the laws of the country where either the data is housed or transited, or where the company operates, it's important to consider. And if there's not that judicial review and a company can be compelled, you want to maybe consider, is that a place where I want my data to be held? But that can't be the only thing that you consider, because that's not the economy we live in. And I don't think it makes sense just to sort of suddenly ban all things just because it comes from one country. So we try to be a little bit more nuanced. Because the second thing was really to think about what sort of access does that piece of, in this case, software have. An antivirus, there's a fair amount of access that it has to your computer and your data, and so that really is that second part. And then the last part, and this is more from a national perspective, is what's the market penetration? Something gets the first two, but it's not something that's widely used in the U.S. Then that's probably not something we're going to get fired up about.
So we only have a little bit of time left. My final question is it truly possible to secure the supply chain, and how much should government do? How much should private businesses take responsibility for it?
I don't think it's possible to 100% secure anything. So we talk a lot about risk management, and we see ourselves as risk advisors and risk managers. I think everybody has to be a risk manager in your own organization. You have to understand what's most important, and you have just understand the risk that you're taking on if you acquire a company, if you're, join, have investment from, certain individuals or organizations. Understand what that risk actually is, but then you make the decisions based off of your own risk calculus. And that's how I think of the broader supply chain. Is a lot of people talking about 5G and all the challenges there, and we have to think about it from a national perspective. Is in many cases we've outsourced the manufacturing of certain components of our communication systems outside of this country, and that's the economics of where we are, and we can't spin that around on a dime. So we have to think about how do we create more trust in transparency in our supply chain, and again, I would say supply chain broadly, meaning IT products and services, so that's really what more transparency, so that anybody can make that risk decision, and more broadly at that national level, really having that understanding of where we can't accept risk, and where, frankly, there's areas where you have to accept risk.
Sadly, that's all the time we have. Thank you so much. Cheers.
Oh, he missed. All right. Okay, on the Q&A stage, if you haven't had enough security talk in your life, then that's where you should be headed right now. At 3:30, we will have Securing Your Startup with Jennifer Sunshine Stevens from IO Active, Doug Song from Duo Security, and Nadav Zafrir from Teammate. So if you want to check that out, now's the time. Get your questions submitted. But now, we're going to be talking a little bit about weddings. Anybody married in the audience? And keep your hand raised if you actually planned that wedding, so you know what's up. Yeah, our next guest knows for sure what's up. She's building tools to fix a lot of the problems involved in that. So please welcome to the stage from Zola, the co-founder and CEO, Shanlin Ma, and your moderator, Ingrid London. Warm welcome, please.
Hi again. Can you guys hear me? Excellent. Hi, Shan.
Hi.
Thank you very much for coming on, and I have just one question for you.
Yes.
Will you marry me? No, I'm just kidding.
Maybe.
No, anyway, welcome. Thank you for coming. You've got an amazing business going, Zola, wedding website for wedding planning, right? You guys are huge, absolutely massive. You started in when? 2013, right?
Yeah, 2013, also known as the year all my friends got married at exactly the same time, and was going to a lot of weddings that year, spending a lot on travel, presents, a lot of angst on both my part and my friends getting married part, and thought, a lot of these wedding registries that I'm buying from seem outdated, antiquated. I feel like myself and my co-founder, we could build a much better product for our friends getting married today.
So you built it out of a kind of personal experience?
Exactly.
Like House, which I always think of you guys as a little like House. So that's interesting.
Yeah, we share some common investors who kind of see the analogies between what House has done in home renovation, we're doing in the wedding space.
So it's a funny thing, though, because you pointed out, I mean, there were like a ton of sites out there already when you guys hit the market. How was that? I mean, did that mean that it was actually really hard to get users in the beginning? How did you carve out a place for yourself in what's pretty antiquated market?
Well, we looked at the entire wedding planning process and thought, why is it that on average before Zola, a couple has to use 20 different sites to plan one day? Many of these sites or apps not even built for wedding planning, when couples today who are the millennial generation, they have so much great apps and products in every other part of their life, and they expect a lot more. And so we thought, what if we could build the ultimate go-to site and app where couples could plan everything for their one day in the one place? And let's start with wedding registry, because that's what we know. It's e-commerce related. That's where we are particularly strong with our background. And we found that that space alone was valuable and underserved, and we could innovate to give couples what they really wanted, whether it was products or experiences or cash, in a beautiful registry all in the one place.
Right. So you guys are, just to make that clear, the thing that you're doing that's quite interesting is that, yes, it's a marketplace where, yes, you can register for specific things like tea kettles, but you can also do other things, right? You don't have to register for actual objects, which is very in keeping with how people shop today, right?
That's right. And it turns out today's couples, on average, we see want to register for a mix of all of these things, from traditional things like kettles to more products of today, like a Sonos sound system, to experiences like wine tasting, to cash.
And do you do gift cards and stuff like that too?
We also do that.
Yeah, absolutely. I see. Very modern. Okay, so on the subject of modern, though, it's kind of an interesting thing. I mean, it's amazing the success you've had, but it's also so surprising, partly because of the fact that like wedding sites were the first ones to hit the web when the web first came into existence, but also because marriage has changed so much. You know, I was looking up some stats, and it's half of all people over 18 are married now, get married typically, but it's gone down massively in the US. Like, you know, it's like since 1990, and then you've got just all sorts of other things, like they're getting married much later. Loads of people aren't getting married. You know, the traditional, you know, man and woman obviously has completely been thrown out the window. And yet you still have a place there. So are you guys like catering to all of what I've just described, or what?
Yeah, absolutely. And one of the things I think myself and my team are most proud of is that we build products that serve any type of couple, no matter who they are, where they live within the US, or whatever device they live on. And we do see for sure that couples getting married today are unlike any previous generation. So the average age of a couple getting married today is much older.
How old is it?
It's on average 28 to 30, whereas just, you know, our parents' generation, the average age was maybe 21 to 22.
Right.
And what that means is that couples today, they live together before they get married on average. They're both working. They both have a lot of time to think about what marriage and weddings mean to them. And so really the idea of personalizing your wedding and your marriage is so much more important now, I think, because people get that level of personalization in every other part of their life online.
Yeah. Are you guys at all looking at just couples who are sort of making lifetime commitments? Is that something that you also cater for?
Well, we are happy to serve couples. Really, we think of it as a life stage where you're kind of transitioning from a single person to engaged, making a commitment to each other, and transitioning into often a newlywed home together. And that's expensive, stressful, joyful, and not a lot of things to help you make that transition.
Okay. So another interesting thing about your site is this marketplace model that you're doing has at the same time, it's a sort of freemium. So to create those registries is totally free. Of course, you make some conversion. You make commissions on when some of those registry items get purchased. But you've also got things like invitation planning and so on. How do you draw people into more of the paid products of the site? And how much of an issue is it to get people to do things that drive revenue for you guys?
So I should clarify, our business model for our wedding registry specifically, the best analogy here is it's a hybrid of an e-commerce site and a marketplace site, in that we have on Zola over 800 brands that we work directly with in the Zola store, over 80,000 products. And while couples can register for them, guests can buy them, it's like any other e-commerce site, and we make money through a wholesale retail margin as any other retailer does. The twist around the marketplace is that we don't hold inventory in these 80,000 products. And that allows us to offer much more than you might find on a normal site. So that's registry. And then with the launch of our newest business, Invitations of Paper, that is more similar to a vertically integrated D2C company where we have Zola branded invitations, and couples can pick whatever design they want, print it, customize it with their guest list on our site, which is free, and their wedding website, which is free. And the idea here is that we want to offer tools that people expect to be free for free, and then there's things they're already paying for on hundreds of other sites. We want to do it in an easier way at great value.
Are you finding, though, that you're able to convert those people from the free aspects into the monetizing aspects? Is that a challenge for you guys, or is it really simple because once somebody decides to get married, they've essentially bought into the idea that they're going to blow 10 grand?
Well, the reason we've expanded into many of these new products is because our couples have been asking us and begging us and demanding that we do it. So when we set out to build the company, I don't think we ever thought we're going to be invitations printer, but the couples said, who use us for registry, said, I'd love to also make you my wedding website. I'd love to print my invitations, my place cards, my menus with you in the same design, and that's what drew us. And so, yes, many couples are following us through that journey because they asked for it, and for us to serve them in that way.
Okay. Now, you guys today are announcing a new thing that you're adding to extend that even further, which is the sort of post-wedding honeymoons, right? Do you want to tell us a little bit about that?
Yeah, so excited to announce today the launch of our latest product, which is our honeymoons product. And this was really based on the demand of Zola couples asking us to help them also plan, get inspiration for, and book their honeymoon all in the one place.
And that is something you're going to be expanding kind of over time to include flights and things like that, right?
Exactly. So at launch, which is next month, we already have a waiting list of thousands of Zola couples who have put themselves on our waiting list to use this product. And the way it works is that through our technology and our team of travel experts, couples can tell us this is what they would love to do for their honeymoon, this is their general travel style, budget, dates, and then we will send back an itinerary, which they can iterate and then book with us from there.
Yeah.
At launch next month, it'll be focused first and foremost on accommodation and experiences, and then over time, we would aim to help you book everything you need to do for your honeymoon.
And then once you do things like flights for the couples, then you'll start to offer that as something for like families and friends who are coming to weddings and stuff too? Or is that, do you see yourself as is this the sort of foothold to continue expanding deeper into other areas of how you can serve travel needs, or?
Yeah, that's exactly right. I think the most exciting thing for us and something that our customers have drawn us into is that with each of our businesses within Zola, they have shown us the product and the business roadmap based on their own life journey. So in the same way that for our paper business, we started first with save the dates, then invitations. They said, how about menus, programs, thank you cards, and more types of paper that you send out? Same with travel. We will see honeymoons, but then there's a lot of different types of travel couples and their guests take in and around the wedding, whether it's before, during, or after the wedding. And we're building a technology and a team to serve that.
Okay, so now this is something that slightly shifts to something I want to talk about a little bit later, but the fact is that I looked into what the average length is for planning a wedding, and it's between 13 and 18 months.
Yeah.
So that effectively implies that that's how long you would have a customer. Like a customer would only be your customer for about a year to a year and a half. How are you guys thinking about them, and how are you thinking you might potentially extend that? Because that's not a very long time to be a customer.
Well,
I mean, Amazon, I'm guessing, has customers for a lot longer than a year.
So I think what many people are surprised about, and they kind of think about, oh, it's a short time period, and so therefore it must not be a big market. But what is surprising to many people is that weddings time and that market alone is a $100 billion market in the US. And where some people might say, 18 months is a short time, we would say, actually, it's a highly intensive, high spend, high stress time, and so that's a big opportunity. And when you look at the market and every other category that is fueled by millennial spending of the same size, there are multi-billion dollar disruptors that have emerged in those markets to win those categories. Weddings is one of the only remaining categories that has not seen a disruptor emerge to take this size market, and that's what we're focused on.
So does that mean that you don't have plans to do things like Zola parents or anything like that. Do you think that that would be the kind of thing that would dilute your focus too much? Or do you think that's a natural step, the way that honeymoons is a natural step?
We will serve couples in this life stage. And the definition of the life stage has actually expanded over time as our couples have grown up with us. So the first cohort of couples with Zola got married in 2014.
Are they on their second weddings now?
No.
Good. That's good.
But many of them are asking for us to continue helping them with things, for their home or elsewhere, and we are doing that.
So you will probably at some point extend into other areas, we could say.
Maybe some point, but
maybe some. You're not going to announce that news here on stage today. Okay, that's fair enough. Okay, I have to ask you, because I feel like if you've got any entrepreneurs out here who are in e-commerce, any kind of marketplace thing, whether it's in weddings or something else, this is always the big elephant in the room, is Amazon. Now, I did a little research. I didn't know it, but apparently Amazon has a wedding site.
Yes.
And Amazon, of course, wants to get further into travel. So they're probably going to look at honeymoons attached to their wedding sites and build up their wedding site. How much of a problem is that for you?
Well, they've been in weddings and in wedding registries from way before we launched Zola, and yet we've still seen phenomenal growth. We've still seen a lot of copycats from many competitors copy us, and so it keeps us motivated to stay ahead, to continue to innovate in each of the product lines that we have. But what no one else has is this ecosystem of all the wedding planning products all in the one place that talk to each other. So for example, in honeymoons, you can imagine if we have a registry where you can register for specific things on your honeymoon, guests can buy for you from Zola. It can feed into your honeymoon purchase. And then you are on your honeymoon, you have that item, you can send your thank you note via Zola to the person that bought you that gift, all in one click on your mobile device. That's something that is hard to do, but magical and makes a ton of sense. And we are really uniquely positioned to deliver on that vision. It's one example of 100 interconnections that I think make us unlike any other company.
Has Amazon ever tried to acquire you guys?
We, I can't even speculate on that right now because we have a lot to do and we are just getting started.
Yeah, no, I didn't ask if you'd ever thought of acquisition. I just asked if Amazon had tried to acquire you guys. No, they haven't. Okay. Or no, don't go there, Ingrid.
No good, don't go there.
Okay, fair enough. Okay. I'll ask you another time. Okay, so here's a question that actually my editor, Matthew Panzarino, really wanted to know about, which I'm quite interested in too. So his secret life before going into tech was that he was a photographer. And as he pointed out to me, in photography, if you're like a photographer, about 80% of your business is actually weddings. So that kind of opens up an interesting area. So you guys are doing a lot of vertically integrated stuff, like your invites, like the honeymoons, you're doing it all, building it up. But there's this really obvious way of interlinking with suppliers and other marketplaces, like photographers. How do you see stuff like that? So we're talking about this really important element of the wedding process, which right now is pretty fragmented. But that's a really big area to then start to try to mobilize contractors effectively. That's totally outside of what you're doing already. So how will you tackle things like that? Would you want to?
Absolutely, and this is actually one of the things that we have started to build, and I would consider in beta phase right now on Zola, where we have the ability to let photographers or wedding venues or local vendors that serve and help couples with their weddings create beautiful, unique profiles on Zola and then be matched to couples that they think will be most appropriate to them. And likewise, the couples today, we've started primarily in New York and Charlottesville, but couples who want to get married in those areas can go on, specify what type of venue they're interested in, budget, people, and get just a select number of matches for their preferences. And so that's something also no one else does, and we're trying to innovate and push the envelope on that.
So you're doing more of that sort of localized services, service providers, contractor databases, and so on.
Yeah,
That's
exactly.
brilliant.
And towards, really towards the end vision of, we know today you have to go to 100 different sites to try to match all the different types of vendors for that one day. And you want to know really what is the social network of a venue or a photographer that works well together. And can I see examples on Zola of weddings and then book it right there.
Yeah, that's very cool. Okay, we only have a minute, which isn't enough time for me to ask this rather large question. But you guys are a New York startup.
Yes.
You're now valued at $650 million. You've raised over 140 million, which is absolutely impressive. How much of a challenge was it to raise that money? A, being out of New York, B, being a wedding site, C, being a woman.
Well, I think every single founder I've spoken to, no matter gender or where they live, fundraising is challenging for anyone, I think. And
not just in New York.
Exactly.
Not just because of the wedding.
Yes. And I think in the early days, before we had shown, we could launch a great product that people loved, that had huge growth, it was certainly harder because there were a lot of bodies buried in the weddings category. But now we've shown we can do something in a category that no one else has been able to do, and people are very excited.
And they're like that. You've also got some interesting background with, your background from the Guild Group and so on. So that probably helped you?
Yeah, so the team, the leadership
experience,
team, we have history in good times, bad times, and we know what to do and what to avoid.
Yeah. I know, guilt definitely nosedived, but you think that's the sort of thing that sometimes helps. When you have somebody who's been through that, you think, actually, they know exactly what not to do, so.
Exactly.
Yeah. Thank you so much for your time.
Right. Thank you.
Thanks, everybody. Thanks, Shen.
Great job, guys. Okay. On the Extra Crunch stage right now, we have a panel on how to decide between bootstrapping and raising venture capital. It sounds straightforward. Everyone would love to bootstrap, but it's actually far more complicated than that. So if you want to hear from Ben Chestnut, who's the co-founder and CEO of MailChimp, and Catherine Petralia, who's the co-founder and president of Cabbage, hit that up at 4 o'clock. That's when that starts. But now, on the main stage, we're going to talk a little bit about the future of cities. Please welcome to the stage the former governor of Michigan and CNN commentator and UC Berkeley professor Jennifer Granholm, and CEO of Zoox, Aisha Evans, as well as your moderator, Kirsten Korosek. Warm welcome, please.
All right. Well, if you missed it earlier, I was talking up here with Sebastian Thrun talking about flying cars. So now we're going to talk about what happens when you put those things into cities. So thank you so much for joining me, Governor and Aisha. And as I said, we're here to talk about the future of transportation, namely autonomous vehicles, since that's what Zoox is doing, and its relationship with cities. And you both have different perspectives. Governor, you were former governor of Michigan, a state that is was and continues to be one of the largest employers of auto workers. And I'm wondering, from your perspective and your background, who is going to own the future of transportation? And you can't say Zoox. It's not about naming companies. I'm wondering, regionally, cities, who is going to own this space?
Yeah, well, I do know, and you know this too, because you report from there, is that the OEMs in the auto industry are thinking about this really hard because there's, 260 million cars on the road right now, but anticipating autonomous vehicles means that there's going to be a lot fewer cars, maybe 45 million cars. And what does that do for those who manufacture cars, right? So they become not necessarily just commodity builders, but service providers. And that's the model that they are looking at. And I think it's part of, this is a disrupt conference. This technology is hugely disruptive. It's disruptive for the OEMs. It's disruptive for the oil industry. But for those vehicle makers, they have got to get not behind the train, but ahead of it. And I think you're seeing that with a lot of the CEOs who are making these critical investments in the technology that will allow them to be not just builders, but service providers.
So do you, before having Aisha weigh in, do you see this as Detroit and Silicon Valley squaring off against each other right now? I mean, is there
They seem to be partnering in a lot of places.
Yeah. So is there a country even that is, that you see right now based on policy and technology and development and how much investment they're putting into it, kind of potentially able to own this sort of future of transportation, or is it up for grabs?
Yeah, I mean, let me just say, first of all, I know that Michigan wants to own this, and I know that Silicon Valley wants to own this, and so a good bit of healthy competition is happening, but really the places where this is going to go fastest and furthest are places where you've got people like me who are policymakers who are not freaked out about the technology, who are not afraid to experiment, who are not afraid to adopt policies that allow for the technology to be on the streets. And so you'll see, and places that where the leaders understand the safety ramifications, meaning that if 38,000 people die every year in car accidents, and it will be so much better, that the cost of getting people to work will be so much cheaper, that it will create a space that makes those communities so much more attractive to the kind of technology workers and workers in general that people want to attract. Those kind of leaders are the places where you will see much more rapid adoption, and then the rest will flow.
Aisha, do you agree? I mean, or are we overlooking a country or another region that is actually, pushing this ahead faster than Silicon Valley and Detroit?
Well, I mean, something's going on in China,
Yeah.
that's for sure. So, look, I think that Silicon Valley and Detroit, first of all, I don't think it's a competition. I think it's a partnership. There is going to be a vehicle moving people around, whether it's from micromobility all the way to public transportation. So I think it's a partnership. There's definitely a lot going on in China, no questions about it. But transportation is also very local. So the way you have transportation in the US versus in Europe versus in China versus in India and other places of the world, the needs you're trying to serve can all be different. So I think it's all partnership, essentially.
Can I just to build on this?
Yeah.
The issue about China, this is why I think the leadership in this country, whether it's at the local, hyper-local level or at the federal level, is so critical because there's massive investments happening in China to make this technology more ubiquitous. Whereas here, it's all being left at the moment to the private sector, with some states allowing experimentation, but not the funding that you are seeing in other countries. And so, that's our question as a nation. Do we want to lead, or do we want to allow other countries to lead and us just follow?
So does it, is it going to come down to more government investment? I mean, what's Zook's point of view on that? I mean, do you think that right now, as Governor was saying, it's like a lot of private companies, does the government have a role in really pushing this forward?
Well, there are several forms of investment. Investment is not necessarily cash.
Right.
In terms of regulatory policy, in terms of permitting, in terms of infrastructure, cities are going to be, I think there is this view that the way the cities are now, people are driving in them, and now all of a sudden, you're going to have self-driving cars and everything's going to be the same. We don't look at mobility as a service through autonomy the same way. We think cities are going to be different. I mean, today, 1/3 of the time is spent looking for parking. So that's a congestion element. Obviously, if you have less vehicles, you're not going to have that problem. So then what happens? Also, there's a lot of these assets today, passenger cars, they are only active 4% of the time, which means 96% of the time they are parked somewhere and depreciating. Somewhere is a physical location. Those are buildings. What happens to those buildings? Today, when you're planning a city, you're looking at parking lanes. And by the way, the local authorities or the local agencies make money off of that. So how is the money flow and the money distribution going to change? How do you integrate public transportation, meaning the last mile, and all of the shuttles that are going around? So I think that that entire transformation in terms of what cities look like is going to change. And when you walk backwards, governments and local authorities and agencies will have to make adjustments. And that's what I call their part of the investment.
Okay. So we have like 17 minutes to solve all of those problems.
All right, let's go.
All right. Maybe we should have a hackathon for that. So the one thing I've noticed a lot in my reporting on autonomous vehicles is there is a tendency to sort of look at things with this like utopian lens where all the parking lots are going to turn into parks, and you know, the Vision Zero, you know, there won't be any more car crashes anymore, fatalities. But here's the thing, people in cities, as you were talking about, you know, who live in cities also are working in cities. And so these people will either be part of building this future of transportation or they will be displaced by it. And I'm wondering, Governor, for you first, I mean, what do you say to those workers who are potentially going to be displaced? And I think right now it's particularly interesting because we're at, what, day 16 of the United Auto Workers strike.
Yeah, no, this is a super important question. So there are 5 million people in the country that make their living driving, right, who are freaked out about the notion of this. And not to mention the people in the insurance industry the auto insurance industry that might be freaked out about it, or the people in the auto finance industry, the people in the shops that actually do repairs, or the dealerships. I mean, there's a whole ecosystem of people that could be disrupted by it. But here's what I like to say to people. I mean, if you're bullish on the technology, then there was a professor named James Besson who did a study of all of 317 professions where technology had been introduced, and to find out, had the technology displaced people or had the technology actually increased employment? And of the 317 professions, there was only one profession that actually went away as a result of technology. All of the rest had employment increase, because you can't imagine what the ecosystem will create when you have this new technology. The one profession that went away was elevator operator. But the rest of these places, even like ATMs, the basic example, the ATM employment increased for tellers as a result of the investment in ATMs. So you just don't know what is going to happen in the ecosystem, but you can imagine that there is all sorts of really interesting applications for autonomous vehicles. But the real question is, what do you do with the people who actually don't have a skill necessary to code or to be part of the technology component of this? How do you make this world available to them? And that's why the policy framework has to be set up in a way that allows people to thrive. And right now, all we've got in the US are these old 20th century retraining programs that time after time studies have shown don't work. The investments in old-time training do not work. The investments in technology-based training, meaning you take somebody where they are and you use artificial intelligence and machine learning to bring them to a new level where they don't have to go sit in a community college and they're, you know, whether they're young and they don't want to go take trigonometry, or they are older and have been displaced and they don't want to sit next to an 18-year-old at a community college. You can have training that respects where people are based upon technology and takes them to the next level. We just haven't thought about the policy ramifications of investing in that as a nation, and that to me has to be done in tandem with displacing kinds of technology. And plus, we also have to be reminded that technology is a tool and can be used to enhance skills. We are all cyborgs already, as Elon Musk says, because we all have cell phones. So this is a tool as well. It doesn't have to replace, it can enhance skill.
So go ahead, Aisha.
I think we can talk about what's already happening right now. So all of us are testing who are in this space. None of us have solved generic AI. We're also finding out that human beings are rather underrated, and we have methodologies for that. So for example, I think Jesse talked earlier about teleoperation, which is a new job. It's literally a new class of job where the vehicle encounters a situation where it doesn't know what to do, and it autonomously says, back to the teleop center, hey, there's a construction zone that I don't know how to deal with, or I'm going to have to break a rule temporarily. Do I have permission to do that? On the other side of that are teleop tacticians that are looking at the perception output and that are saying, yes, you have permission to do this, or here's a new trajectory for you, even though the vehicle is totally in control. So that's a new class of job. Call it like a call center of the future. Second of all, these vehicles don't have a mind of their own. They have to be charged. They have to be cleaned. There has to be a fleet management system on top of them. So I believe that there will be many more types of jobs that will come to bear, and that will be essentially the displacement. We also have cases right now where we have safety drivers and a software operator, and what happens is some of these software operators are liking the technology, understanding more, in some cases either getting more education or just asking for a transfer into the software team where they enter through QA and have a career path going forward. So we should talk about the jobs that will be created, the opportunities, and yes, training and all those things, but as she said earlier, it is very rare that technology disrupts and displaces in a way that it's net negative from a job perspective. And in terms of space, I really want to talk about this. Yes, some of the parkings will be parks, I get that. Yeah. But you know what? I think we all know the housing crisis in most of these cities. There's an opportunity there. We also know that this is an opportunity for more enterprise to come into the cities, and therefore that's more that provides an opportunity for more job. So it's not just going to be all park and green and everybody's going to have more fun. I think you'll see a new level of infrastructure being born, and that will bring opportunity.
So I don't know if either of you, maybe you can speak specifically to Zoox, and Governor, maybe through some of your policy research, you might have this number, but for Zoox, where are these folks coming from who are taking these jobs, these new kind of jobs, teleoperation, what is their background, and do you have any sense of how many, what percentage of the company it's become? I mean, is it going to become the service side, for example, is that going to become the larger piece of Zoox eventually? And I wonder how that applies to the rest of the industry. I mean, has there been any research to give us an indication of what that job opportunity is? These service-related jobs, teleoperation jobs, maybe not the engineering jobs that we oftentimes focus on.
Mm-hmm. So, I mean, some of them are college graduates, not necessarily in a technical field, by the way. But as they are on the job, they learn more for those who progress to QA and other disciplines. And in terms of, I can just give you a little bit of a view, like net between full-time and non-full-time. Just in our case, I looked at the numbers last week. We added 80 jobs in San Francisco, and these are and about 30% of those are native, meaning they live in San Francisco, and that includes attrition and everything. And we're still at a very early age of testing. So you can imagine that if you have thousands and thousands of vehicles, the operation around that, I mean, for Zoox, that's what I call success, because that means that that can easily overtake your R&D operation in terms of just sheer numbers.
Can you imagine, though, I mean, here we are in an environment where there could be displacement without the right guardrails, right? And so the question is, how do you provide the right carrots and sticks for people both to have an entry-level job and have perhaps that job partially subsidized by the government until it's de-risked enough that the employer and the employee can decide that they want to make this a permanent relationship. So right now you all pay as taxpayers for unemployment. What if we subsidized employment rather than unemployment? We flipped the script on that. What if we thought of learning as not just seat time, but it's a much more active thing? What if we had lifelong learning accounts in addition to Social Security so that people can continually upskill themselves? What if we trained young people not just, on your ABCs, but how to do the things that AI and robots cannot do? How to collaborate, how to lead, how to work in groups. We don't teach that kind of stuff, but with this kind of technology, there is a moment for us to think about how we learn as human beings throughout life.
Well, do you think that that can work though, even in Michigan, where right now there are 48,000, United Auto Workers on strike? That those specific people, right, can we transition them to other jobs so they can have that same sort of lifestyle that they've been able to have?
Right. This is the question, right? Because you've got people who have been working all of their careers in a really good paying job, potentially, maybe not as well as it was before the recession, because these auto workers gave a huge amount of concessions in order to keep the companies afloat. But the bottom line is they just want a good job, and they're really proud of building. So what are those new jobs inside that they could be trained for? And what is the role of the union? For example, the United Auto Workers, maybe they become the brokers of great skill, of the skill that's necessary. Maybe they become a training partner with the company to make sure that people are not just moved out, but that they learn the skills that are necessary to make both the vehicles and the service side of this new disruptive thrust work. So to me, we still have a very 20th century mindset about this, and we need to, all portions of it need to think about where's the puck going, as they say, where are we going, and how can we build a system around that to make sure that employees are safe. And the other thing I would say, there's a lot of talk here in Silicon Valley about the universal basic income, and that is somehow going to be the salve for everything. Andrew Yang has certainly been talking about that on the presidential trail. Whether it's a universal basic income or whether we think about, data as a supply to the platforms and get compensated for data, which a lot of people are talking about, some way we've got to make sure that inequality is not exacerbated by the technology. And that, again, requires some policy guardrails to make sure that we all move forward together.
So you were saying the 20th century, so let's talk about the 21st century for a moment. And maybe not in too distant of a future. So right now, Zoox has, about 30 retrofitted vehicles in its fleet. So I'm wondering, do you think that our city's prepared for the day when there are hundreds of Zoox vehicles, and not just Zoox vehicles, potentially a lot of others? I mean, is San Francisco prepared for that, as an example?
Well, yes, because there are roads. And sometimes I feel like we need to back up the boat a little bit. We're talking about transportation, right? I believe somebody took a boat to here and America was born some centuries ago. That was transportation back then. From there, we went to sort of commercial things like the Titanic. And then from there, we went to trains and horses. And all that's happening here is that we went from horse and carriage to a human person driving a car, and now AI is going to drive. Nothing else is changing besides that. And with that will come opportunity, the same way as less people had the opportunity to go into horses and carriage and own one, and with the passenger car, the opportunity arose for more people. So there are roads today that people are driving on, and therefore the city is prepared. However, there will have to be an evolution on the infrastructure, maybe less gas stations, more charging stations, for example, pick up and drop off, the partnership that I talked about earlier in terms of some of the things that are going to change around parking and parks and jobs and so on. But I believe in the human spirit, and I believe in cities. We've gone through these transformations many times, and nothing bad happened. We figured it out.
Well, it can be very chaotic, though.
Yeah.
To be fair. A very less technologically advanced way of mobility, scooters, has upended parts of the city, and cities are figuring it out now, but there was a time where it was absolutely crazy.
There will be waves in terms of problems, and we'll figure them out.
So in your view, then, there shouldn't be necessarily special lanes for autonomous vehicles, that they should be able to interact with the way the city is constructed today?
Our view at Zoox is that if we require the city or the transportation systems to do differently for our vehicles to operate and for our service to be launched, then we've failed. One has to first integrate the existing infrastructure. Now, I do believe that over time, maybe it'll take decades. This is a more effective and efficient way to transport people. it's also on demand and as needed. We may see probably in the next, maybe, I don't know, couple of decades, some parts of some cities where it will be autonomous only, but it will be because we earned it, not because we needed it to operate.
So do you think on terms of, Governor, on what's the balance between free market and the policymakers jumping in here? So for example, right now, let's say we were to deploy thousands of autonomous vehicles, should there be rules in place or policies in place that encourage or through incentives or regulate companies like Zoox and Waymo and Cruise or any of the other ones that pop up to make sure that they're going to underserved areas, for example?
Yeah, no, to me, your thought about this, about not pushing for changes, about operating in the existing environment is super smart, right? That's what you guys are doing. On my side, I would say the smart leadership would, in the cities, on the city side, would be to make sure that we have, we rethink the curb and that we rethink the parking structure and that we repurpose we incentivize the repurposing of people's garages, which they won't need anymore, and they can construct alternate, accessory dwelling units and, all of that. I think we need to think about the policy related to that. And I think this is true for the vehicle. I think it's true for the human side of it as well, in terms of making sure that people are able to be brought about quickly. Now I forgot the premise of your question. Did I answer it?
But
Wait, you started to go down a path.
Well, and Aisha, maybe you want to jump in here, talking about underserved and also talking about
underserved.
Yes, underserved communities, but also, just because we're about to run out of time, also I would like you to address peoples with disabilities, because one thing that I've heard a ton of every single autonomous vehicle company talk about, or people related to autonomous vehicles talk about, is this ability for these vehicles to serve people who are missing out, who don't have license, people who are wheelchair bound, for example. And I'm wondering what Zoox's plan is for that, but also your view on, should free market be pushing, allow this to just happen, or is there a role for policy to encourage through incentives or through regulations to serve these markets?
Oh, that's a lot in 20 seconds.
Yes.
So
No, it's okay. Go ahead.
Yin and yang. I truly believe that you deliver value, the cities and the authorities will adjust, and it will just keep going like that. In terms of underserved communities, I think there were two questions in there.
Right.
Our vehicles are not going to care what neighborhoods they are going into. And so as long as it's physically possible to get somewhere, we will broaden the possibility of movement, and therefore that will bring access. In terms of people who do not have a driver's license, well, teenagers, this will be because by choice, but for people who can't, it may not be our first order of thinking, but we're definitely thinking of all classes and all types of people who can't drive and why they can't, and what do we need to do to serve them. But first order of business is to launch in a city within the infrastructure with the demand that exists already, and then go from there.
Right, and today you actually announced that you're going to be going into Las Vegas, so that's your secondary market.
Mm-hmm.
So I guess in closing, Governor, do you think that the road is a mix of policy and
technology? Yes.
Okay.
Absolutely, and I do think the policy will address the underserved community, but I also think that the technology is so disruptive that it will bring down the cost of transportation so much that you will see employers, for example, giving subscriptions to their employees who may come from underserved communities to be able to get to work through the service component of things. If they have to pay 5 cents a mile, it's almost free, as opposed to 65 cents a mile, which is what we pay right now. The technology itself is so disruptive that it'll be interesting to see how much policy intervention you actually even need.
I agree.
Well, we could keep talking, but we have to go because Jordan's staring at me over there. Thank you so much.
Thank you.
Thank you.
Thank you so much. It's a train station. We got to keep things running on time, right, folks? Cool, Jordan. I was given contradictory advice. So say we have to do a chair change, so kind of vamp, and also we're running late, so be really quick. So here's me vamping and being quick at the same time, because I'm so skilled at emceeing. Not really. It's pretty difficult in today's universe to think of a business that can both do good for the world and also turn a profit. It's normally one or the other. And our next guest has made it his goal to do both at one time. So to learn a little bit more about that, I would like us to please welcome to the stage the chairman and co-CEO of Salesforce, Mark Benioff, and your moderator, Matthew Panzarino. A real slow clap for them to finish the chair change.
Welcome, welcome.
Thank you.
All right. Let's chat about a few things here. Got a couple things to talk about. You have a new book that's coming out soon. It's called Trailblazer. I had my assistant put these in, so it looks like I did my homework. No, I actually read it. I read it and I enjoyed it. Talk about lots of things in there. One of the things I'm most curious about to start off with, though, because I think a lot of people in this room are either in the process of raising or maybe have raised money. It's been about 20 years, a little over 20 years, since Salesforce had to raise money. How do you think the environment's changed between then and now?
Well, I think it's changing. I mean, when we were raising money, no one would give us money. So that was difficult. We raised it all privately through individuals. I was lucky that I had some rich friends. If I didn't, I would not have been able to get the company going. No one on Sand Hill Road would give me any money.
What were they so scared of? What did they understand about the business?
Well, I think that they did not understand this incredible opportunity for cloud computing. They certainly did not see that this would be a company with 45,000 employees and more than $100 billion market cap, top 5 software company. They just could not see it. And that was an amazing moment in time where I was going in and out of these venture capitalist offices with no term sheet, no deal, no opportunity. And I found friends of mine here in San Francisco and also Japan who gave me money, and it was private money.
And if you think back to that time versus shortly thereafter, after you got your money and went into what was your primary goal after it was so hard to raise money? What was your first primary goal in getting that company off the ground?
Well, I think for us, we always had a vision that was really 3 things. 1, we wanted to build a new technology model. Now we call it the cloud. 2, we have a new business model, which is subscription, or really an orientation around the customer. That was very different 2 decades ago. And 3, we had an idea that we could integrate a set of values into our business, that that our values would create value, that we would take this 1-1-1 model that I had come up with, 1% of our equity, 1% of all of our product, 1% of all of our employees' time. I mean, it was very easy because we had no equity, we had no product, we had no time, no
Right.
employees. But today, we've done 4 million hours of volunteerism. We've given away $1/3 billion. We've also run 45,000 nonprofits and NGOs on our service for free, which is about $1 billion of product a year. And it's, really was a segue into a different type of business for us. That at that point we realized that, that our business was really more than just about a shareholder return, that our business was becoming about a stakeholder return. That yes, we had these incredible investors, these people who have given us this money, they're going to have this great return. In fact, since we went, public in 2004, we've had a 3,000+% return. It's been a
Right.
very good return. But we've also had an excellent stakeholder return as well. We've been able to give to our public schools. We've been able to, support our employees at scale. The things that we do as a organization, we realize that it's more than just our shareholders. It's all of our stakeholders, which are, it's our employees, it's our customers, it's our partners. But look, if you're in San Francisco and you're the largest employer in San Francisco, like it's also going to be about the homeless. You can see that when we walk in here down the street, you're looking into the eyes of those people who are on the street who, they have to be one of my key stakeholders. That's why we fought so aggressively for Proposition C.
Yeah, you mentioned in the book how you went to Matt
This is really important to us, that
Yeah.
who are your key stakeholders?
Right.
And yes, it's going to be those public schools. It's going to be the women inside your organization. They're going to be a key stakeholder. That's why we fight for equal pay for equal work. That's why that's so important to us.
Right.
It could be for our LGBTQ employees. That's why we went to Indiana. But in all cases, we're looking at not just our shareholder return, we're looking at our stakeholder return. And that has really created a company that we can look back and say, not only have we done well, but we've also done good. And that has really worked for us as a business, and we want to advocate that for other entrepreneurs who are starting their businesses, to be conscious and think about what kind of business are you creating?
Right.
What is really important to you as an entrepreneur?
And I think that's an interesting segue into stuff that's going on right now. I mean, we look at the WeWork situation, where Adam Neumann obviously has been taken out of control of the company, and certainly it isn't going to plan, right? It's something has happened in the company culture at WeWork that has led it astray. And this is not the first time we've seen this in recent years. And I'm wondering what you think about this kind of cult of the founder-first mentality of like the founder knows best and they deserve to have complete control over the company, and how that compares to Salesforce's approach over the years.
Well, I think I said this in the New York Times on Sunday, which is that shareholder return is going to be table stakes. You have to have a sound business.
Right.
You have to have a sound technology model, a sound business model. You have to take care of your employees. You have to do the traditional business pieces. But then you have to think about what kind of business are you building? That's where the stakeholder return starts to come together. And when you get these two things working, you're going to have a fantastic company that's going to be solid. But you've got to operate with that level of values and that level of ethics. And if you're not, then you're not going to really exist, I think, in this environment. I really strongly believe that capitalism as we know it is dead, that we're going to see a new kind of capitalism. And that new kind of capitalism that's going to emerge is not the Milton Friedman capitalism that it's just about making money.
Right.
And if your orientation is just about making money, I don't think you're going to hang out very long as a CEO or a founder of a company. You have to be more than that in today's world. You certainly have to be more than that in San Francisco.
And that's because
you
you need
certainly
that
have to be
employee,
more than
right?
that in our tech industry as well.
Yeah, and that's because you need that support of your employees. You need their faith, their trust in what you're trying to do, right?
Well, if trust isn't your highest value, then you have to ask yourself what is. I think that is the existential issue that is on the mind of a lot of founders in our industry who are going through very serious challenges right now with society. The question is, what is your highest value? And is your highest value trust? And if your highest value is not trust, then what is it? Because if you don't know, those people around you, your customers, your employees, your partners, all the key stakeholders that I just went through, they're going to figure it out. And then they're going to say, wow, this is not the person who I maybe want to work for or invest in or be a part of. And as evidence of that, your employees will start walking out. We've certainly seen that this year in Silicon Valley. Your customers will walk out. Your investors will walk out. I mean, we see that. We have these stories. And this is where every entrepreneur needs to wake up and hear that message, that they need to think about what are their highest values that they're really going to anchor their company to. And if they don't, then they will pay a price. And we see that over and over and over again. And it's oftentimes gets played out in this court of public opinion that you can see that people say, wow, this is not a company or a person that we want to do business with because of the value system.
Right. And do you think the VC model, this model of hyperscaler first mentality of like, look, we're going to give you a bunch of money to hypercharge your business. It seems viable so far. We're going to juice it up with this. Do you think that adds undue torsion where people can't build in those values? They can't take the time to build them in early on?
I don't think it's ever about the money. I think it's always about the culture. Peter Drucker, who is a fantastic, prophet of business, certainly somebody I learned a lot from, said it very well. He said that, culture eats strategy for breakfast. That means you have to look at the culture of your company. You have to look at the culture of yourself as a leader. Who are you? What is inside your heart? What do you really want for yourself, for your company, for your industry, for your community? What are you trying to do for others? Are you trying to improve the state of your checkbook, or are you trying to improve the state of the world? And I think that it's a slight shift for people, because I do think that, we come out of a world of Milton Friedmanism. We're thinking, oh yeah, shareholder return, it's just about making money. Maybe that's the way it was, but that is not where we are going. We're going into a world where we're really going to be, looked at by our values. And this is really important. And this is what I, try to work on in myself, in my own leadership, in our company. It starts with us. We have to be that example. And then we also have to, and it's a challenge. Of course, I read about that in the book that you mentioned, that I'm wrong about these things far more than I'm right. But by listening, to our employees, by our customers, our partners, we've been able to be guided to the right place.
Right. I was struck by how many times in the book you came to this realization that, something was awry, something was amiss in the company, and the trigger for that realization was directly from an employee. It wasn't like, oh, the profits are down, or this is and in fact, business seemed to be going quite well at times where things like pay disparity or the gay rights issue came up, and then the crisis was then alerted by the employees.
This is the fourth book. So the first book, when we started the company, was Compassionate Capitalism. That's where we laid out our kind of fundamental tenets. This is what we're trying to create, compassionate capitalism. That's 20 years ago. Then we laid in a second book, which was The Business of Changing the World. That was really about saying, okay, you know what? Here's other companies who are doing it right. Then 3, we wrote about Behind the Cloud. That was how we got from an idea to $1 billion in revenue. Well, I think that's something that every entrepreneur wants to learn about. So we wrote a how-to book on how to do that. This is a book on how we then went from $1 billion in revenue to, we've given guidance that this year we're going to do about $17 billion. So that shift, when you start to operate at scale, you need to think about your values much more deeply. You need to listen much more deeply. This concept of deeper listening, cultivating your beginner's mind as an entrepreneur, to really pay attention. And as all these amazing things start to happen to you, your ego and your arrogance and all these things can really start to take you over. That's where it's like, whoa, how do I get broken back down so that I can listen? If you can't have a one-on-one conversation with someone, if you can't listen to any employee or any customer or any stakeholder, or I'll give you an example. I was at a public school last week because we do a lot of work here in the San Francisco and Oakland public schools. We've given about $67 million to the public schools in the last 7 years. It's been a really exciting program that we're part of. And I was giving this speech, and I was on a playground at Presidio Middle School, and I'm giving the speech that I'm giving to you and to everybody here. And the difference is these kids are middle school kids, and I'm looking in their eyes, and I feel that in my heart. These are my stakeholders. If my company is not benefiting them, then who is it benefiting? And that is a key stakeholder of mine. I am looking into their eyes, saying, I am here to support you. And one of the reasons that we have a K through 12 computer science program in San Francisco, and that San Francisco is now the highest rated, math program of all the metro schools in California, I think is because of these incredible investments that we have been able to do in partnership with San Francisco Unified School District and the Oakland Unified School District with their core principals and their superintendents. I mean, that is the gift of having a business, that business is the greatest platform for change. That's what I love about my business after 20 years. It's what gets me excited about getting up and going to work every day, is I can improve the world through my business. Not only build great products, have great customer relationships, have a great shareholder return, but I can have a great stakeholder return also. I can use my business as a platform for change. And that is what is exciting to me.
And what do you, in that vein, what do you think the world thinks when they look at Silicon Valley, San Francisco especially? Now, the difficulties that San Francisco is undergoing right now in dealing with its homeless population, with the city infrastructure even on some levels, its support programs. And it says, look, this is the heart, or at least the head of Silicon Valley in some ways. Why? All these tech companies are coming from there. They're creating products for the world. Why should we listen to these people?
You can see it in the battle that went down exactly a year ago, where I was fighting for Prop C. We put $7 million into Prop C. This is what we wanted to achieve. Was we're trying to tax ourselves. We wanted to pay 0.5% of our revenues to directly address the homeless problem, which we need significantly more funding for in San Francisco, and this was going to give $30 million a month, and I was fighting some of the other leaders in Silicon Valley who do not want to give up their profits or their revenue, and they don't care, and they're not investing in local programs. They are not supporting. It's really a tale of two worlds, and I feel that very strongly. It got played out really well. Now, 62% of the votes in San Francisco came in for Prop C, but it's still not paying out because we didn't get to 66%.
Okay.
That's why it's in the courts. And then if the courts actually determine that that was a fair vote, then it will be enacted, which is what we all want. So this is where we are, which is, why was everyone not on that bandwagon? But you had basically people in Silicon Valley or investors who are anti-tax, who do not realize that if we're constantly optimizing income taxes and corporate taxes, then you're going to strip out the bottom of your social programs. And they don't seem to care. They don't seem to care that we don't have enough to be able to give to these programs. And that's what has to change, not just in our city, but in our industry and probably every industries. And some are changing and some are still resisting. And I think it's very much evidence of what happened a year ago.
And how do you think we change those minds of those people so that the next time an important issue like Prop C comes up, how do you get them to flip that bit, to understand that, like, look, this in the grand scheme of things, we make a shit ton of money, and this isn't that much, to pay to help build this foundation and keep it solid.
It has to come ultimately from them as individually as leaders, and then it has to come from their employees or their customers or their partners. In each one of the gambits that we kind of go through in the book and tell these stories, Prop C is one of them, but there's many stories that, we are fighting those forces. They're out there. And in each case, they line up against us. And in some cases we win, and in some cases we lose. But we know that we're ultimately on the right side of history, because what are we going to do? Leave all these homeless people on the streets? This is ridiculous what's going on. And they're telling us that it's not a problem. It's up 17% since we were working a year ago. That's what's crazy, and yet we're still fighting those people. And they're saying, oh no, we're not going to do anything and lower our taxes even further. It's a joke.
Yeah. Well, I agree. So, for what it's worth.
All right. Well, thank you.
I pay my taxes. You got one.
Thank you, Matthew.
In the introduction to your book, you say that when CEOs won't take responsibility, then I think you have no choice for the government, but for the government to come in. Do you think that time is now for Facebook, or is it approaching?
I've been saying that for 2 years. I mean, Facebook is the new cigarettes. It should be regulated. I said that, by the way, in January of... Hey, the first time I said that, nobody applauded. It was January...
I think people realize it now.
...of 2018. Well, I think they hadn't really seen Cambridge Analytica. They hadn't watched The Big Hack on Netflix. They hadn't seen the 50 or 100,000 developers that they've now flipped off because all of their data has already been harvested and used against them. They hadn't heard about that, Cambridge Analytica was using this data to identify the persuaders to go in and shift the election, in a certain direction. And not just our election here, but other elections in other countries as well. That was amazing. And, the government has to step in. And, ultimately, we also need, and we have now a California privacy law, which is something that I supported and happy to see enacted. But we need a national privacy law here in the U.S. as well. This is a critical thing that all of us should be acting for, because otherwise you're going to get a patchwork of privacy laws from every state in our country, and I don't think our industry wants to have to navigate that. That's a critical part of where we're going. We have got to get our privacy and our data locked down so that we all know exactly where we're going. And when it comes to regulation, the government is doing too little, too late. They should be stepped in now, and they should be working hard to make those changes. And some of those leaders understand that, and some of them are still waiting to understand that.
Do you think that being a public company for the past 15 years has made you safer in some ways? Because I think a lot of private companies these days, we're seeing governance issues all over the place. I mean, WeWork is a recent example, but we have also seen it in the case of Uber and other companies where you're like, wow, this, I can't believe this is the way they were running internally.
In all of those cases, my opinion has been, and I've directly advised many of those CEOs directly, they are staying private way too long. They don't understand what the public markets do is indeed the great reckoning, but it cleanses their company of all of the bad stuff that they have. It forces them to kind of apply the regulations necessary to have a clean company, whether it's their implementation of Sarbanes-Oxley, whether it's SEC regulations. It helps them to kind of clean things up. And for these companies that don't do that or just wait too long, by the time they go public, it's too late in many cases. They haven't made the changes to their business model, their technology model, or their stakeholder model, and then they've gotten to that point, it's over, and they're not going to recover. So I think companies, like we went public, we were $100 million in revenue. That was about the right time. And that was a good time because we're small enough that we could make those changes and adjustments, and there's a lot of those that continually happen. And that includes the people on your team, your chief financial officer, your lawyers, the people who are really like keeping you, on the straight and narrow, but also that you want to create a great company. And great companies in many cases are the public companies. Not in all cases. There's some great private companies, but the vast majority of the great companies that are out there are public.
Excellent. Well, thank you very much. I'd take another half hour, but I've already gone over time. So
all right,
thank you kindly,
thanks for having
sir.
me back, Matt.
I appreciate
really
it.
Appreciate
thank
it.
you
Great
kindly.
to see you. Thank you.
As companies transition to using microservices in their architectures, more APIs are created across the organization. With this increase, it can become more challenging for developers to find these internal APIs and reuse them when they're developing new software. That's where Rapid API for Teams can help. Rapid API for Teams enables development teams to publish their internal APIs into a private workspace. Developers can find any internal API, view its documentation, test it, and connect directly, or collaborate and share information about the API right in Rapid API. Team members can also subscribe to any public API available on the Rapid API Marketplace, and the entire team can see and use that subscription. This way, you only pay once for any API your team uses. Rapid API for Teams makes it easier to share and collaborate on APIs. Get started today on rapidapi.com/teams.
We like to partner with local entrepreneurs who use technology to address big societal needs. We back local teams because they know their customers best and they're best placed to make the right decisions for them. We bring operating expertise and global scale to help our partners overcome challenges and grow their companies. Our teams love building companies that create value and make a difference. As well as our investments in companies such as Tencent and Mail.ru, we're building meaningful global businesses in online classifieds, food delivery, and payments and fintech. And we never sit still. We actively seek new opportunities to create value over the long term. It's what keeps us moving forwards.
Ladies and gentlemen, please welcome TechCrunch senior writer and your Battlefield host, Anthony Ha.
You all know what it means when I come out and start screaming at you. That's right, it's time for another session of the Startup Battlefield. We have 5 more startups presenting for you, and then we're going to announce the finalists tonight, and we're going to have the finals tomorrow. Before we can do any of that, of course, I have to bring out our expert judges. First up, we have Nisha Dua, general partner at BBG Ventures, which she co-founded with Susan Line in 2014, and which invests in consumer technology startups with at least one female founder. Next up, we have Anu Dugal, founding partner at Female Founders Fund, an early-stage fund investing in tech companies started by women. She began her career in technology as the co-founder of Exclusively In, a private sale e-commerce marketplace. Next, we have Annie Kadavi, managing director at Redpoint Ventures. Prior to joining Redpoint in 2018, Annie has worked at Charles River Ventures, Bain & Company, and most recently at Uber Freight. Next, we have Marlon Nichols, co-founder and managing general partner at Mac Venture Capital, which you may know as by its former name as Cross Culture Ventures. It finds entrepreneurs building the future for the rest of America. He's a former Kauffman Fellow and investment director at Intel Capital. And our final judge is Renata Quintini, a venture partner and entrepreneur in residence at Lux Capital. Prior to joining Lux in 2017, Renata was a general partner at Felicis Ventures and an investment manager at Stanford University's endowment. So let's hear it for our awesome judges.
All right.
Okay. The plant is in front of the desk, which I think means I'm allowed to call the first startup up. That startup is Avelo. Presenting for Avelo are Amanda Dunker and Jeremy Nusser. Come on out.
Last week, the world came together for the largest global climate protest in history. People are so frustrated and pretty pissed off. Well, what can we do? Each one of us can actually have a direct positive impact right now by just growing a little bit of food outside. Which is, there's great news because the United States is actually a little bit ahead of the trend. Home Depot alone saw an increase in their gardening revenue by $1 billion just this last year, bringing them to $18 billion. The average person actually spends $500 a year on home gardening. But not all of us have a green thumb. Actually, most of us have a black thumb. We are overwatering, we are underwatering, we are just doing it wrong. Gardening is really hard. But what can we do? We're here to change the status quo. Gardening should not be this hard. You shouldn't have to struggle to figure out, what am I planting? Where am I planting it? How do I even get my plants? Do I need fertilizer? Not to mention, most of these products actually have toxic chemicals, which is not only bad for you, but it's also bad for the environment. What can we do about that? Luckily, we have a solution to make it so that gardening is going to be so much easier for everybody, and you're going to see that you've been watering wrong. Introducing Avelo. We've created the first fully assembled self-watering garden that you can just bring anywhere with you. You never have to break it down. We're breaking the rules on how you water your plants. Also, we have a coaching app to keep you active, engaged, and get all your questions answered before you even know that you have them. With the planter, we also will include all of the plants with the coaching app, as well as a 10-year warranty with that planter, which is completely unheard of because we have that much confidence that you are going to crush it as a gardener. So how does this watering system even work in the first place? Like, what is self-watering? So self-watering, this is sub-irrigation. And what we've done is we've created a proprietary piece of hardware, specifically in the water reservoir and the proprietary materials we're using to make water transfer immensely efficient. plants are actually able to use their own natural pressures to signal and draw that water up. So you never, ever have to worry that your plants are getting what they need because they've got it covered. They know exactly what they want when they want it. So you can go on a vacation and not worry about it. Because with the reservoir, it's so efficient that you can fill it, take a week vacation, come back, and you're completely fine, which is unheard of. So let's go ahead and actually see this, this mythical garden in action. Can we go to demo, please? So here we've got Jeremy. Jeremy has just ordered and received his Avelo online. It has come fully assembled and with soil, which means he doesn't need any tools. And I know for those of you that live in, I don't know, New York or in a dense city where you don't have access to a hardware store that's super easy or maybe a truck, this is going to make your life that much easier. Also with this, it has amazing connection points. You can pop in accessories for vertical growing to maximize your space, as well as cold frames, so that way if you're living in Chicago or New York, you can grow year-round. Also with it, what you can't see is that the water reservoir is actually built in underneath. It also is completely insulated to help keep that temperature regulated, because in this case, size matters, and that's where a lot of planters go wrong, is they don't take into consideration your climate. You know, you may be in Louisiana, but it doesn't mean you shouldn't be able to grow something. So Jeremy's getting ahead of the game here. He's already started to plant. He's using our coaching subscription, which does include everything. He has curated this box based on his climate, and we've worked with him to make sure that he's geared up for success. So Jeremy actually has a question, and he doesn't know what to do about the watering. This is the first time he's ever done this whole like crazy water reservoir thing. So he's going to go ahead and he's going to connect to the app. So actually, if I can get the cameras to connect to the app as well. He is reaching out to our Grow team to ask a question in real time. Because what do you do if you have a question, right? It can take forever. You can get lost in the internet, and sometimes you're going to get misinformation, which nobody wants. Because if you're living in California, you know, you may not want to be getting advice from somebody who lives in, let's say, Michigan, when they're not taking into account your actual climate. So Jeremy's going ahead and he's asking a question right now to our Grow team about how to water. Okay, well, I'm going to go ahead and assume that he was able to get a hold of somebody, because we do have somebody working on it right now. Oh, perfect. It looks like somebody was able to get in contact with him.
Oh, okay.
All right. So anyway, so our Grow team is able to help troubleshoot because they can actually see, you know, where does this person live? When did they, you know, first subscribe? When did they start planting? So that way we can give you accurate information based on your location as well as your season, which is very, very important and typically forgotten when it comes to seeking information from your local retailers or online. Perfect. Okay.
Presentation?
In addition to that, Jeremy's also pretty excited because he's never done this before, so he wants to go ahead and document his journey, his garden journey. So what that means is he's going to go ahead and he's going to take a photo of his garden. And with that photo, not only can he document and understand the progress and have like those good feelings where he can see that little seed grow into something big and he documents it, but also we can see that as well, which means that we can actually troubleshoot and give him advice before he even knows that he needs it or wants it to help give him that much more success.
Okay.
Perfect. All right.
Gonna have
So,
to wrap it up.
Pardon?
Final thoughts.
Yeah. So, final thoughts. With Avelo, you can grow anything, anywhere. This is an outdoor planter that you can put in small spaces, whether you are in Chicago or you're in Florida. $50 off right now if you go to avelo.com and type in Disrupt 2019. Thank you.
All right, judges, here's a question.
Yeah, thanks for being the first one up. So I have a question about who your target market is. It's obviously a big market, but the Avelo is $400, and one of the stats in your deck was there's about a $500 average spend per year on gardening products. So that's almost as much as the Avalo on one product. So how do you think about your early target market, and how does that fit into sort of the mass market for gardening?
Yeah, absolutely. So our target market, based on our pilot, actually, so we have right now currently 400 of these that we've been piloting, getting feedback from. It's women and it's millennials. So it's women between the ages of about 25 and 35 that are really focused on wellness, well-being, food, organics, et cetera. But how do they afford that? Does that make sense for their lifestyle? What we've found is that this is something that people actually are prioritizing. So just like someone's paying for a SoulCycle membership, or they're paying for Pilates or anything else of an added expense, this is something that people actually are yearning for. So instead of maybe putting those extra dollars into their pre-order food basket or other subscription services, we're actually finding that people are prioritizing and yearning for this because it fulfills multiple needs. So they're getting food, they're getting a learning experience, which people are yearning for. It's something they can share and have community with, and it's something that lasts forever. So, well, that's an exaggeration. We have a 10-year warranty. And so what that means is that they are paying $400 up front, but they're going to keep that for 10 years. And they get to grow with that. So they get their first place, and it's this little tiny condo, and they move to the next place, and it's a little bit bigger, and they can take it with them. And so it just keeps going, going, going.
Great, thanks.
Great presentation. So the question I have is actually around the self-watering system. I think that's really fascinating, and particularly when you're traveling, I think it's great to know that you don't have to worry about watering your plants. How proprietary is that? And from a competition standpoint, has anyone else developed something similar?
Yeah, great question. Actually, Jeremy's the engineer of the group, so he should answer that question.
Yeah, so we spent the last 3 years really honing through R&D, through different material science, trying to find the right combination of materials to allow the water transfer rate necessary to give you the success through all the climate conditions, as well as to be durable and reliable over a long period of time. And so there are, self-watering you can buy a self-watering planter, it exists. You're going to have to really replace it in 3 months is kind of the typical life cycle. And so we're saying your first maintenance is somewhere in the 5-year time frame, and no one is doing that. So maybe we're just weirdos, but we think it's important.
That's great.
Cool. I have a market segment question. So you carved out a pretty large marketplace, but what percentage of that market are folks that are starting out in new one-bedroom apartments or don't have yards or live in buildings?
Yeah, great question. So we're actually really focusing and emphasizing the urban gardener. So we understand that there is an existing market where people have these large properties and they have the luxury of being able to put it anywhere, but we're actually seeing this as more of an urban planter, and it's great if somebody else with a large property wants it. Yeah, so Jeremy, you want to address the market size exactly?
Yeah, so I think that what we're seeing is we look at ourselves as kind of the graduate program. If you're you've decorated your apartment and house plants, that's great, but you're ready for that next challenge. So after you've been a loyal member of the Sill or Bloomscape or something like that, it's that next wave path to that, as well as you start to get more space, as you start to evolve in your career, in your life, you have more kind of time for it, priority for it, as well as a little bit of space for it, and that tends to be kind of the people we're targeting. So it's kind of that early to mid career is when they're starting.
So I get the profile. I guess I'm asking, what is the number? What percentage of that market size that you laid out is that?
Yeah, so that time, just even from the age demographic, it's about 30 million people right now in the U.S. kind of fit that demographic, and that is only including the people who are actively spending $500 a year to garden, not including the people who are yet to be gardeners because they're just not doing it because it's too hard. So we see that that's our minimum is that 30 million, and we see that there's definitely an undefined above that.
We are seeing urban though, so urban being larger cities with smaller properties is actually being about 2/3 of our market. That's really what we're anticipating for that.
Okay, we have 6 seconds. I'm going to ask a super quick one. What's your COGS on the product?
Yeah, the COGS is just over. It's around $180 on the product itself. There's some additional shipping and things that come into it, which give us that 60% final margin.
Yep.
But yeah, we're able, and we manufacture in house because it's the right fit for us at this point. But that's something that will change our margin structure.
Okay. Thank you.
So,
yeah. All right, give it up for Avalo. That means it's time to bring out our next startup. That startup is Cream. Presenting for Cream are Vitor Crespo and Felipe Quinaz. Come on out.
Hey, so blood is a scarce resource. In emergency situations, O negative, the universal donor is required. Because that is important to have the right blood to face emergency situations. Even though emergency responders have access to all the blood types, they cannot administer them without a rapid confirmation test. This is a worldwide concern. Less than 3% of people have O negative worldwide. O negative scarcity creates a huge financial impact for blood inventory management. As blood only lasts for 42 days, there is a constant need for the right blood types. Billions of dollars are being spent right now in order to face emergency situations. So that's why we have created a portable medical device that detects blood type in 3 minutes. So it's faster, more affordable, and with this, more importantly, we can execute the test anywhere, from ambulances, emergency helicopters, to small clinics or remote locations. With this, any medical responder can detect blood earlier on the process and allow the right transfusion without having to wait or to give O negative. The device works in the same way medical staff is used to work nowadays in the traditional big bulky devices that exist in hospitals and laboratories. All we have to do is put some drops in the cartridge, and then the device will create the right set of movements, almost like centrifusion, in order to detect the right result for the test. But let me show you how that works. Let's go to the demo. So imagine a car accident where people need blood transfusion. All the emergency responder has to do is to put some drops of blood in the cartridge and insert it into the Cream device. After that, the device will create the right set of movements in order to allow clotting. After that, the machine learning and computer vision algorithms will detect the right result, and the result appears on the main screen, as it is right there. So the transfusion can be done now on the emergency vehicle if they already had blood banks, or the hospital can be alerted in order for them to be ready with the right blood type as soon as the patient arrives. So the device can do the test offline, has an autonomy for more than 80 tests, and stores the information about every test in order to be sent to our cloud later on. Now back to the deck. So we redesigned the way these tests are being done nowadays in the traditional big bulky devices. So in order to execute the tests anywhere, so we use microfluidics in the cartridge in order to split the blood evenly in all of the containers. We have a patent for the process, and we created a secret strategy for the algorithms. Our accuracy is 99.77, which is more than enough to handle FDA requirements. We have competitors, of course, so we are talking about the big multinationals worldwide in terms of pharmaceutical, but they can only do this on laboratories and hospitals. So Cream is the only one that can execute this for the point of care. We are also faster and more affordable. So addressable market for blood type is higher than $4 billion if we only count with emergency vertical. This is calculated with the number of hospitals and emergency vehicles worldwide. Commercialization path for Cream is the regulatory one. So the first markets for us are United States and European Union. We validated the device in major international hospitals with an accuracy of 99.77. FDA only requires 97 for these kinds of tests. So we are in the process of securing FDA and CE mark. We already secured comfort letters from end clients such as government institutes and hospital groups. Business model for Cream is B2B. So the initial revenue will come from the hardware, the recurring revenue will come from the cartridges, and the software as a service algorithms. So this is a market that is owned by key distributors, where Curium already has letters of intent with most of them. We have a great team in place, so medical, scientific, and business-wise. We have biochemistry PhDs, we have computer vision and machine learning experts, we have experienced people in business management and distribution. We also have excellent board of advisors, from PhD researchers to the CEO of one of the largest hospitals in Iberia. So, if you are in a blood-related role, go to Curium.com, ask for a pilot, help us to reduce costs for the healthcare industry, and more important, saving lives. Thank you.
Okay, judges.
Can you tell us a little bit about your distribution strategy and, more importantly, how the buyer thinks, right? Because they already have an infrastructure in place.
Yep.
So you're going to come in and say, I'm faster, I'm cheaper. Is it just put your infrastructure aside, take me over? Or is it somewhere that doesn't have infrastructure at all and they start from scratch?
No, it's just the way you give blood. So hospitals spend around 1% of their budget in blood. So imagine the saving that they could have if they could give the right one instead of O negative every time. So the distributors, there are big players worldwide that already control the blood industry, the blood typing devices, etc. So we talked with them, we validated the business model with them, we understood what kind of margins they wanted from us, and with that we got the letters of intent, so that's the easy way to go.
So is that what you mean by traction, letters of intent, as opposed to like formal working relationship with those companies?
Well, we have pilots with major international hospitals that shows the accuracy. We have done clinical trials with them. However, we cannot convert letters of intent to orders until we have the final device ready. So what we are doing right now is basically to fundraising in order to have the final device ready, handle the regulatory, and start delivering the devices to the distributors that sign the letters of intent.
And one quick follow-up, if you don't mind.
Yeah, good.
So you mentioned that you are going through the FDA approval process. Where exactly are you in that process?
Well, it's the 510K, so we don't have to be from scratch, because it's something that we redesigned from the traditional way, so it takes around 6 months. We are submitting all of the paperwork necessary for that. So not only for FDA, but also for CE, in order to start selling also in Europe.
Just as a side note, to make sure it's clear, we have more than enough accuracy to make the whole process. It just needs to be the finished product, which is basically manufactured devices, so that it's ready to be FDA approved, and you cannot touch it after. But technically and scientifically, the device is more than validated.
As you think about the future enterprise value of your company, what are other businesses, medical devices maybe in this category or related categories? What are the outcomes? What do they look like?
We created a device as a platform approach. So basically we can detect also diseases, nutrients, and so on. So basically imagine an espresso that you put a different cartridge for every test. What we are using is standard reagents in the market that already are used by the big pharmaceuticals, and we are bringing that for the point of care area. So there is a lot of a roadmap for it. So diseases, nutrients, veterinary, water analysis, soil, etc. So we basically can detect every visible reaction you can think of.
Can you talk about price point and how it relates compared to your competitors?
Yeah, so basically the minimal cost of a traditional device is higher than 250K right now. So we can sell the device by 16,000, and we can give financial incentives depending on the annual commitment from the number of cartridges. So that's the recurrent revenue stream. The other is the algorithm. So every time we have a new algorithm, the device can self-update over the year, and the end client will pay that in the software as a service model.
Could you talk just a little bit more about how your technology is different from the existing models on the market? You mentioned computer vision, but in a world of maybe I'll ask the controversial question that's on everyone's mind. In a world of blood analysis and Theranos, tell us how it's really different.
Well, first of all, we can do it in the point of care. No one can by now for blood typing. The other one, I will let Philippe handle the
Yeah,
IT part.
from the science perspective, you need to make sure that you can detect visible reactions on the move. That's why we focus on portability, and that has its own challenges. And basically, we solve that with microfluidics and the design of our own cartridges to make sure that the reaction occurs in the minimum time possible. So we optimize the reaction. And then we also design the cartridge to be able to be easier for them to extract the computer vision features that we require from each reaction. So it's actually a complete approach from the machine to make sure that then we are able to very easily, or as easy as possible, detect very complex and sometimes very subtle chemical reactions, which are right now very hard to do even on bulky machines.
Just for you to know, so CREAM stands for Chemical Reaction and Image Analysis for Mobility.
Great.
Yes.
Final question?
Yeah, so what do you intend to accomplish with your funding round?
So basically, we want to go through the design to manufacturing phase because we have prototypes ready, clinical trials done, letters of intent for distributors. So basically, it's getting the final device ready, handle the regulatory, and start selling. So after that, we will go through the roadmap for different diseases, lack of nutrients that retailers are asking us to detect, like magnesium and calcium, in order for them to sell the right supplements for persons. So this is something that we want to do.
All right, let's have one more round of applause for CREAM.
Thank you very much.
Our next startup is Life Couple. Presenting for Life Couple are Sean Raunis and Anton Callis. Come on out.
Thanks. I was not sleeping in my bedroom with my wife for months. We were actually Googling divorce attorneys. My wife and me have been married for 19 years. We have 2 children. We've been to 5 marriage and family therapists, and it wasn't working. My marriage was falling apart and divorce was coming. We needed to come up with something that worked in my entrepreneurial lifestyle, but worked with my wife and what her dreams and ambitions were. We needed something, and we needed something fast. And then a miracle happened. A miracle that brought us together, and we created Life Couple. Life Couple is a platform that allows couples to address relationship challenges in a way that's suitable for their everyday life. We have Jack and Jill, and Jack and Jill have just taken a metric-driven onboarding questionnaire, and through a proprietary algorithm, 4 key areas of the relationship have now been filled: communication, trust, intimacy, and conflict. The platform understands these vital areas, and it offers check-ins to see how the couple is doing. And through alerts and AI and machine learning, the couple is now offered ways to bring the gap between where they're at and their satisfaction level to be 1. Life Couple takes one of the most important things that we take for granted, and that's our relationship, and makes us think about it. Because without a good relationship, our lives could somewhat be meaningless. Life Couple is a Fitbit for your heart. Demo, please. Here we have a dashboard, and as you can see, this is the vitals of, let's say, Jack. The red area is the growth area, and the platform identified that Jack needs to do something. Jack is going to do something that we call icebreaker. An icebreaker is something in most relationships where when you want to communicate to one partner, sometimes if you say the wrong thing, it's not going to go too well. And in this situation, Jack has just gotten a message because his partner wants his mother-in-law to come visit, but not for 1 day. She wants to come for a month. So instead of Jack acting like Jack does, Jack is now able to act in a way to behave so that him and Jill are now walking away in a conflict. The platform sends a message, and the message goes to Jack. It asks Jack, meet with Jill and solve this challenge, and let's keep track of how things have gone. The platform also has other areas such as relationship challenges, other areas such as digital gifts with the 5 love languages, other areas that make a relationship have that needed date, or go on and get that video because AI is kicked in and AI knows what you need to get through to keep your relationship going. This platform was built to keep a relationship healthy. It was not only built to keep a relationship healthy, but it was built because 11 to 18% of people that go to therapy find it to be not effective. There is no digital solution. And now there is. When you walk in to day one of a therapist's office, that therapist is going to take an iPad out and they're going to find exactly where you're at. They're going to know exactly where your communication, conflict, trust, intimacy levels are. And at the end of that session, they're going to drop down and they're going to give you an activity. And that activity is going to be something that you're going to do in between sessions. Now, me, I would lose that piece of paper. But now you can't lose that piece of paper because it's in your phone. A phone that you spend 4.5 hours a day on, and you could spend 15 minutes and do something productive. When you come back into that therapist's office, that therapist is going to be able to see exactly what you've done, and you're going to have a gauge of exactly where your relationship is going or not going. This is a treatment plan. Let's go and let's talk about exactly how Life Couples came about. There are competition, Talkspace, Lasting, Relish, great companies, but no one tracks and no one monitors the health of one's relationship. There's also other areas. For example, our go-to-market strategy. How big's the market? 9.6 billion and 3.8 billion. This is a massive industry. An industry that the dating industry started, but what keeps us together? This platform will keep us together. The company started marketing in July. We spent $5,500. We have 5,000 users, and our CAC is an astonishing $1.25. 5 minutes and 42 seconds people are spending on this app, and we haven't even been close to engagement and any form of starting to work on our messaging. Our go-to-market strategy, of course, we have the traditional, but in the middle, we've broken grounds with some of the biggest organizations that have blocked technology from day one, and we have built a partnership because we complement therapy. We do not say that therapy is going to be replaced by technology. And when it comes to the Employment Assistance Program, $13 billion is lost of unproductivity because of people divorced or in an unhappy marriage.
Wrap it up.
Life Couple has a star-studded team of advisors. We have Matt Harucci from Calm, who wrote the book and took Calm to $1 billion valuation. In summary, Life Couple is propelling the future of relationship health, and I ask everybody in this room to download Life Couple today and be part of the movement. Thank you.
All right, judges.
So I'm happy to start. Congratulations. I think that therapy, particularly for couples, is a really interesting space. The question I have for you, based on what we saw, is: are you looking to replace communication IRL with couples, or is the idea that on a weekly or daily basis, each of you are willing to spend 5 minutes on your phone addressing whatever issues that you have? I'm trying to understand,
Sure.
how are you improving the relationship? Is it more digital or also in real time?
So the technology actually brings you together and asks you to meet and tracks you to meet. We cannot take our phones away, but what we can do is ask that you can spend 5 or 10 or 15 minutes, whether it's in the bedroom or whether it's in the morning, and the platform reminds you and asks you to take those little baby steps. And with these little baby steps, we can grow. We might only start with 5 minutes, we could grow to 10 minutes, but it's all about small wins. because small wins are what makes a relationship start to flourish. And so what Life Couple does, it enables you to have small wins and maybe breaks you out of that habit and gets you to maybe put the phone down. So it's actually a complement, but yet it doesn't replace the mobile phone.
You put up some metrics there, 5,000 users, really impressive average session length. What are the other metrics you're tracking? Weekly active users, daily active users, what are you seeing there? And how are you thinking about retention, 30-day retention, and engaging people so that this product, they want to go back to it every day, every week?
Sure. With the relationship pulse check-in, what it is it's automatic because everybody wants to know where they're at. So daily, even if you're not doing it in the app, you want to know where your partner's at. So we're almost taking your temperature. And we found that we started to message people using push or text. Couples were going on because they were dying to find out exactly where they were at and where their partner was at. And with this, we started to use some of the technology to be able to offer dynamic content. So if somebody's having an intimacy issue, we have the top intimacy experts in the world. So the retention play is to give dynamic content, top-notch content. Con wrote the book. We plan on following it.
And do you have those metrics, daily active users and 30-day
So the daily
retention?
active users right now is anywhere from 144 to sometimes 180. It goes up and down. We tested other countries, and in other countries there's some cultural, I won't call it bias, where people just maybe not want to go in because they can't seem to get their partner. And so what we've done now is we've transferred now to North America, and we've started to focus in on Canada and the US because we think we can get a solid answer. So that's what we're looking at. And we only launched in July with actually producing what we're producing.
Could you double click on your team? So it's AI driven, so is there AI engineers on the team, and is there a trained therapist on the team that's training that artificial intelligence?
Correct. So we have on our advisory board, we have president, first of all, of the Texas Association of Marriage Family Therapy. We have 2 board members of the American Association of Family Therapy. We have some of the youngest, most forward-thinking therapists that want to put this platform on its head. They realize that it's broken. They see what's happening, and they want to basically bring a tech play into place. As far as some of the day-to-day stuff, we are out. I'm out in coffee shops. I'm out in places asking people. Sounds weird, but I'm asking them, what do you need? What can we do? And that's how we're building this product. We're building this product by people, not by theories, because theories, even though they sound great, but at the end of the day, with every 36 seconds of divorce taking place, I think the people can have an answer at times. And so that's kind of the approach we're taking. But we do have experts. We have somebody that is actually from the University of Michigan. He's a top professor there, and we plan on bringing in the University of Michigan and start bringing in some of the data and start growing from there.
What do you expect your revenue model to be as you grow the business?
It's a subscription base. We'll start off monthly and yearly. Right now, we kind of have an idea where we want to go, but we're looking at anywhere from $9 a month to $12. And the beautiful thing about it is partner A pays, partner B doesn't pay. So if partner A comes on board and partner B doesn't want to come on board, we turn into what I call an empowerment. An empowerment meaning that if there's anyone out there that is hurting from the heart, we will offer content to give you the strength to do whatever you can to, in fact, find exactly what you need to get through this hard time.
I have a quick final question.
Well, it sounds like a lot of the insights and the big difference comes from the intake questionnaire, right? To actually figure out those categories and where you are in the relationship.
The onboarding, yes.
The onboarding. How much of it is proprietary to you, and how much of that is secret sauce?
Fantastic. We have patent pending status. It's 100% proprietary. Okay, we have not gotten the patent granted. I want to be upfront. But as far as the whole proprietary questions, we have the ability in our back end to change any of those questions at any time without having any kind of updates. So what we're finding is we're learning more about different nuances based upon if, for example, it's an LGBT couple, or if it's a couple that is in a certain area that might have a different income level. And we're learning, and we're learning, and we're learning. What we did was we built an engine that could solve the problem that the therapist had to take and go out and get grants and then put into place. And not to say that they don't work, but what I'm saying is that technology has the answer, but yet it has the answer without pulling us apart.
All right, give it up for Life Couple.
Thanks.
All right, let's bring out our next startup, StratiX, Presenting for StratiX are Ariel Wright and Tate Testa.
Good afternoon, everyone. My name is Ariel Wright. I'm a current senior studying computer science at Harvard University and a former quant in cryptocurrency at Goldman Sachs. Earlier this year, Donald Trump tweeted about negotiations with the trade war falling through. As a result, one man with one single tweet moved down the S&P 500 by 4% in just 2 days. That is approximately $90 billion in losses across our nation. However, JP Morgan was not as impacted as they have an automated index to track Trump and his tweets. However, this isn't the only case. Earlier this year, Boeing had a plane crash which led their stock to drop by 5%, equating to $10 billion in losses in 24 hours. However, there are very simple algorithmic trading tools out there that can work on these scenarios. But 7% of our world can code, and 85% of the stock market is led by machines. Where does that leave everyone else? From your everyday TD Ameritrade trader to your private wealth manager at a $10 billion fund who has never touched a computer. These people are being left behind, which is why we created StratiX. StratiX is democratizing algorithmic trading. We do this by creating tools for everyday investors who cannot code to automate, create, and test scenarios on their portfolio. I can show you a bit about how it works. Let's move to demo. So StratiX is actually brokerage agnostic, meaning you can bring on your own broker. And today we're going to be using our Robinhood. We're going to create a new strategy using a stock called Vivint. Vivint essentially works in the solar panel space. We're going to go for 10 shares. And from there, notice how in our interface, it allows you to buy when and sell when, giving you an indication that you can create rules to protect and also take advantage of opportunities. You can use these rules in Forex, Twitter, price change, etc. From there, we can create our buy solution. In this case, we decided that we wanted to buy whenever there's things surrounding green tech, the 2020 election, as well as materials for climate change in the space as keywords. These are a few of them that you can use. You can also choose a sell condition. And from there, we decided today that we wanted to actually sell under conditions of maybe geopolitical instability. So when Trump or trade war or maybe materials surrounding impeachment are presented in the news. Awesome. Great. Why don't we have a look at what the backtest gives us? StratiX is unlike any other tool in the space, as we have an internal proprietary scripting language that allows us to not only be able to trade on singular dynamic or maybe formal true or false materials for our backtest. Our scripting language is Turing complete, which means that we can create a strategy for anything in the world. Our backtest gave us approximately 9% gains. Oh, not bad. With this price of the stock being actually dropping by 2.9%, meaning that not only under different conditions did the stock perform, our strategy also was able to generate gains. StratiX also has tools to be able to protect you, such as manual triggers, as well as automated stop loss and other materials. Great. From there, you can just give it a name, date, etc. All right, let's move back to our slides. Great. So we have a subscription model ranging from free to day trader, and then enterprise for other types of clients. Our market essentially centers around the $52 billion that trades between the 100 million everyday investors in the tool space. And because we're software and we are brokerage agnostic, we have the capability to reach investors globally, approximately 500 million. What differentiates us from our competitors is that not only are we easy to use, but we offer the ability to backtest, give you formal, full autonomy, and we are brokerage agnostic. People have taken notice as we've garnered over 10,000 people on our wait list, have spent $0 in marketing, and our current beta has a net promoter score of 7.5. Our team is made up of a team of internationally renowned researchers, Harvard computer scientists, engineers, and bankers. We've worked on portfolios as large as $200 million, and have been a huge passion for the space. StratiX is democratizing algorithmic trading. Traders, investors, go to StratiX today to reclaim your alpha. Thank you.
Judges.
So I have a question as someone who doesn't trade, but maybe might end up being one of your 100 million everyday traders in the startup
Over
pack.
there? Okay.
How are you guys testing or trying to understand really who's addressable in that 100 million? Because one of the things you had up was full autonomy. So does someone in the starter area really want full autonomy, or is it actually too confusing? What are you seeing from the beta?
Yeah, so essentially from our beta, we've discovered a couple of things. So number one, you are not exactly correct, but number two, simulation tends to be the most interesting part of our platform. And many people have been open to what we've been sort of working on in our StratiX marketplace that allows users to essentially park their money at an already existing either wealth manager or already existing strategist strategy, and from there then automate. So we've been thinking about and coming up with solutions really to help for this problem as well.
Congrats. In terms of your beta, just building on Nisha's question, what are some of the key insights that you've taken away? How long was the beta? How many users? And how is that impacting how you're thinking about product features in the future?
Right. So actually, our beta was 200 users, and it was a little over a month and a half was our latest cohort. And from there, we discovered, like we said, the backtesting was one of the most interesting features. And since we already knew and sat down and built with the idea of long-term in mind, coming up with materials such as what we like to call internally the extension system that allows people to almost use StratiX as a Wix for algorithmic trading, where you can literally create any tool that you'd like from our interface, is something that we've discovered has been interesting. And that particular interest has come from more so larger clients, so like your wealth managers, your hedge funds, et cetera, as well as the everyday trader.
And you say you have 10,000 people on the wait list. How did they hear about you?
A mixture of Discord and Reddit is where the seed sort of started. Essentially, that's sort of where we discovered a lot of inbound has come from. Outside of that, we are college students, so hearing about a mixture of our startup journey and also chatting with other friends and whatever has really built the waitlist a lot. And with our new email list also, this definitely pushed it out.
And what are the threads on Reddit that people talk about you? What's the circumstance?
Particularly algo trading. I know you guys are probably out there looking at us on algo trading Reddit, so so particularly algo trading Reddit, Wall Street Bets, and a few others are also places where people tend to throw us out of nowhere.
And is there something that you wish your software could do that it can't today, but you're developing? Where is it going?
Yeah, so one of the things that, well, frankly, because the internal scripting language is Turing complete, there's nothing it technically can't do in the realm of computer science. But one thing that we are working on is being able to make sure that our desktop clients can actually work with our mobile clients. So private wealth managers actually have the capability to use and have fintech tools that they can have for bespoke portfolios in the space. It's actually a pilot that we're building up a pool now for, and we're super excited to keep pushing that forward.
To take that one step further, when you dream the dream of what your business becomes, let's say 10 years from now, what does it stand for and what is it doing for what group of people?
So when we say we want to democratize algorithmic trading, we mean that seriously. Yeah. So if one day the whole market is not only 85%, but now like 99% bots, we will then work on solutions and materials to be able to help mitigate whatever the side effects of that would be. So taking the concept and the idea of algorithmic trading holistically from its core is what we're sort of focused on.
So you said you haven't spent any money on marketing right now.
Yes.
I guess you guys are raising. Tell us a little bit about what that go-to-market strategy looks like and how you plan to acquire customers.
So we definitely ground it and divide it in a couple of ways. So number one is our formal B2C. So continuing to sort of nurture the community that we've developed around our platform is the number one thing we're pushing for. We have our own sort of email list. We also have developed different learning materials, and we'll continue to sort of spread our word amongst the different Discord and Reddits of the world. And then for our sort of B2C, B2B, we actually have had people reach out to us organically, which is very interesting. So we'll probably continue just utilizing that mechanism and like pushing for referrals, with referrals being an overarching thing, obviously, for both, since it's been successful in other spaces.
On the B2B side, do you think it's going to be more smaller trading shops as opposed to the big ones? And I guess what's underlying that question is what's really different and really hard about what you've built? Can a JP Morgan or Goldman Sachs or whoever put a lot of resources to it, tweak whatever they're doing now because they're using similar technology and arrive where you are?
Yeah, so essentially I can break this question up into sort of two parts. I'll focus on the first, small mom and pop shops. So you're correct about, yes, a lot of the inbounds tend to be from simple manual trading prop shops that are currently existing now and realize that they need a solution because their analysts don't know how to program or code. So they reach out to us asking, oh, cool, you have a solution. Next, for the large JPMs in your formal maybe GSs, et cetera, for those, they do find value in us in the future. More so when we reach a formal climax in terms of not only users, but also insight about the market. From there, we can then use our sort of federated learning models that we've been developing sort of in-house to be able to provide more insights going forward in the market.
All right, one more round of applause for StratiX.
Get it.
What's up? Thank you. Okay, we have one more startup. That is our wildcard startup, which means it was selected from the Startup Alley. Now, we've had winners from the Startup Alley, so that doesn't mean it's not as good. It does mean that they found out, I think, yesterday. They've had to put this together fairly quickly, so let's welcome them. The startup is Grey Parrot. Presenting for Grey Parrot are Michaela Drachman, Nicolas Sivach-Key, and Marco Palladini.
The world has a massive waste problem. Every single year, we produce 2 billion tons of solid waste, and 60% of that goes to open dumps and landfill, having an increasing ecological impact. In parallel, there's increasing regulation for recycling and waste export. Can you go back? This means that there's an urgent need in the coming years to sort our waste locally and much more efficiently. So this is why at Grey Parrot, we're building computer vision systems for the waste management industry. We're using deep learning to recognize different types of materials and objects and to integrate that with robotics and smart systems to increase the efficiency. Go to the next one. Apologies, the clicker is not working. So speaking to dozens of experts in the industry, we understood that there's inefficiencies all along the life cycle of waste, from separation all the way to the treatment, starting with the lack of education, the lack of data and transparency, the high cost of manual sorting, and finally, the value decreasing every time there's contamination. AI-based computer vision has the potential to solve problems at each part of the value chain, and this is what we're focusing on. So starting with smart bins and reverse vending machines where technology can identify the waste and decide if it's contaminated or not and make better decisions, to waste monitoring and analysis in trucks and bins to be able to give more insights to the waste management industry and the waste producers so they can have analytics and also know how to educate people better on how to sort their waste, and all the way to the industrial use case in actual sorting facilities, where currently 60% of it is done by mechanical sorting and the rest is done manually. And that's a very, very high cost of labor. It's very dangerous environments. And the reason why that's happening is because part of that chain, technology is not able to solve that. But with deep learning and AI computer vision systems, we are able to recognize those impurities and integrate that with robotics to automate that as well. And finally, through quality control, we're able to give insights on the level of quality of the waste so that the waste manager can extract the maximum value. Because as soon as there's not almost 100% purity levels on that waste, then it's not worth recycling and it will go to open dumps and landfills as well. So we're going to switch to the demo now. So this is our first prototype that we built, being able to recognize 10 different types of recyclables. So this is PET. This is a type of plastic that I'm sure you all use every day and expect to be recycled. This is HDPE. It's a different type of plastic and usually used for milk bottles that are kind of white, for example. And so this is all data that we captured ourselves to build our first model. So moving on, we also integrated this demo to robotics. If we can go on to the next one. Yeah. So as you can see, we're able to recognize the different materials, and they go into the different buckets. So this is black plastic, which optical sorters can't recognize today, so we're able to recognize that as well. And if we go forward, you'll be able to see our next industrial use case. So this is the first project that we're doing actually for a customer. So this is a recycling plant in Korea, where, as you can see, this is a plant where there's manual sorting. So at the end of the chain, they're removing impurities from the plastic to make sure that it can be recycled. So you have about 3 people working just on that line. And the reason why is because the systems currently can't recognize that. So in the model that we built, if we go to the next slide, as you can see here, we have the different PET bottles. So this is the main material, and then our systems can recognize, we can put the video on, our systems can recognize the different impurities there. So it's very subtle differences because those are plastics as well. And that is used, one, for monitoring, but also to be integrated with robotics to be able to do the picking. So the market is really very big. We're talking about a $530 billion market by 2025, the overall waste management industry. Of that, 40 billion of it is the waste sorting market, and robotics-based sorting is 6 billion. So our current customers are producers, smart bin manufacturers, and waste managers. And we already have 2 partnerships for waste managers, 1 pilot going on with bin manufacturers, and 2 RFP with producers, 1 airline and 1 big FMCG company, just in 6 months of starting. And if we go to the next slide. So our team is composed of a mix of technical and commercial skill sets. We all worked together previously, building cutting-edge computer vision solutions, and we believe that we want to put our expertise to work to be able to solve this massive problem in the waste industry. Thank you.
Okay, judges.
So, huge problem. Commend you on going after it. Sounds like computer vision and robotics. Can you help me understand what's proprietary about what you've built?
Yes. So what we're building is really the AI models that are behind using deep learning. So we have our own data that we're collecting through the large partnerships that we have with recyclers in South Korea and the UK. We also have our custom hardware to be able to film and basically capture that data in a very efficient way. And we also have our own deep learning framework to be able to get to very high results with a low amount of data.
So a question I have is about the product and the approach. You've got 3 buckets: producers, the bin manufacturers, and the waste sorters.
Yes.
Can you help us understand why you're going after all 3 at the outset, or whether you're focused on one and you think one is really going to drive the value of the business and the impact?
Yeah. So they're almost not at the same level. So the waste managers and the waste facilities are the ones that have the problem immediately. It's very, very clear, and implementing those technologies will have a significant impact on their bottom line and on their revenue quite quickly. So that's actually our first focus, and that's where we're doing our first partnerships. The rest are more pilots with the industry basically moving towards different types of waste management systems. So currently everything is very centralized, but we're seeing, for example, smart bins coming through where, instead of waiting to do the sorting at the end, it will happen before. So we want to make sure that with the smart bins and also with the producers, we are early in the game to be able to help them with that problem.
Just a follow-up question
sure.
there. You guys are a small team, small and mighty, but is that distracting going after all three?
Possibly. So this is what we're exploring right now. We are getting a lot of traction in different areas. So for us in the next few months, we'll also be kind of refining that a little bit more. But what's important is we're seeing in our models, there's like high transferability between the use cases. And also we want to keep our positioning as a software solution. What we've seen is that people have tried to go into the industry, went very deep into one, integration with hardware, and then that becomes a very different type of company. So we want to make sure that even though that is not our primary use case, that we're still starting to understand how we could go towards there in the future as well.
Great. When you are pitching Great Parrot to a potential buyer, what is it, when you think about from a value proposition point of view, that is the reason they get excited? So is it that you are saving them time? Is it money? Is it efficiency? What is really driving the demand for the product?
So it depends on the customer. So for the waste managers, is a very direct efficiency play. Because if they're able to implement those computer vision systems for monitoring or integrated with robotics, that will immediately cut their costs, but that will also help them increase the output and value they can get from their waste, so they can get more revenue from it. So that's a very clear kind of offering. For the producers, like for example, an airline that wants to have more analytics, or for smart bins companies, that's more of an indirect play, where it's more around analytics to be able to have that knowledge and make better decisions on where they send the waste. So for example, there's currently like sensors to know the fill level, so that has a huge impact on how the trucks are going around. So if we could tell them if something is contaminated or not, that could also guide that. So it's a more indirect cost saving, but it's similar.
I mean, it sounds to me that for these two types of customers, for the airlines and figuring out where do I send my stuff, the software solution standalone seems to be sustainable. But for the waste managers, actually being able to have the hardware and really sort things is important. So how feasible is it for you to be a software-only solution if you're going after the waste management space?
Yeah, that's a great question. So we started our journey with that hypothesis, and to make sure we're still questioning that. But from what we're seeing, and the first partnership that we have, they are very happy to actually have the robotics, because those robots are actually off-the-shelf robotics. It's not big innovation. And that also gives the flexibility for different types of facilities. So currently, in the two partnerships that we have, it is definitely working. It is possible that for some clients that will not be sufficient, but we are also partnering with companies that do have the mechanical ability as well. So that's really important in the process too. And I don't know if Marco, you want to add anything on the
Our first
robotics
customer
part?
will actually get a robot. We have an advantage that we have the experience in-house, so we know very well how we're going to integrate with robots, and we know it's going to work.
Yeah. So we actually do the research to tell them what needs to happen, but we don't do the manufacturing, essentially. So it's kind of halfway.
Gotcha.
All right, give it up for Great Parrot.
Thank you.
And that concludes the Startup Battlefield. Tomorrow, we are going to have the finals. Before we can have the finals, the judges have to go backstage with me. They're going to follow me backstage. They're going to help us choose the finalists. Before we do that, let's have one more round of applause for our judges.
Thanks.
why did you come to this workshop? To learn. But quickly I realized I started unlearning some things which I've been doing very incorrectly in the past and which didn't really give me the results that they're supposed to give.
I want to be where we ask questions like why? And the big question I ask is what if? You know, it's a different way of thinking at Stanford than it is at any other university in the world.
I realized I was getting stale, so I said, you know what, it's time for me to move on and look for greater things and have more impact.
At Lockheed Martin, we're on a mission. Your mission. When millions of people are counting on you, you can count on us. To build the impossible, to invent the inconceivable, and solve every problem with speed and reliability. Every mission is an expedition of the greatest importance, both to you and to us.
What technology do you think will help us best deal with natural disasters? Go to the IBM booth, number BF1, to pick your favorite from the Call for Coders finalists. Over 5,000 people have already voted.
Ladies and gentlemen, please welcome back TechCrunch Managing Editor and Disrupt MC, Jordan Crook.
Hello. Can you guys imagine if I had another surprise guest from Game of Thrones and you had all walked out? Like, what if that's happening right now? You're a little nervous, right? Yeah, doors open tomorrow at 7:30, and we'll see you in your seats at 9. Can't wait to see you. I'm just fucking around. Bye. Good night. See you tomorrow.